Currently, we are carrying out exploration in Kerala Konkan Basin, in KG Basin, and in Andaman Nicobar. All are shallow water explorations. There are 3 drilling rigs which is currently drilling.
All right, then that's all that we could pack for you on this edition of Markets Today. Thank you so much for tuning in. India market opened up next on the other side of that very short break.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Everyone sees a house. I see decisions. Why this location? Why this timing? Why this buyer? Some properties make headlines, others quietly change lives forever. I break down every detail: purpose, profitability, potential. I travel where ambition lives, meeting the people who turned a purchase into their greatest decision. Same house, different outcomes. Why it worked for them?
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Good morning and welcome to India Market Open with me, Neeraj Shah, my colleagues Alex Matthew and Hiral Dadia. And you could argue it's more of the same, just with a bit more flavor on crude, because it's just inched up a wee bit little from what it was trading yesterday. But despite the comments that have come in from Donald Trump, and in a week when Donald Trump is traveling to China to meet Xi Jinping, Asian markets are mixed. They are not capitulating in the wake of adverse commentary and slightly higher crude prices.
Yeah, very well put. In fact, that's exactly what the global cues are pointing to. Let's get straight into that, right? Because that stalemate in the Iran war continues, and Iran is apparently sticking to its demands. Why shouldn't they? The US, meanwhile, is seeming unwilling to make concessions. In fact, Donald Trump has called Iran's proposal garbage. His words, not mine. And he says that the ceasefire with Iran is on life support. Here's exactly what he said.
It's unbelievably weak, I would say. I would call it the weakest right now. After reading that piece of garbage they sent us, I didn't even finish reading it. They said, I'm not going to waste my time reading it. I would say it's one of the weakest right now. It's on life support. They understand these are all medical people. Dr. Oz, life support is not a good thing. Do you agree?
Diagnostic.
I would say the ceasefire is on massive life support, where the doctor walks in and says, sir, your loved one has approximately a 1% chance of living. It's a very simple plan. Iran cannot have a nuclear weapon, and they won't have a nuclear weapon, and they didn't want to go that far. If you can believe it, they didn't. How stupid. Are they stupid people? They didn't want to believe it. They think that, well, I'll get tired of this, or I'll get bored, or I'll have some pressure, but there's no pressure. There's no pressure at all. We're going to have a complete victory.
All right, so meanwhile, Trump is saying that there's a very simple plan with respect to Iran, and he's reiterated that he believes that Iran cannot have a nuclear weapon. He's claimed to have replenished the ammunition during the ceasefire as well. Now let's talk about Wall Street and what occurred. You have a rise, despite the fact that you have the worries about the ceasefire ending and a restart of the war. But at record highs across the board, you had equities that gained despite those fears. And of course, investors are looking forward to the outcome of the Trump-Xi talks later this week. Remember, China, of course, has a lot at stake with regard to the Iran conflict, particularly because of the amount of crude that passes through the Strait of Hormuz, and that goes to China as well. The Dow rising as much as 0.2%, similar gains for the S&P 500, the Nasdaq climbing by as much as 0.1%. 6 sectors on the S&P 500 rose, 5 fell. US Treasury yields rose as much as 6 basis points on the short end, and the 3-year auction for bonds drew a relatively weak response. But what Neeraj was specifically talking about with regard to crude prices, they rose, with the Brent now at 104 or thereabouts, well above the $100 per barrel mark. In Asia, important for you to bear in mind that Japan's consumer spending has fallen by 2.9% versus a forecast of a 1.3% drop. And this is important from the context of the next Bank of Japan meeting in June, where they'll have to weigh this data alongside various other data points to decide whether or not to raise interest rates or to pause for now. Let's take a look at Asia, and it is likely to be a mixed picture, and that's exactly what it is. Shanghai is down as much as 0.2%, the Hang Seng up as much as 0.4%, and the Nikkei more or less treading water at this point. We've got Richard Yetsinga, who's chief economist at the ANZ Group, joining us this morning. Richard, thanks so much for taking the time. More of the same is what my colleague described it as, and I think that's an apt description. Do you think that the damage that we're currently seeing to economic growth is worse than some people are forecasting, or do you think that we can still hold out as a world economy without too much damage in FY27?
Oh, no, we can hold out. And in fact, I don't think there's been too much damage. Certainly there's no data or market performance that says this is anywhere close to cataclysmic. I mean, confidence is down. That's very clear. Consumer surveys almost everywhere, surveys of business sentiment almost everywhere. But then when you look at actually what consumers are doing and what businesses are doing, what you're seeing is modest adjustments with a bit of caution, nothing more. And look, maybe part of the context here is important. There are two shocks going on. One is the Middle East and the oil shock, and the other one is the tech shock. And for some markets, at the moment, the tech shock is kind of winning. Korea maybe is an example of that. And for other markets, and India's probably in a more difficult spot than most, because obviously the oil challenge is real, but also this kind of idea that maybe the tech shock actually is not all that great because of the outsourcing story in India and how much of that industry might be challenged by AI. Now, I think eventually we'll find actually the consequences are not too severe, but certainly for the markets at the moment, I think there is a bit of a double whammy for India.
Okay. Richard, good morning. Hiral on this side. You're talking about how resilient the global economy is right now. However, if you have to look at on the global front how inflation could pan out from here on, how central banks could react, how are you looking at that aspect? Because even when we're talking about India, the supply disruptions, the impact is expected to come in only in the first half of FY27, and that's what the street is watching out for. Your view in terms of how inflation and how the central banks are expected to react from here on?
Well, of course, the inflation impact is almost immediate. Nobody's selling fuel when they see the wholesale prices that we see on our screens go up. Waits days and weeks till the next shipment arrives at the higher price. They typically adjust prices almost instantaneously. So the inflation shock is clear and transparent and pretty immediate. The question is whether there's a big growth shock that in some way offsets that in terms of what central banks end up doing. Now, a number of central banks have said, no, there's a net upside influence on inflation that we need to react to. The Philippines, Singapore, Australia. And in the bias of a number of central banks, clearly the inflation story is front of mind. The Fed, the ECB, the Bank of England. So I think you would say at this point this is an inflation shock more than a growth shock. It may turn into the latter if really the strait doesn't open or we don't find some workarounds or, a few other ifs or maybes. But at the moment, this is an inflation problem for central banks and bond markets.
Yeah. Well, Richard, not every country will do this. It may not even see the light of the day, but apparently some policymakers in South Korea have invoked the piece of citizen dividend wherein profits from AI should be distributed. Maybe 10-15% of those profits should be distributed to citizens of South Korea. Now, whether it sees the light of the day or no is completely separate. But could this be something that pricks the AI bubble? Could stocks like SK Hynix, Samsung, etc. come under a bit of a cloud because of some policies like these? Because these are supernormal profits for them.
Look, obviously I have no comment on the particular proposal in South Korea, but the idea that AI might be so profitable that we need to think about some social redistribution mechanism. Look, of course, I think that's on the table and in the realm of possibility. Lots of countries think about natural resources in that way. If AI is as big as some of the more bullish expectations suggest, then this is not the first time we're going to hear about this sort of proposal. It's not the first time we're going to hear about, is this the thing that ushers in a universal basic income, I think some of these broader questions will come up. And this is not unprecedented. The Industrial Revolution really led us to unionisation and greater collectivisation of labour because we realised that too many of the gains from that revolution were accruing to capital and not enough to the workers. If AI is bigger and better and faster and stronger, then we should expect that this policy discussion has only just started.
Certainly. Okay, Richard, we'll leave it at that. Thank you so much for taking the time out and being with us this morning. Well, guys, interesting though. If you're waiting for one thing that might stop the bandwagon of AI stocks, if you will, just because of the kind of weightage that some of these stocks have with the MSCI EM index, and forget what the big seven are doing. I don't know if this policy really does it, whether it sees the light of the day or no, but it's an interesting proposal nevertheless.
It is, and I didn't mention it in the Eye on the Globe, but essentially there's also word that a couple of companies, global companies in the AI game, right? There's Amazon and one more company, they're raising foreign currency debt. So there's Japanese debt that is being raised. There is also Swiss debt that is being raised because of the lower rate of interest and the fact that they have to raise large amounts of money. This is raising questions, of course, that already existed about the size of the debt that they're taking on board. They're actually being forced to move outside of even dollar debt because of the size of the debt that they're raising. And when that payoff comes from the AI build out that they're currently doing is a question that investors are continuing to ask. So one, yes, distribution of what they're already
But this
reaping.
is going to be the opposite, right?
What
What you're
already
talking about.
Sense, but in some
Double
sense,
whammy.
but in some sense, it's an infra company in India raising dollar debt to fund infra projects. So therefore, the AI companies are doing this. But this citizen dividend, which is not a company decision, but a policymaker's decision, that company itna profit bana rahi hai, chalo thoda population ko de dete hain. That is, it's not too common, I would suspect, right?
It's not,
but
I think, but usually when you've seen something like that happen is not coming out from the company's kitty.
Never.
It goes from the taxation kitty when the government is earning a revenue
But
to
in
that
this
extent.
case, we're talking
in this
about
case is very different, exactly what Neeraj is pointing out, where the citizen dividend will be paid by, it's like saying, the ESG tax or any of the small tax brackets that the companies actually have to pay the government. That's what this will come down to in the end, right? This is going to be interesting. Let's see if any other countries then have to follow suit as well.
There are 4 countries who have the AI play. Let's see if any of the others do
We're
it.
not getting universal basic income anytime soon. I'm just saying that let's get back to work.
A lot of hopes around, right? So that's what we are talking about right now. But it's interesting to see what's happening with the markets. Now, today as well, if you look at implied open, we're seeing a downtick of around 180 points, 190 points on the downside. And yesterday's session as well, we've ended on a sharply negative note. Now, it's mainly rising crude oil price and the lack of any breakthrough when you talk about US-Iran peace talks is what is weighing in terms of sentiment. There is weakness when you talk about the Indian rupee along with the continued selling pressure from the FIs. Yesterday, the number was little over 8,000 odd crores in terms of the FI selling desk. And the Sensex has declined nearly 1.7%. Nifty, a 350 points drop is what we saw. We ended approximately near that 23,800 mark yesterday. If you're talking about that broad-based selling as well, that has been witnessed across most of the sectors because consumption, consumer durables, real estate, PSU banks, oil and gas, all of them actually corrected in that range of 2 to 4%. However, there was that selective buying interest that was observed in defensive pockets, mainly healthcare and pharma. So that's where you've seen little bit juice. Overall, in terms of broader markets, they've continued to remain under pressure. Mid-cap 100 down nearly 1%, while the Nifty small cap slipped nearly 1.2% in trade. So clearly, Neeraj, there has been pressure yesterday. Today as well, last couple of days, probably there was that little hope that was coming in that there is a 48-hour window that we're looking at in terms of the agreements that could be signed. But I think there is no respite in the face of it. And markets are confused, investors are confused. And all this while the confusion was only from a global perspective. Now on the domestic side, when you have Prime Minister Narendra Modi who's come out and given his piece of advice and appeal, that has also created a little bit of panic.
Thankfully the markets didn't show panic yesterday, but yes, certainly downtick and you're absolutely right. I mean, Nifty consolidation with the downward bias, that seems to be, viewers, the most likely setup for trade until things change around crude prices. And therefore, I mean, we said this at the start of the conflict 2 months ago, that crude is the barometer. Watch crude prices, that determines what happens to markets. Crude at 105, the Nifty is 24,000, not a shade above that. The focus therefore will be on specific stocks, and that will likely continue. And I think some bit of this you can sense, right? YTD, the Nifty is negative, but the mid caps and small caps are positive because FIs are continuously selling. Yesterday too, I think as Hiral pointed out, 8,000 crores worth of selling by FIs as well. So therefore, focus will be continuing on specific stocks. You see pharma participating, chemicals participating, now cables and wires starting to participate as well. So that's a cohort of stocks you want to watch out for. Textiles selectively though could be a dark horse, and the reason, guys, I'm saying this is because somebody sent to me, and I was reading the con call takeaways of Vardhaman Textiles, and note what they are saying. They are saying Indian cotton prices are now aligned with global markets, which is and therefore have materially improved the competitiveness of Indian spinners. The yarn demand remains strong and aided by healthy global retail demand, and China demand in particular is robust as the Chinese manufacturers are operating with very full order books, etc. So India's yarn exports increased to about 120 million kg per month versus 100 million kg per month, with China imports rising rapidly as well, and the industry spreads have improved 40 to 50%. Now, can you imagine that? So Vardhaman has said that most textile companies carry 6 to 8 months of cotton inventory at the end of the year, and therefore they and some of the others who have the benefit of low-cost inventory and higher end prices might actually benefit. But the net point is what happens to Vardhaman individually is one thing, but if all textile companies, whether they're yarn exporters or otherwise, having that inventory, which is a natural course of action because of the year end, will now benefit because global prices are aligned and their margins have improved, which means textiles could be a sector to watch out for. Rupee is down, their raw material costs are okay, global demand is good, favorable sweet spot.
Yeah, and no tariffs.
Yeah, no.
The pain, it seems, is over as
well. I was going to say, at least there's a buzz of tariffs, and the statement keeps being made about tariffs, but,
but as
nobody's pulled the trigger
exactly,
yet.
as things stand where we are right now, so I think everything's probably working in their favor. Let's see how it performs from here on. But in terms of key factors, markets are showing a clear risk-off tone, and this is after 3 consecutive weak sessions. In fact, a breakdown below the 20 DMA and the 50 DMA, as well as the rising volatility. If you see the wicks, it's almost at 18.55. That's what you should be tracking as well. The broader message that we are seeing from the charts is 23,800. That is the battlefield, and below that, bears could retain control. However, if you're able to move above the 24,000 mark, short covering can emerge quickly, so that will tell you where we could settle in. In terms of geopolitics, West Asia tensions, the US-Iran uncertainty, that is the key trigger that the street is watching out for, and overpowering the domestic fundamentals of the Indian markets as well. In terms of 23,800, that is the floor of a 12-session trading range. And if 23,800 holds, you could expect a dead cat bounce or even a relief rally that could take markets to levels of 24,000 or 24,100. However, if there is a decisive break below that 23,800 mark, it actually opens the trapdoor for investors, where markets could go to 23,500, with analysts even eyeing as low levels as 23,200 if there is any panic that sets in. If you look at Bank Nifty, technically looking weaker than Nifty, there is support at 54,205, and the resistance comes in at 54,845. So more weakness in terms of Bank Nifty versus Nifty. However, the concern over here is where do we settle in and what levels are broken on a technical front. Let's also head across to my colleague Puneet, who's with us to tell us all about what the derivative market is indicating so far. Puneet, good morning. What are the cues telling you?
Well, very good morning to you as well. We're seeing, as you guys rightly highlighted, some of the key aspects that a sluggishness is clearly visible on the Nifty 50, and hopefully after this 177-point downtake, probably a gap down going to the 23,600 yet again levels. We might see a better buying picture in the second half of today, and that's something that we're hoping for. but it is also the expiry for the Nifty 50 today. So you will see a volatile trading session across the board. For the Nifty Bank, as you also rightly mentioned, it's been very, very sluggish. We've not been able to find a support, and the earnings haven't supported the index also at this point of time. So as we move across from here, there seems to be essentially lack of triggers, as we've been highlighting. Macro factors also aren't supportive of this index at this point of time. And the consistent selling that we've seen from FIs, an 8,400 crore number yet again, is clearly showing the pressure on what we've seen on the banking stocks as well, which are not able to find flavor at this point of time, even within the broader cohort of domestic investors and the focus as well. But the index long also for foreign investors on the derivative side continues to be very, very depressed at just 11.6%. Was around 12.5%, 13% yesterday, but we've seen yet again that big FI sell number come in, and hence positions also being trimmed across the board. And that's visible across levels as well. So what we've seen as 24,000, now seeing more active open interest. You've seen calls being now built in at 24,100 as well as 24,200, which is the red candle bar, which suggests that the current 500-point downtick where we are seeing at 23,600 is creating and helping create these positions. But we want to go across and continue to maintain that 24,400, 500 levels, which is the out of money call option as of now. In terms of stock-specific action, we've seen that, Dalmia Bharat and Tata Consumer continue to be a couple of ones with high open interest. Tata Consumer seeing the second consecutive day of longs being built up after a good set of results. Bharti Airtel, Keynes Tech are also some of them. Keynes Tech build up of shorts just before the results this week. But in terms of the open interest losers also, you've seen Coforge and Kotak Mahindra Bank as short covering candidates. But overall, we saw pressure on the broader markets yesterday. Benchmarks expected to be downtick today as well. So hopefully a better second half is what we are all hoping for at this point of time.
I'm hearing a lot of hope today. Thanks so much, Puneet, for that. Let's see how that pans out. But let's talk about individual stocks as well, because there's so much to unload, right, which is on the earnings front. Sirma SGS right up front for me in my list of stocks, and a sharp rise in top line with the highest growth rate in over a year. Of course, you can argue that the year ago quarter saw a degrowth in revenue, so therefore there was a low base effect, but that top line growth was coupled with a margin expansion of 30 basis points on a year-on-year basis. You had auto, healthcare and industrials that also pretty healthy sequential growth in revenue. The industrials mix actually in the total has risen to 41% versus 31% in the third quarter. So take a look at some of those metrics. Revenue uptick of close to 60%, EBITDA uptick of 62%, margin up by as much as 30 basis points, standing at close to 12%. The PAT growth as a result of all of that stands at 55%. So it's a pretty decent set of numbers. Satin Credit Care. Now, from a year back where you had some of these microfinance players that were under cloud because of collection efficiency, etc., this is actually a far cry from that, and one can argue that they've actually turned the corner because net interest income has grown as much as 21%. You had assets under management that is up as much as 19%, and that's on the back of a 17% increase in disbursements. And what's more, the net interest margin has improved on a sequential basis to 15.2% versus 14.02%, and the asset quality is also improved. So the gross non-performing assets stand at 3.1% versus 3.3%, and the aggressive provisions that they've taken in the past has actually borne fruit because their provision coverage ratio stands at 92%. Now, what's more, their return ratios are looking particularly strong. So their return on assets for the quarter gone by stood at 4.71%. It's an uptick from 2.22% in just the third quarter, and a significant uptick from the year-on-year basis. ROE is also risen to as much as 23.3%. So all told, a very strong set of numbers, 49-50% increase in total income as well, and the PAT coming in at 162 crore rupees, multiples of what it saw in the previous quarter, or rather the quarter year ago. I've got Anant Raj finally, and this is of course one of the players that you would look at specifically from the data center play. Revenues overall have gone up by as much as 20%, but they've stipulated and they're disclosing how much of the total is related to data center infra and allied services. That stood at about 74.5 crore rupees. It's a little over maybe 10% of their revenue at this stage. Margins were more or less in line with the range that they've seen over the last 6 quarters, and the PAT has grown as much as 25%. What is interesting is the build out of data centers and cloud business. It currently has an IT load, as they describe it, of 28 megawatts. And the aim, of course, and this is disclosed and discussed in the past, I'm just reminding you, the company aims for a 357 megawatt IT load capacity by 2032. So out of a total revenue of 647 crore rupees, if 75 crore rupees comes from data centers, and the expectation is that it will go up quite substantially from this stage. So decent set of numbers, guys. I wonder what you thought about it.
I mean, good set of numbers, and I think the data center business is going to now actually start paying off as well for Anantraj. So now is the time where you have to actually look at whether the valuations and everything stacks up well. So it's going to be interesting to see that one. On my list, I have Indian Hotels, a thumbs up. You know, this is the 16th consecutive quarter of a record performance from Indian Hotels. If you have to talk about FY26, they've actually crossed a milestone of 9,971 crores in terms of revenue, with an all-time high profitability of 2,084 odd crores. If you see in terms of where the performance in Dubai goes, that was slightly tempered by the West Asia conflict, which actually impacted international business. In terms of occupancy, your Dubai hotels dropped significantly to 25% during the quarter. In fact, Jeffries has maintained a buy. They have a target price of 800, but they're saying that the domestic demand momentum remains strong, and that the company is entering the first quarter of FY27 with a strong demand and significantly stronger than earlier expectations. In fact, the management has guided for double-digit revenue growth continuing in FY27. With 12% growth in the first quarter itself. Morgan Stanley has maintained an equal weight, and they have a target price of 700. What they're saying is that the FY27 guidance is reiterated, and the company is executing well in a challenging environment. Macquarie has maintained an outperform with a target price of 770. They're saying that the fourth quarter was strong, and the domestic traffic has been pretty much favorable. The second one on my list is the JSW Energy. Now, clearly, the quarter has been driven by record high power generation and the integration of major acquisitions that the company has done. In fact, there has been full integration of the KSK Mahanadi plant, which contributed nearly 943 odd crores to EBITDA. And if you talk about O2 Power, which added nearly 263 odd crores. They have seen growth in the renewable segment as well. And they've said that they're on track with their strategy with regards to 3.0 roadmap, aiming for a total locked-in capacity of nearly 25 gigawatts across diverse fuel sources. 41% revenue growth, EBITDA up 86%, margins a strong improvement. That number is coming at 50% versus a 37.8%. So a good number coming in there. And very lastly, JB Chemicals. It's a thumbs down because the strategic operational realignments that the company had to do, as well as the optimization when it comes to the distribution network and discontinuation in terms of low margin products is what has impacted the business this time around. The revenue from their international formulation business has also fallen by nearly 9%. However, your CDMO business has seen a 22% decline, and that's mainly on the back of a higher base from the previous year. Revenues down around 5%. EBITDA down 11%, margins down 160 basis points at 22.2% versus a 23.8%, and your net profit, which has seen a degrowth of around 30% at 101 odd crores. In fact, just to be noted that the company has recorded a one-time loss of 27 odd crores in the fourth quarter, and that is also one of the reasons why you've seen a dip in terms of profitability. But overall, there has been weakness on the JB Chemicals in terms of the fourth quarter, Neeraj.
Okay. Well, Bharat Forge has one piece of good news, one more piece of good news, I might add. It's had multiple good news of late. It's signed a long-term contract with Embraer. This is a contract for manufacturing of landing gear forgings. Remember, the Adani Group and Embraer also have a JV for making airplanes in India, but that's a long-term project. But even immediately, for whatever market share Embraer may have, Bharat Forge has signed that long-term contract, so this is positive. Remember, we've been speaking about this aviation ecosystem that is getting built in India. One more sign of that. Multiple companies are doing this with multiple aviation companies. commercial as well as defense. It's actually very good news. HG Infra has gotten a large one, 3,931 crore LOA from Welspun Enterprises for a road project in Maharashtra. I must say, some of these order wins are very, very large. Yesterday, Afcons, if I'm not wrong, Hiral, had this large order win, right? Some 7,000 crores or whatever.
Crores.
This is also large, yeah? 3,900 crores is pretty large.
Quite a few over the last couple of months.
Exactly. Yeah. In fact, we invite the management to come and talk to us about the recent spate of order flows for them. And one more company which thinks that maybe that share prices are not quite reflecting the current fundamentals. Team Lease, they're going to mull a buyback of shares on May 20th. Let's see if there's a bit of a reaction on this. So these are the 9 from our end, but I'm sure there are more. And we will bring you a list of some of the other stocks as well. But for now, we need to slip into a quick commercial break. On the other side of the break, top trading strategies for the day.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
All right, welcome back. You're watching India Market Open. We've taken you through the 9 stocks that we think you should keep on your radar, but there's of course more than that. And the expectation, pull up the implied open, we're looking at cuts of close to 150 points. Of course, it's come off from the initial indications of about 190 points, but don't be surprised by a sharp slide in trade today, at least for the benchmark Nifty 50. Let's focus in on the Indian oil marketing companies, and they're staring at losses of nearly 1 to 1.2 lakh crore rupees in the first quarter of FY27 amid the ongoing West Asia conflict, with under recoveries estimated at nearly 2 lakh rupees. That's according to government sources, and they're also saying that nearly half those losses are coming from LPG. Let's go across to Sesha for that full report. Sesha?
State-run oil marketing companies are staring at losses of about 1 lakh crore this quarter, and this figure may go up further if the West Asia conflict drives up crude prices even higher. Now, this is according to government estimates. Now, the projected Q1 hit is large enough to wipe out the entire profits earned by OMCs in FY26, with nearly half the losses expected to come from LPG alone. Under recoveries on petrol, diesel and domestic LPG are estimated to surge to nearly 2 lakh crore in the June quarter if the current crude prices sustain, putting unprecedented pressure on the balance sheets of companies such as Indian Oil, Bharat Petroleum as well as Hindustan Petroleum. Now, coming to prices, the officials from the Petroleum Ministry also indicated that support to OMCs would be extended extended if and when required in order to prevent stress on the companies from spilling over into the broader economy. On retail prices, however, while the centre has so far maintained that there are no immediate plans to rationalize retail fuel prices in order to shield domestic consumers, the government's messaging on fuel has subtly evolved over the past 2 weeks as the West Asia crisis intensified. Now, sources indicate that Prime Minister's recent appeal to citizens to reduce energy consumption could be a precursor to a long-delayed fuel price hike.
Thank you, Sesha, so much for that. This is interesting. 1 to 1.2 lakh crores is the kind of losses that, OMCs are actually staring at. In fact, BPCL says that India urgently needs more LPG storage to support the rising demand and energy security. Let's listen into what the CMD had to say about the plans to expand capacity within the next 6 months.
It's definitely that the country needs more LPG storage, and various options are being explored. And maybe next 3 to 6 months' time, we will be able to share with you what our plan to enhance the LPG storage capacity.
Okay, all right. So that's the word on under recoveries, the potential losses for OMCs, and the requests from the OMCs as well. But we're joined in studio, as we normally are, by Parag Thakkar, head fund manager at Fort Capital, as well as Kush Bora, founder of kushbora.com. So we were talking about this, gentlemen, and yesterday, of course, you saw slide on account of the worries about the conflict in West Asia, and primarily about what Prime Minister Narendra Modi said yesterday. But more than anything else, I thought that the panic was visible in the currency market, where you saw, and I read reports of significant dollar buying in anticipation that there would be a slide further, right? So that actually caused that capitulation in the rupee. Having said that, do you think that there are opportunities to be had? Let me go to you first, Parag Bhai, before we take an index view. Based on the individual reactions yesterday, for example, Bharti was down 4%.
Yeah, so Bharti is a thumping the table buy for me.
Okay.
Yeah, because I have calculated that if suppose they take 16% stake in, and that is what they have announced, right?
Yeah,
that is why the stock fell 5% yesterday.
The reorganization.
Reorganization. So if suppose, and this is what Mr. Sunil Mittal had told every investor on 26 Feb only, that this is likely to happen, that promoter stake in Airtel Africa will be transferred to Airtel.
Right.
It makes sense, right? Because Airtel owns the business. So, and Airtel already owns 61.5% stake in Airtel Africa. So 16.5% gets added. Now the theory is that the dividend will get delayed, or dividend which was expected to be higher now because of the higher free cash flows at Bharti Airtel, that will get delayed. But I think the new EBITDA is also coming in. The Airtel Africa is making EBITDA of 28,000 crore and PAT of 8,000 crores. So 16% of that will also get added to Bharti's consolidated EBITDA. So I don't think so that the stock reaction of 5% fall after falling from 2175 was warranted.
Sorry, net, if you put the numbers down, Parag Bhai, and I'm sure that you have, right?
Yes.
We're talking about upwards of 20,000 crore rupees to be spent if that stake is transferred,
right? 28,000 crore.
28,000 crore.
For 16% stake.
Correct. And you're saying that EBITDA will be added from
that's
Airtel
16% of the current EBITDA.
What is the quantum, if you can put it?
So basically, right now, 28,000 crore is a EBITDA. 3.1 billion USD is a EBITDA which Airtel Africa makes.
Okay.
So 16% of that will come to Airtel consolidated number.
Sure.
So 28,000, so around 3,700 crores.
Okay.
EBITDA will also get, and after minor interest, if you see the PAT number, I think around 1,300 crore gets added in the PAT number also to Bharti Airtel. While, suppose if you fund the entire 28,000 crore acquisition through 7% loan, then your PAT reduces by 500 crore on a base of 40,000 crore. So only 1.2% impact is there.
Okay.
The rest of the impact is sentimental, that okay, my dividend is getting delayed.
Okay, one question I have for you on this one is, Parag Bhai, I understand where you're coming from in terms of Bharti Airtel, where it is a stock or it's a sector which will be the most resilient when it comes to anything that's happening around the world. Now, do you think that there could be an impact, a sentimental impact with what Vodafone probably is in news as well yesterday, where they've said that Vodafone PLC is mulling a move to transfer part of the India unit stake. Now, I don't know if you heard Somit's analysis on that one yesterday, where he had given us two possibilities where one, they could either, the 19% stake would be valued at what, 23,000 odd crores. Yes. So either they can invest that in terms of capex, or the other way around where they can pledge that in terms of funding the capex.
So I'm not sure Vodafone BLC has agreed to this officially.
No, it's not confirmed. It's not confirmed. So this is a Bloomberg story that we are talking about.
One is that.
But do you think something like this, where you're seeing some fuel, some power that could potentially come for a Vodafone from a growth perspective?
Yesterday in the morning show, I said that there is all the stakeholders are completely interested in keeping Vodafone alive and live and kicking. Right, but it does not change the thing that Vodafone will require 100%. They will require tariff hike. It does not change that maths. Right? Any investor who comes in would want, at least the equity investor would want returns, and returns will come only if the tariff is hiked. So at some point, I think tariff hike is delayed right now because of all these inflationary pressures all around. So I think it will come in December. But there is a certainty. And at 259 rupees ARPU, this company earns 60,000 crore free cash flow. Don't forget that market cap is 10,70,000 crore now after 5% fall yesterday. So free cash flow yield has even increased. See, I will take it like this. Sometimes market reacts, sometimes market may be right, and I may be wrong also. But my intrinsic value for Bharti is say about 2,250, 2,300 based on my free cash flow yield calculation. If stock is falling much more below than that, it even becomes more attractive.
Margin of safety.
Plus, I trust the management that they will not do anything which will dilute minority shareholders. That is what Mr. Sunil Mittal has committed on 26th Feb.
That anyways, the proof of that pudding has been around for a while now. And as a wealth creator, Bharti has been tremendous.
And they have survived the most intense competition.
Most certainly.
So, but I think the next will be, as Parag Bhai is saying, tariffs are needed. I mean, you need a hike. Who will bell the cat is going to be the question.
I think that argument.
By December, I think.
No, but I think that argument, let it happen, frankly, because we've been talking about this now for 4 or 5 years. He's been making this point that ARPUs need to reach 300 for ages now.
No, I think now they are at 259, to be fair to him. So we are just 15% away from his 300. It has just taken slightly longer time than what he.
Well, Parag Bhai wants the tariff hikes to happen. We don't. I don't want to claim more for sure. Push Bora. Let's move on to try and talk. Maybe we on Bharti Airtel very quickly, but we've spoken about that enough. Also want to know about whether the market setup is negative today.
Yeah, downward sloping trendline resistance.
On the Nifty or on
Airtel? On Airtel, 1757.45 recent lows being tested. Yesterday's fall on the back of heavy volumes, a bit of a concern. So if 1750 is held, then consolidation could well come in. But Nifty, Bank Nifty, slightly different scenario. Now there is a very real toss-up between whether this is a storm in a teacup or a tsunami, in the living room. 23,700. That's the number that we've been talking about as the support zone, right? Yesterday it tested 23, or in fact even it closed at 23,800. Today's gap down opening could well be around that level, below that level also. I'd be interested to see if the closing is below 23,700. If that happens, then the gap, near the 23,200, 23,500 zone, that comes into the picture. Technically, things are a little negative. Nifty is below the 50 DMA. It slipped below 50 DMA yesterday. RSI below 50. But on the shorter time frames, Nifty is already very close to oversold territories. Plus, today's the weekly expiry. So, a few things combined, there is a possibility of a short covering rally kicking in. Like I said, 23,700. That's the line in sand that I'm looking for. If that's broken, this rally could, worsen. Nifty could head towards 23,500 and below.
Okay. Individual stocks that you're liking?
Yeah, I have to go with a mix of long and short. That's been paying off the short ideas, by the way. So, 2 long ideas, 1 short idea. Alembic Pharma, Genus Power are on the long side. Blue Star is on the short side. Again, here too, you've not seen a breakaway rally in Alembic and Genus, by the way. Genus you did, but for the last 4 or 5 sessions, it's consolidating. So is Alembic, but that is relative strength. So Alembic for targets of 810, 830 and a stop loss at the 770 mark. Genus Power for targets of 335, 343 and a stop loss at 320. By the way, this is a stock that we discussed about a couple of weeks ago for a second target of 333. That's been hit, now consolidating, hence the strength's very much there. On the short side, it's Blue Star, not really doing too well. The selling pressure continues. For May futures, your targets on the downside are 1650 and 1630. Place your stop losses at 1690.
Okay. Well, so that's on some of the ideas. Now, individual pockets, and Kush, this morning I was talking about some of the con call commentary that is coming from textile names, and Vardhman Textiles in particular is positive, sounded out very, very positive. Now, of course, there are yarn manufacturers and then there are finished goods, so there might be a bit of a difference there. But just broadly, this whole textile pack, Vardhman, Wellspin, what have you? I mean, Gokaldas Exports, Pearl Global, how are they looking on the charts?
So, there was a spark, I'll not deny, there was a spark in a lot of these names. Somewhere it's fizzled out, somewhere it's holding on. Vardhman, by the way, very strong texture even now. Forget yesterday's move, the 3 sessions prior to that, it took a knock, but that was on the back of short covering, very thin volumes. So Vardhman Textiles right now remains very constructive, supports near the 565, 570 zones. I think if you do get it at yesterday's closing price today, or maybe even slightly gap down, it's a good idea to buy around that 565, 570, your stop loss. Wellspun Living is another stock, holding ground, gaining ground. I think this is something that you can consider positionally though. Keep your stop losses at 128.
But why are you constructive textiles?
Yeah, so basically Vardhman is of course one of the best names in the industry, top class corporate governance, top class backward integration, and as you were highlighting on the call, they have said that yarn spreads have improved significantly. I think it is good, and now it is just a time that fabric and all will also catch up. So I think, but the stock is near 52-week high. That is my only worry. That whatever they are saying is not right now reflected in the results, but it is reflected in the stock price.
Okay, so that's with regards to textile companies. I mean, this is going to be an interesting space, but a slew of other companies will be in focus as well on the back of earnings. Mahima is standing with us to tell us more in terms of what she's been tracking. Mahima, which are the other stocks that the street should be watching out for in terms of reaction today?
Right, so Hiral, I'll start with Heritage Foods first. Overall, if you take a look at the numbers, I think largely the EBITDA and the bottom line was impacted because of procurement issues, because of tight milk supply and elevated inflation as well. Low milk availability across key regions drove average milk cost, rise in average milk cost, and the presentation mentions that this is one of the sharpest raw milk inflation cycles that they've witnessed in the past so many years. Now, in terms of overall operational metrics, steady milk sales growth was, however, seen on the back of improved realization. So basically what they've done is gone ahead and hiked the prices. Consumer business continues double-digit growth momentum. Strong volume growth in value-added products continues to be the growth driver for the company, and e-commerce and quick commerce also grew by around 56%. With regards to where numbers go, revenue saw an uptick of around 10%. EBITDA, however, saw a downtick of 34%. Net profit was also down by about 36%, and margins also came down by 300 basis points. The next one is Paddy Phosphates, where production volume saw growth of around 8% on year-on-year basis in FY26. Sales volume saw growth of around 10%. Growth was largely led by nitrogen, phosphorus and potassium grades, and overall that grew by around 22%. With regards to where numbers go, revenue saw an uptick of around 12%. EBITDA up 15%, and margins saw some improvement of around 26 basis points, and net profit, however, did see a downtick of around 10%. The last one on the list is GR Infra, where EBITDA was impacted due to increase in construction expenses. This went up by almost 44% year-on-year basis, and that's the overall reason as to why the EBITDA and bottom line here was impacted. Order book as of 31st March stood at 26,472 odd crores. Overall revenue saw an uptick of almost 10%, but EBITDA did see a downtick of 32%. Margins came down by around 900 basis points, and net profit was down around 48%. So this is the overall view of how things fared for all of these companies in terms of a Q4 stance.
All right, Mahima, thanks so much for that. So quite a few stocks there, Paradip Phosphates, Heritage Foods, GR Infra projects. We'll talk about the reactions in just a bit. But I'm wondering what my colleague Soumit Sarkar is picking up in his conversations with people from the dealing groups, and whether there's any word on opportunities that might emerge as the market reacts to everything that is taking place, from the Prime Minister's message to everything that's happening overseas. Soumit, morning, what are you picking up?
Good morning, Alex. Few stocks that dealers have highlighted in trade. Firstly, it's Amic Forging. Now, there are buy flows on the PMS desk. a large prominent name is expected to come out on the fund infusion, which might have happened yesterday post-market, so one should keep an eye out for this counter. For Keynes Tech, there are buy flows on the large HNI desk. Dealers expect strong Q4 earnings from this name. And for Cipla and Dr. Reddy, there are sell flows on institutional desk based and dealers are expecting a weak Q4 numbers that could come in from both the pharma names. And lastly, a couple of power capital goods company, that is BHEL and Hitachi Energy. There were buy flows on institutional desk at lower levels on both these counters, and delivery volumes are also seen on the higher side for BHEL and Hitachi Energy.
Okay, so buy flows on BHEL and Hitachi Energy is very interesting, particularly because some of these stocks in that basket have gotten sold into pretty heavily. The question to Parag Bhai is whether or not valuations are still challenging. Despite yesterday you had thumping the table sell on ABB and it ended 10% lower. I think a lot of people listened to you, Parag Bhai.
No, so as Kush highlighted, it kept down only by around 5%, so I don't deserve that trade. But I would say that, see, the valuations are completely out of whack. So in my view, what can happen is, in case of BHEL, for example, the old legacy orders are getting over and the new orders which are coming, and now coal is taking a center stage because of this energy shortage and all, and we have coal. So BHEL will keep surprising you on the result sides, in my view.
Okay.
Of course, at this valuation I cannot buy, but the point is, my gut feel tells me that the results will keep surprising people, because the old legacy orders are getting over and new orders are coming at a new price, new margins. And that was what reflected in this quarter results also. 19% power segment margin came, right? I don't expect 19 to sustain, but at least 14-15 can sustain.
At what levels would you be comfortable buying a BHEL?
Around 15% lower from this price, which is too far. That's why I'm not saying.
Okay, so that's with regards to BHEL. But the other segment which is extremely important to talk about are the OMCs, where they could be headed for a massive earning shock. Now, as the government flags potential losses of over 1 lakh crore rupees in the first quarter of FY27, what's the reason and how will it actually impact the companies? Somit is with us to give us more. Somit, as per your calculations, what is that scenario actually looking like right now? And two, what's the quantum of price hike that the companies will have to take basis the kind of losses that they could be staring at?
Well, that's what we are picking up from our government sources. In fact, Sessa highlighted this yesterday as well. She's clearly saying that OMCs are staring at a loss of nearly 1 to 1.2 lakh crore in the first quarter of FY27 owing to the West Asia conflict. And this loss will wipe out the entire FY26 profit, and half of this losses have been contributed by the LPG segment. Now, what this means for the oil marketing companies. Now, the estimated loss amount is higher compared to what the street has been anticipating. Analysts were expecting the loss to be anywhere around 27,000 crore rupees per month, which is around 81,000 crore rupees per quarter. But what the government sources are indicating is the loss could be anywhere between 1 to 1.2 lakh crore rupees. So that is the first point, that the loss number is expected to be on the higher side. Now, how long could they sustain? Now, if you look at the combined net worth of the oil marketing companies, that stood at, as of first half of FY26, it was close to 3.5 lakh crore rupees. So theoretically, 2 more quarters, even without a price hike, these companies would be well to go, and this is completely theoretically. Obviously, this is not something that will happen, is what I'm saying. But theoretically, given the fact that the net worth is around 3.5 lakh crore, even with such losses, they could continue for at least 2 more quarters. The net worth won't be negative. Now, what they need, they clearly need a price hike in all the 3 categories: LPG, petrol and diesel. Now, the price hike required the most is in LPG. For LPG, as per analyst, the price hike required is around 956 rupees per cylinder. This is the 14.2 kg residential cylinder I'm talking about, and not the commercial one. A 956 rupees per cylinder price hike is required. That is around 105% of the current price. For petrol, they need a price hike of around 28 rupees per litre. This is assuming that their other margins and everything remain the same. Then 28 rupees per litre is the price hike required, which is close to 29.5% price hike based on the current market price. And for diesel, they require a price hike of around 32 rupees per litre, which will be around 36.5% based on the current market price. So steep price hike is something that is required in all the 3 segments. I'm not saying that this is something going to happen, but this is what is required for the oil marketing companies to again come back to profitability.
Yeah, and if it was completely passed on, I wonder, Somit, if there is going to be some share at the government proposal. Of course, we've heard nothing on that front. We'll have to wait for that announcement. But there's also a change in the crude royalty rate. Samit, can you explain why this is significant?
Well, yes, this is very positive coming in for any of the oil explorers and gas exploring companies. For ONGC, Oil India, and Vedanta's demerged entity, that is Vedanta Oil and Gas, which is yet to be listed. Now, here the government has reduced the royalty rates. Now, so royalty is something that these oil exploring companies pay to the government on every barrel of crude or every MMBTU of gas that they explore. And this has been reduced to around 20%, from 20% to 12.5%. And for new well gas rate, it has come down. For new well gas, the rates have come down to around 9% from 10%. Now, Oil India, as per analysts, is expected to be the biggest beneficiary of that, followed by ONGC and Vedanta Oil and Gas. It's a very simple math, something that you had to pay to the government. Now you have to pay less, which means that your realizations or your revenue increase going forward. So hence it is positive for any of the oil and gas exploring companies.
Right, so two aspects to check with. Prabal Sen, Vice President Equity Research at ICICI Securities, joining us this morning. Prabal, I'm hopeful that you heard some part of Samit's analysis, and I want you to weigh in on that. To say that what OMCs are doing at this juncture is absorbing the hit to a certain extent. Is it 2 quarters that they'll be able to absorb this, and what are the implications if there is a pass on? Is that net positive?
What would be a net positive? I couldn't quite.
If they're managing to increase prices at the pump, at least to a certain extent, if there's some sharing by customers, and if you're looking at the valuations, what do they price in right now? Do they price in the fact that OMCs have been unable to pass on anything? And to what extent is that going to hold true?
Right. I think what they're pricing in at this point of time is definitely optimism around the ceasefire helping moderate prices, and of course to a certain extent losses to get moderated in the system, maybe from the second half. Whether that happens through a price increase or through a resolution of the conflict, which means that the prices themselves would probably, sort of reduce across the board, both for crude and product. That is something that remains to be seen. But definitely the stocks do not price in losses of 1 lakh crore per quarter being sustained over a 2 to 3 quarter period. If that answers your question, that's number one. Secondly, can obviously any of this passing on help the companies? Absolutely, yes. It really will depend on what kind of price increase they finally decide to do, as and when they decide to do it. I think with the numbers that Samit shared, our numbers may be slightly different, but the range is fairly similar. Something in the range of 20 to 25 rupees is still the loss in the system, and that is the kind of pricing increase that needs to be actually passed on for petrol and diesel. And I would submit probably some price increase needs to happen for ATF as well, where there has also been some intervention in terms of how much is being allowed to be charged from the final customer or the airlines. So I think you have multiple levers which are hurting at this point of time, and any price increase that can be passed on helps basically sustain or helps cut the losses to a certain extent. So, but
yeah, actually, that was the question. I'm glad you answered it, Prabal. The fact that the market is not pricing in losses to the extent of over 1 lakh crore rupees. The follow-up to that would be what would they be comfortable with? What would be a huge disappointment at this stage? One, and two, the point that was being made about the crude royalty rates, was that something that was the need of the hour, and will that be seen positively?
See, I think it will be seen positively. We'll have to, it is slightly longer term in terms of, there has been specific royalty changes for fast-tracked, assets as well under the HELP regime. So one will have to see if some companies can actually take advantage of that and bring prospective and new assets into production at a faster pace. Because there is, particularly for, if I understand correctly, for deep water fields under that fast-track regime, the royalty has been reduced substantially, particularly for the first few years of production. So it definitely incentivizes more aggressive exploration capex. One would believe that, it can, given the kind of clarity that is now coming through in most terms related to oil and gas exploration, it can help attract more JVs with global majors as well. I think that has been pretty much the intent of the oil ministry, and they have been doing several measures, including the completely new Oil Field Regulation Act, as well as these changes to royalty rates. So it definitely is a medium to long-term positive. But whether that changes anything on the ground in the next 12 months is something that we'll have to see. We'll have to get a little bit more clarity from the companies in terms of whether any existing assets can actually get a benefit of these royalty rates. But the measures taken together are definitely a positive.
Got it. Prabal, as always, thanks so much for the clarity of thought and for taking the time to speak to us this morning. Okay, I want to shift gears. I want to talk about a company that has been hitting upper circuits on the daily. And this is Sterlite Technologies. I think yesterday in trade as well. Can you pull up the chart? It was at 5% upper circuit yesterday. So, no, that's the 1 month rate. It's up 70% in a month. But then what was yesterday's move? The question is, are you not
ask Kush.
Ask Kush. Kush, is there any point asking? Because you can't buy at this stage, right? It's hitting upper circuits every day.
Yeah, I don't know. Ask Paraguay.
I'm
just kidding. On a very sincere note, this is a massive run-up in a very short span of time. Can you buy? Of course you can't, because it's been hitting those upper circuits. In all likelihood, it might hit that today as well. But the volumes are thinning. Massively overheated on daily and weekly setup. If you have a position, I think it's a good idea to book partially, hold the rest, not just because of the magnitude and the speed with which it's gone up, also because it's coming close to multi-month, multi-year high levels of about these 400 odd levels. Used to be around these levels in late of 2018. So there will be some supply pressure that will come in. So not very constructive at these levels. If you have a position, book partially, hold the rest with a stop loss at about 380, 385.
And mind you, viewers, what Kush's advice is on the back of charts, which of course don't capture necessarily the fundamentals as they may stand, because he's looking at the chart from what the chart is telling him. It could well have been the case at 360 as well, that it may have looked that it is good to book profits, and it might have been a good idea to book profits then also if you don't know the fundamentals entirely. Now, I repeat, I don't think too many people have a handle on how much further will Sterlite Tech go, but keep in mind, just about 4 or 5 days ago, they made a large commitment of investing, I think, some $100 million in the US. And Indian optic fiber companies are getting orders in the EU because China is not able to supply to the European Union region, because Chinese optic fiber suppliers are actually busy catering to the demand in China. So I think there is a lot of moving parts here. Are some of them or all of them captured in this price and market cap? Very likely could be the case. But I think it will help if the management comes in and talks about what's happening, which unfortunately we've made a couple of
and a couple of products as well. Apparently some hollow core optical fiber being introduced, which apparently is more beneficial from the perspective of AI data center play, and so maybe that is also having a bearing on what the stock is doing. So
yeah, but frankly it is just this, Alex, that there's not enough clarity on what the earnings trajectory could be because of all the plans. Sorry, Kush, you wanted to make a further point?
Just a quick one is that this is why I tend to mix trading strategies with technicals, right? I mean, I didn't say book entire profits and get out, right? I mean, because of the momentum, because of the kind of volume action this has seen, I've suggested a partial profit book, because sometimes momentum can take the stock significantly higher, right? Hence, you're better off taking some money off the table, if not the entire one. So always makes sense to club trading strategies with technical, even fundamental views for that matter, to a degree at least.
Okay, the pre-open, it's about to kick in. In fact, let's mark some of those heavy movers and potential movers and see what they are doing on a day when the markets are likely to start off slightly sluggish yet again. So bear that in mind. But because oil prices have risen further, some of the crude sensitives like Indigo, etc., might have a bit of a corrective move. Surma SGS had some very strong numbers to report, 58% uptick in revenue. I wonder if that stock on a dull day too is reacting positively, very likely about 4%. By the way, this is that one EMS stock that has actually had a really good run, while Dixon, Keynes, etc., everybody has fallen. Satin Credit Care, decent numbers. I thought NIMS improved as well, asset quality improved. 11% and counting. So watch out for that one. Anand Raj didn't have a bad quarter. Watch out for that one too. HG Infra got a large order from Welspun, so maybe that one is reacting in the green. Bharat Forge, well, 7% up for HG Infra. Bharat Forge may not react as much, but a long-term contract with Embraer, and therefore that might be interesting. What was weak was JB Chemicals. So maybe that stock might react slightly negatively. PB Fintech and Godrej Consumer have some very interesting brokerage notes, and we'll talk about them. JB Chemicals on Q is down. PB Fintech, Citi and some of the others have upgraded. Let's wait and watch for that. Okay, Ruchit Jain, I'm told, Vice President Equity Technical Research Wealth Management at Motilal Oswal with us on the show. Ruchit, thanks for joining in. We were talking about how some of the stocks are reacting on results. So we'll want your view on some of those, but maybe we can start with your index strategy if you have one, and if not, completely fine. What are the stocks that you're recommending for the day today?
Yeah, hi, very good morning, Neeraj. Very good morning to everyone. Well, Neeraj, if you see last 3 weeks, the index had consolidated in a range where 23,800 was the important support which were formed. I think twice or thrice, index came towards 23,800 and witnessed a pullback move. Now, today we are breaking the 23,800 support with a gap down opening, so which indicates that we are in for more of a price-wise correction or a pullback move. Now, logically, the entire 2,200 points up move that we have seen from 22,200, the bottom which we made, to 24,600, the recent swing high, the 50% retracement of that entire up move is placed around 23,400, and 61.8% retracement is placed around 23,100. So I believe that we would see some price-wise correction towards either of these supports where market would again take a reversal. So either around 23,400 or 23,100 that needs to be seen when the index comes there. So the risk-reward ratio would become favorable over there. So as of now, no trades in the index because we are not near that support. So we should review again around 23,400. As far as stock-specific ideas are there, I think selective names which are doing good. One is the pharma and the healthcare segment as a whole. Is showing a good relative outperformance. The Nifty Pharma Index itself has given a breakout after 1.5 to 2 years of consolidation phase. So I think this is one space which even in falling market would stand out. Sun Pharma is a buy recommendation from my side within this, where we have already seen a good breakout with the good volumes recently. So short-term traders can go long on Sun Pharma with stop loss below 1820 for potential up move towards 1960. And one space I think which can do good today is selective metal stocks, mainly because of the rally in the base metals that we've seen yesterday, be it silver, copper. The sharp up move was seen, and we generally see a direct correlation between silver and Hin zinc or copper and Hin copper. And when the base metals do well, we see good momentum in this stock. So just based on the correlation, one can go long on Hin copper at current levels. The chart structure is also looking good on Hin copper. So short-term traders can buy Hin copper with stop loss below 560 for potential targets around 600 and beyond.
Got it. And that's your call for the day, right, Ruchit?
Yes, in copper would be the call.
Okay. I do want to point out that the rupee has hit an all-time low. It was under considerable pressure in trade yesterday. And pull up the chart for the rupee, or at least pull up the current rate, 95.58 at this juncture. And there were some reports and buzz about significant dollar buying by importers in yesterday's session, particularly on the back of the announcement by Prime Minister Narendra Modi. And of course, there was also word to say that the situation isn't bad. This is preemptive more than anything else. And I'd be very curious to find out what rupee traders have to say about the expectation going forward and whether there's a possibility that this could be a short-term move lower, 95.59. Remember, this is happening despite an overnight softening in dollar. So the dollar index has actually come off. But at the same time, you're seeing that the rupee is weakening against the dollar and quite certainly against a raft of other currencies as well. It has been one of the worst performing currencies in the world since the start of 2025. And it continues to be a little bit of an underperformer, 26 as well. Dheeraj Nim, economist and FX strategist at ANZ Research, joining us on the phone line. Dheeraj, quick question on the rupee. Yesterday, you saw evidence of panic buying, as some people have described it. Is that what has taken place, and is there a short-term bottom that can be found in your opinion and a possible clawback of some of the lost ground?
Look, I think the broader understanding for the rupee is that the depreciation bias is very much intact. To the extent that the oil prices remain fairly elevated, the expectations are for further weakness, which means that importer hedging demand will continue to remain strong. And unfortunately, FPI outflows have also persisted. So it's very hard to understand or to think that the rupee would be able to gain some ground in a situation where the broader factors that have led to its decline remain relentless.
This is in evidence yesterday, and what is likely in evidence today, Dheeraj? Is it significant dollar buying by importers that is coming through on anticipation of further weakening?
I would hazard to think so. I mean, those expectations haven't really shifted. And of course, these things will keep on happening intermittently in terms of, the bouts of dollar buying, etc. But I think FPI outflows would also be another reason. Yes, between yesterday and today, but let's continue to see. I think these factors will continue to play out.
Okay, couple of follow-ups. One, intervention from the Reserve Bank of India. Do you anticipate that in any form or fashion? And two, what are the levels that you'd be watching out for on the downside and potential upside?
Right. So let me answer the second one first. Look, we've recently revised our year-end forecast to 97.5. So we do think USD INR rising to that much. I don't think there is much scope if the current environment prevails for the rupee to gain ground versus the dollar, even temporarily. Now, in terms of the RBI intervention, well, they will continue to intervene here and there in terms of smoothing out the volatility. But I think there is a fair bit of understanding that the forces that we're up against are much larger, and we will not be able to stem the expectations of depreciation of the rupee just by RBI intervention as long as oil prices remain where they are.
Yeah, it's a fair point. Dheeraj, thanks so much for taking the time and for speaking to us as always. We appreciate it. All right, so that's the word on the Indian rupee. I didn't think that I'd ever say that there's a possibility of it hitting 97.5, at least not over the last 6 months to a year or so. I didn't anticipate that would come to pass. But let's see, at 95.6, it's not too far away. On to our brokerage call of the day, and this is Citi that maintains a buy on Nuvama Wealth. And Sharad joining in to tell you more about what the rationale is and what the call is actually first. Sharad, morning.
Good morning, Alex. Overall, the market sentiment is on the negative side, so I doubt there will be a major reaction on the stock. But nevertheless, the numbers were on the stronger side for Nuvama Wealth, and Citi has maintained a buy rating, and a minor upgrade has come in from the target prices from 2,000 to 2,050 rupees per share. They've stated that there's a strong momentum across most of the business segments, and the wealth flows are strong, indicating that the yield segment are also stable. Apart from this, they're raising the PAT estimates also by almost 2 to 3%, led by higher wealth segment revenue. So this is the brokerage call of the day.
Okay, well, thanks. Interesting. And by the way, I think Sharad, thanks for that, because Nuvama a few days ago had a big bump up too. And I think the results were around, and maybe the results have come, but a big bump up. If you pull up the 7-day chart, look at that. Has a pretty good move. I know Parag Thakkar is fairly constructive on this whole non-lending financials in the capital market side. I wonder if Nuvama is in that list, or does he like something else? I think you like 360.
361. Nuvama,
you don't like
also.
Nuvama?
I know. I like this business as such. As such, I like. Valuations we can debate, but whether it is 361, whether it is Nuvama, whether it is Andati Wealth, I'm saying this business is a sticky business.
So, Parag, here's the deal, right? Now, the last 24 months have shown that Indian retail is willing to buy in and stay patient for the longer term. So we're not talking about 3 months.
Correct.
Somebody has a 2-year, 5-year view. Are the wealth managers a good cohort of stocks to bet on?
Yes.
Why
Wealth
so?
managers, AMCs.
Explain the earnings curve.
No, I'm saying, see, I'm not, first of all, this entire thing about that I want to chase 35-40% growth in all the sectors, or, wherever it is at any multiples, which is happening right now in ABB kind of stocks, or that I don't agree with.
No, which is
I
fine.
feel that annuity cash flow should be there, which should grow at 15-20%. That is enough for you to compound your wealth, say you double your wealth in 4 years with a very low risk. That is the school of thought which I belong to. So annuity business is very important. And that's why I always say that I prefer AMCs and wealth managers more than the broking. Because broking goes up and down with the market volumes, market sentiments, while AMCs have become much more stickier because the SIPs keep coming.
Yeah.
Wealth managers are more secular because they manage the HNI's wealth, and where even if they give post-tax return of 8-9%, they stick to them because it's a very high net worth, high money quantum of money. So I would say that these are better businesses to own, and if you are with great managements who can outperform the industry growth, then you can easily make your 15 to 18% risk-adjusted returns in these companies.
Just a quick point on that. I mean, we didn't spend too much time speaking about it because of the timing of the release of the AMFI data. It came very close to market close, but 31,115 crore rupees coming through in SIPs. And in the active equity category, Neeraj, 38,000+ crore rupees coming through versus 40,000 or thereabouts. But you had only 30 crore that came in the way of new fund offers in April versus close to 2,000 crore rupees that came in the previous month, in March.
Yeah.
So you're talking about a significant inflow, plus 10,000 crore rupees in flexi cap funds, plus 6,000 crore in mid cap and small cap. So there's a very robust flow into active equity in the month gone by in April. So it's quite considerable.
Now the markets have to deliver. I think for 24 months or 30 months, Indian retail has now put in the capital, trusting mutual fund managers, advisors, etc. At some point of time, Mr. Market will have to deliver. Hopefully the economy growth and the earnings growth both deliver. But, well, 9:12, we are very close to the market open. Ruchit, if you had to look at the pre-open rates and then think of what stock would you want to bet on as that one key idea for the day today, which one would that be?
I think I'll go with the metals. As we discussed, that metals are likely to see some relative outperformance. So Hind Copper, I think they are still looking well. So Hind Copper would be my preferred pick for today.
Hind Copper, okay, very interesting. After a while, I'm seeing a metal name come in as a top idea. The sector, of course, has done it well. So watch out for Hindustan Copper as one of the names. Kush Bora, I want to ask you, if you had to bet on one stock for the day today, which one would that be and why?
Yeah, I'll still go with the ones that we discussed in the morning, keeping that list thin and tight. So Alembic Pharma, we spoke of, the opening is also fairly decent about 0.3% higher. So yes, this is something that you can bet on. Just to reiterate the targets on this one, 810, 830 and stop loss at the 770 mark.
Got it, okay. Any comments on some of the big movers? So Satin Credit Care, I want to ask you about Parag Bhai, because NIM expansion, ROA at 4+% versus 2.2%. It's turned the corner, hasn't it?
Yeah, so all microfinance companies, if you see, even Bandhan, which was the worst impacted, they have turned the corner. So all microfinance companies have started doing well. I hope the recovery sustains.
But gap up of 9%, would you buy?
No, I'm not. I have not tracked the company enough.
Yeah.
And of course, the Credit Access Grameen is one of the best microfinance companies.
Sure. Ruchit, let me ask you about some of these microfinance names, and specifically on Satin Credit Care. It's arguably the stock of the morning so far, 9% up. Would you buy?
Not really, because although the trend is positive, the stop loss would be very deep from current levels. So maybe a buy on dip approach could work.
Sirma SGS, another stock that's buzzing, possible 4% uptick at the start. Maybe it'll build on that. Would you buy?
No, not at these levels, closer to the 1,085, 1,090 zones.
Okay, and Grow, which is down about 5% in trade because there's a large block. Would you sell? Would you book if you had earlier?
If I had, yes, I would book. I wouldn't really buy into the broking names per se, not even Grow.
Okay, Ruchit, AMCs, we've spoken about it in fair detail. Would you buy any of them?
Yeah, I think Nippon is looking good on positional charts. So if one has a positional view, then one can go long on Nippon.
Okay, well, 21 seconds left for the markets to kickstart trade. So let's focus on Mr. Market. We've gotten you top ideas as well for the trading day today. The question only is, will the market support any of the ideas going long? Because remember, individual pockets have shown through, even if the market has remained very, very sluggish. But crude prices are higher, so some of those crude sensitives will start off lower. The market too will start lower. Another 75 points gone now, a fair bit of distance away from 24,000, by the way, 23,747 and counting. The market breadth too not good. Mid caps have started off flattish. Maybe small caps are taking a bit of a stick early morning. Well, that's the mid cap index. Small caps in the green, interestingly. But the market breadth is adverse. Interesting. Okay, banks about 1/3% lower as well. Let's get the heat map up on the screen and show you what's moving and what's not. A bit of green, by the way. ONGC, surprise. Usually it doesn't do so much, but there's a government move attached to the crude price uptick, which may be the reason why ONGC is up 3.5. Hindalco on cue, metals. I think Ruchit spoke about it. Hindalco starting off a couple of percentage points higher. Reliance marginally in the green. Coal India in the green, Adani Enterprises flattish but marginally in the green, and then there is a Bajaj Auto squeezed in there, but very little green, a lot of red. IT starts off weak yet again. Why? Because there is one more update, and I think Anthropic has launched a version which is backed by multiple funders, including Capgemini, which is one of the lenders or one of the investors in that business, and they apparently do word for word what IT companies are going to do, and that's why I think you see this stick today. Infi, Techem, TCS, HCL Tech. So no surprise that the index is down about 1/3%, because IT, which is probably about 10% of the weightage now, or 9%, depending on what it weighs right now, is sulking today. Life insurance names are sulking, maybe a day later, because the update came in day before yesterday. It wasn't the best, but these stocks are down today. And then there is an HDFC Bank and ICICI Bank. HDFC Bank has been sulking for a number of days now, yet again down about 0.7%. But Alex, the number of green just increasing ever so marginally, because IT seems to be the main culprit, not everything else.
Yeah, and the broader markets apparently more resilient. That once again is a theme. I wonder if that continues to be the case, or was that only the first few ticks that came through? So pull up the small cap index, pull up the mid cap index, and let's take a look at that very quickly. So small cap index down about 0.4%, more or less in line with the benchmark Nifty 50. Mid cap index about 0.2% lower. Pull up the sectoral indices as well, just to see if there's a fair bit of green or not. Just about five indices, 6 indices in the green. PSU banking index is just about 0.1%. What's the top gainer? Metal, very interesting, up about 0.7%. Auto just about treading water at this point. IT right at the bottom of the screen, down 2.3%, and that's where the big crack has taken place. Possibly also not just the frontline names, possibly the other names as well, because the next biggest sectoral loser is down just about 0.5%, and that's the private sector banks. HDFC Bank maybe just a tad bit in the red. I saw that it was down about 0.7%. But let's take a look at individual stocks, and there are quite a few to talk about on the back of earnings. So let's pull up that list for you. You had IHCL that stands out. Standalone RevPAR looks particularly good, was stronger than expected, but it's just about 1/3% in the red. JSW Energy actually beat estimates, but it's down as much as 7%. Earnings impact there as Cinema SGS. Okay, JBM Auto is up 20% on EBITDA, so it's reacting positive. Let's pull up Cinema SGS, because this was where the beat took place, as well as Saturn Credit Care, arguably the stock of the morning. I want to look at Cinema SGS if we can. Strong execution coming through, and it's arguably one of the stocks of the morning. It was up about 4% or so in the pre-open session. Let's pull that up and see where it's currently trading. I would also like to look at SPR Auto Tech, for example. I would like to look at Manorama Industries. These are all stocks that are reacting to the earnings. We have Corona Remedies. Okay, we're pulling up these stocks. Fractal is losing about 0.5% or thereabouts. Corona Remedies is doing particularly well, about 5% higher or thereabouts. On the losing end, in all probability, you're going to have JB Chemicals, where margins have been impacted by higher raw material costs. It's down about 2.5% or so. GR Infra on the back of a downtick of as much as 49% in the PAT. Heritage Foods as well, weaker than expected numbers, losing about 7.3% in trade today. What else? There are a few other updates beyond earnings. Team Lease Services, you have a business meet, or rather board meeting on the 20th of May for a share buyback. It's up about 7.3%. These corporate actions usually cause that. Afcons has been declared L1 bidder for a pretty large project, 7,500 crore rupees. HG Infra, another pretty significant order win coming through for this one, 2.5% or 2.6%. Remember, this is a stock that has gone up in the recent past as well. Godrej Consumer has seen double-digit growth is seeing double-digit growth over the medium term, up about 0.5% or so. PB Fintech, again, strong management commentary coming through. I wonder what it's doing. It's just about 0.25% higher. Bharat Forge, that partnership with Embraer, but remember, it's moved up in the recent past, and so therefore just about 0.6%. HFCL has gotten an order win to the extent of 180 crore. It's 1.8% higher. And finally, Grow. We were talking about this in the pre-open session. Large deal impact is down about 7%. I've talked about quite a few stocks. Hiral, I'm just going to catch my breath. What else are you looking at?
Just a couple of names. Orin Pro is something that you should be watching out for on the back of earnings. That stock is reacting. Grow on the back of the anchor lock-in that is opening up. There has been a block deal that has happened. So that stock also is seeing some strong moves, 6.5% downtick. On the back of the royalty charge cut, ONGC, Oil India and Vedanta, these are few of the other names which are seeing some strong moves on the upside. ONGC up 4.5%, Oil India up 6.5%, 7% in trade as we speak, as well as a Vedanta which is up 1.5%. So these are few of the names that we're tracking. But Kush, let me come to you. With the way markets have opened up, anything that comes to your radar that could be good calls right now?
Yeah, first up, I think I'm glad that for now, at least for now, and even I might jinx it, 23,700 is holding up. And as we speak, there is a good put base around the 23,700, 23,600 zone. So that's a positive sign. There are signs of positive divergences on Bank Nifty on smaller time frames. So there is a possibility that, being the weekly expiry, there could be a trigger. Of course, it's on the Nifty, but, it could also help the Bank Nifty in some way. Also, what's helping the Bank Nifty? SBI. Remember, we spoke of 975 as being that crucial support zone on multiple technical events playing out at that level. For now, at least for now, it's holding up. So yes, as long as the 23,700 mark is held on to, I think Nifty will consolidate here. If that is broken, things could worsen.
Okay. Well, gentlemen, we'll have to call it a day here. Thank you so much for being with us, all three of you, and giving us your thoughts. Really, really appreciate your time this morning. And let's get in. Mihir Vora, CIO of Trust Mutual Fund, on the show. We love talking to you, Mihir. Thank you so much for taking the time out. But it does seem that we are in a bit of a consolidation phase with a bit of a downward bias because the conflict refuses to die down and the AI trade is still alive and kicking. Mihir, are you on mute? I'm not able to hear you very clearly, maybe.
Sorry, yes, I was on mute.
Yeah.
Good morning. Good morning. Always a pleasure to be here. So the AI trade is, well and kicking. I think it's probably now in a bit of a frenzy zone because, if you add the math, on one hand, you have all the hyperscalers providing infrastructure for the AI companies like Anthropic, OpenAI, etc. And the kind of investment that is being done by these infrastructure companies is in like literally trillions of dollars. But ultimately, they are going to support these Anthropics of the world and the OpenAIs of the world. And while the revenues are scaling up exponentially, they are nowhere close to those trillions that are required to sustain this kind of investments. So I think the markets are probably discounting a bit too much in the future. And of course, this capex that is happening in anticipation of future revenue is obviously creating a lot of demand for memory, semiconductors, computational power. So you have NVIDIA, Samsung, Hynix, TSMC, just literally flying off the roof. And we are in a massive earnings upgrade cycle. So there is absolutely nothing taking away from the fact that this rally is being backed by current earnings. There are massive earnings upgrade happening in Korea, Taiwan, and with good reason. So we are seeing that, in fact, in the stock markets, and India is a bystander because we don't have all those kind of companies. So yes, there is a bit of a feeling of left out as far as India is concerned, because the earnings upgrades that are happening in those countries are just exponential, and that's nothing compared to what we have in terms of India. But as I said, the sustainability of these earnings is a question mark. I don't think you can give a terminal growth rate to these kind of earnings in the semiconductor and the memory space, because this is not a 20, 30 year kind of a call that you need to take. And probably the markets are beginning to discount those kind of growth paths. So I think as soon as, this frenzy dies down, probably India should start getting its relative space back.
Mihir, that's a very interesting take that you give right now in terms of what's happening, and a very interesting post that I read of yours where you're talking about the glass half full or glass half empty. With the data that you pointed out as well in terms of the FIDI ownership, where the FI ownership in Indian equities has actually slipped below the domestic institutions for the first time in over 2 decades. What is that signaling, number one? Because you've made interesting points on both sides, right? And which side would you actually weigh in right now where Indian markets are moving towards?
So I think it's a balance. The point is that the good thing is, as I mentioned in the post, that there is enough domestic flows, there is good structural domestic savings which are getting poured into the equity markets, and that's the only reason why the markets are where they are. Otherwise, with this kind of FII selling 10 years ago, the markets probably would have been 20-30% lower. So we've been able to absorb this FII selling because of the domestic investment pool, which is a good thing. So that's the glass half full kind of argument. But the point is that bottom line is we need foreign capital, FDI flows, we need FPI flows, and we need to do a lot more to make ourselves attractive for FIIs because we are a trade deficit country, we are a current account deficit country, and obviously the only way to fund it is to get foreign money in, whether it's in terms of FDI, FII, or even remittances, etc. So we have to make ourselves attractive for global investors, and I don't think we've done enough of that. And the point is that people argue that we have been left behind because of AI in the last couple of years. I think AI has only accentuated that trend, and earnings momentum, which was flagging, is the main cause. So if you see, we had those same negative factors, high taxation, problem for FIs, etc., even before 2024. But in the 5 years, in the run up to 2024, for 5 years, India was the best performing market. It's just that when earnings in India slowed down, it coincided with this AI theme, and that's why you have this feeling of being left out in the relative scheme of things. And that's how when relative outperformance is so stark, then all these things get highlighted about India being a high tax country, etc. But the point is, these were already there. It's just when earning momentum slows down, these tend to get highlighted.
Okay. Mihir, hi, and a lot of well put points. My question to you is, particularly after the Amphi data that we saw yesterday, right, is that the deployment of capital continues to take place. 38,000 crore rupees piled into actively managed funds, and barely 30 crore of that is new fund offers. So a large part of it is deployment of capital. 30,000 plus crore rupees on SIPs on a gross basis. The point is that arguments are being made, Mihir, equally on the other side, to say that particularly after that rebound in April, Indian equities are not cheap when you consider the overarching framework and the fact that crude is above $100 to the barrel. Will these retail investors have to wait for a considerable amount of time to get that bang for their buck?
I don't agree with that argument. I think valuations have become reasonable. We need earnings to now kick in, which I think they will. If the Hormuz thing gets solved, and more importantly, so that was from the domestic point of view. I think in absolute terms, valuations are not too bad. We've seen good earnings in the mid cap index, and we've seen decent earnings in the small cap space also. I think it's a large cap space where there have been some cuts, but nothing major. So in general, given a price correction and time correction that has happened in the last almost 20 months, we are now at reasonable valuations, not extremely cheap, but definitely not expensive as far as the absolute number is concerned. More importantly, I think it's versus the rest of the world. That's where we are actually at a very attractive level. For like almost 25 years, we've always tended to trade at a premium to the emerging market index and a premium to the world index. For the first time, I think, maybe 5% of the times have we traded at par with the global index valuations on a PE basis. And that's where we are. So I think related to the rest of the world, I think we have become extremely cheap.
Got it. Okay. Mihir, could it well happen that because the FI outflows continue because they are chasing what is the AI trade or otherwise, or India's macro not looking as strong, we may kind of meander around on the Nifty, sluggish, but individual pockets of strength might do really well, as has been the case thus far. And if that is indeed the prognosis, where is it that you would have the largest overweights? By the way, I'm not talking about, maybe you have the banking space and that's all large cap, but the non-Nifty, beyond the first 100 names, where is it that you believe the biggest bang for the buck exists?
Sure. So our typical overweights as of now I'm talking across funds, broadly speaking, are in the industrial space. So the cap goods, the construction, but I would say it's more on the power T&D, renewable, that chain, and a little bit of exposure to the data center situation, data center opportunity. So that's basically where our maximum overweight is as far as the sector is concerned. So we are playing renewables, we are playing data centers, we are seeing global power T&D infrastructure, which is again partly linked to AI. and we are partly playing the domestic private sector capex revival also. So those themes I think are very much intact. Within financials, we are more over on the capital market space because we do see increased trading in commodities, increased trading in stocks, F&O, etc. So I think that's a secular theme, and as long as volatility remains, I think this segment should do well. And selectively, we have a decent overweight on auto ancillaries because there's a lot of premiumization that is happening in two-wheelers and four-wheelers. A lot of value addition that is being done, and of course there is the EV space also. So we have EV two-wheelers and the auto ancillaries where we have significant overweight. Apart from that, we have selective overweights on some of the pharma companies, but that's more on a stock-to-stock basis.
Okay. Mihir, a quick one in terms of defense, power infra, EMS. These were some of the themes which you were looking at as well very closely. Do you think the time is ripe to nibble in at this point in time?
Certainly. So that's, I forgot to mention, that's part of our industrials exposure, the defense space. EMS is partly, I think, classified as consumer discretionary, where also we have some exposure. But defense definitely is a long-term theme for us. We had exposure, over the last 24 months, and we continue to be over it on the theme. EMS, again, I think valuations have corrected quite decently. And with some of the policy changes on Chinese investment, etc., if that can be a trigger, I think valuations have come down to reasonable levels. So EMS is definitely a space that we should be looking at.
Mihir, on BFSI specifically, I think the tide has turned very quickly, unfortunately, and it's caught certain people out, right? Whereas at the start of the year, you were talking about private banks very positively. Now the worry is that inflation fear and the possible change in monetary policy will catch them off. What would you say about this?
Absolutely. So that's, we are also one of the, bulls to start with at the beginning of the year on banks. I think the negative surprise has probably been more on the liability side than the asset side. So asset quality is not a problem. Even credit growth is not so much of an issue. I think there is a little bit of scramble for deposits on the liability side, which is a bit of a surprise considering that liquidity has not been a problem. But there is a scramble for deposits, and that's where a little bit of de-rating has happened for some of the names. But having said that, I don't think it's a long-term situation. It's also a technical factor as far as banks are concerned, because the largest exposure that FIIs have is to the Indian banking system, obviously, because it's the largest weight, 1/3 of the weight of the index is in banks. And when FIIs are selling so relentlessly, 1/3 of their selling or more comes through the banking system, to the banks' stocks, so to say. So we are actually seeing a dichotomy where some of the mid and small cap banks are doing well, but the large cap banks are under pressure because of FII selling.
Yeah, it's a fair point. FII selling is a key aspect here. Thanks so much, Mihir, for taking the time. Always a pleasure, as Neeraj said, and look forward to the next chat as well.
Ready. Nice talking to you.
All right, let's talk about ABB, and this is a stock that was under pressure in trade yesterday. It reported a weak Q1 with several metrics under pressure. Let's go across to Varsha to give you a setup before we speak to the management. Varsha?
Well, yes, a weak set of numbers, even which was 24% below estimates. The revenue growth was only 6%, reflecting weak execution, and also there was a one-time profit. So that sharp profit increase that you're seeing is because of the sale from their robotic business. Now, EBITDA margin fell on the commodity inflation and weak mix. If you see, gross margin also declined on higher silver cost and INR depreciation, and the company has taken 2 rounds of price hike but passed through lag with respect to delay recovery. And lastly, execution was also impacted by West Asia disruptions. So overall, Neeraj, if I were to talk about the overall numbers, weak set of numbers, and we don't know how margins will be recovering. Back to you.
Okay, Varsha, thanks so much for that. Let's get in the management of ABB on the conversation. And we have both the gentlemen with us. Gentlemen, thanks so much for joining in. Sanjeev, let me start with you. Is this a conflict playing out, or are there other reasons for the performance this quarter?
Thanks for inviting us, Neeraj. Well, good question. I think one has to see how we see the market. So we always judge the markets and our performance based on the customer confidence on our products and services, which has been very strong. And we grew almost 25% year-on-year basis in our orders. And that's a strong testament in terms of strength of the market as well as confidence of our customers. So we are very happy about it. Our backlog grew about 17%. That gives us very good visibility going forward. And yes, you're right. I think the non-linearity that we are facing in the market in terms of disturbances, we do have forex effect. We have some cost effects on copper, on the silver, and also some logistics elements. Yes.
Okay. Sridhar, can I come to you? And of course, congratulations on the appointment, but the order flow is strong. What about the ability to pass on the costs to customers? Is that lacking?
Okay. So I think to start off, I think this quarter was definitely a bit of an abnormal quarter because we got impacted by an unforeseen factor of an West Asia crisis towards the middle of March. And that had an impact on the revenue takeoff also, right, in different forms. So that was something I always want to say that we could have done more revenues, but we had to hold back because of the customer preferences, which were rightly done so due to this. And also we definitely had, as what Sanjeev was alluding to, is around the cost impact on account of higher material costs compared to the previous year. And that's really because of the metal prices hardening and the forex volatility. And both these things are not in our control, right? And so that's something which has to be factored in. And to answer your question, is this going to be there for some time or is it going to be just one-off quarter? I think that's something which we need to wait and see because the copper prices sometimes are volatile, metal prices, and I think they should come back to normalcy at some point of time. So our model of passing on this, the impact to the market is something which is well thought through. We are not reactive. We look at market and make a very logical decision as to whether it is something which is just now and it can be sort of managed. And then we take a decision depending upon how the market dynamics work. So that's how we manage the pricing and the profitability within the organization.
Okay. And then Sridhar, does this abnormality last into quarter two as well?
Okay. Neeraj, I think to come back to this, I think how are we doing better earlier? So I think we had better levers of having a better pricing and the stability of some of the input costs which we had is something not available today, right? And so that's something which we need to look forward in the future as to how we manage that. So the advantage of the pent-up demand and that giving an additional basis, increase to the margin is something which is not going to be there going forward because the opportunities are something which is growing up, but also the other people are also gearing up on capacities. So the next change which could happen on account of good margin accretion would be because of volumes, which will really play a big role apart from the cost structures.
Okay. Sanjeev, if there is a lot of abnormality right now, when does normalcy return?
Good question. So what we see, we take our cues during COVID period, wherein we have substantial disturbances and the price kind of instability during the COVID period. And at that time, we found that the customers were quite mature in terms of understanding the dynamics of the market, as well as absorbing the changes, logical changes that we brought into the prices. And we foresee similar pattern this time around as well, Neeraj.
Fingers for that. And gentlemen, there's a management rejig out there. I believe I'll continue to see more of Sanjeev in a different role, but Sridhar, to you, congratulations. And both of you, thank you so much for taking the time out and being with us today. Okay, that's the management of ABB India. The stock took a bit of a walloping yesterday, but down about a couple of percentage points today. JSW Energy is the other one, and let's get in the management to talk about the numbers and the outlook ahead. Mr. Sharad Mahindra with us on the conversation. Mr. Mahindra, thanks so much for taking the time out and being with us. Tell us a bit about the quarter and what is the outlook for the next one?
This quarter we have seen structurally a change as compared to the first three quarters during the year of FY26. We saw because of the extended monsoons, the demand growth had remained muted. But it is quarter four which saw a structural change and wherein the demand grew by more than 2.4% quarter on quarter. However, overall for the full year, the demand growth was sub 1, which is 0.9% growth. But structurally now in the first 40 days, 45 days of the current year, when we see that we are seeing the weather conditions, the higher temperatures, the demand growth has been, YTD demand growth in the current year is 4.6%, which gives us a clear indication that this year the demand growth is definitely expected to be much significantly better than what we have seen last year.
Okay. Okay, Mr. Mahendra, how is the West Asia crisis impacting your business and the sector by and large, if at all?
See, first I'll just speak about the sector and then about JSW Energy. Because of this West Asia crisis, maybe the energy security depending on the domestic resources has become critical. There is a portion of the capacity in the country which is imported coal-based power plants, which are there. So their government of India is also now focusing and mandating to move towards domestic coal, practice which has already started. So overall West Asia crisis, what we are seeing in terms of the gas-based generation, though the capacity in terms of overall contribution to the gas-based power generation in the country is very limited, but that has come to almost a standstill, with gas being given to the priority sectors and this not falling under that. So all those things, I think the overall demand from the coal-based power plants is a positive, and which we are experiencing also. Now coming to our portfolio, when we see that our portfolio, we have two of our plants which are based on imported coal, though we have already started blending domestic coal, but those we remain insulated from the increase in the coal prices or the currency impact, because these are all two-part tariffs. So for us, we remain insulated absolutely, and we are seeing a positive uptake in terms of the power demand, and from the electrical appliances also, which we are seeing are increasing, the consumers are preferring. So the demand growth is structurally we see, and going forward, we feel that our dependence of when we talk of energy security as a country, I think the focus from Government of India is going to be moving as fast as possible from petrol and diesel-based vehicles to EVs and also the electrical appliances. These are all positive for the sector which we see going forward.
Okay. And Mr. Mahendra, how do you think this conflict has reinforced the green energy targets for the country?
Yes, definitely. It is a mix of like Government of India's focus on the RE capacity, green energy capacity to reach 500 gigawatt by 2030 is moving well. Maybe we are confident of country reaching 500 gigawatt of green energy capacity. Maybe if not 2030, maybe 6 months, a year later, but definitely that is on track. But that was the energy transition Government of India was focusing. Apart from that, now with the West Asia crisis and also the way Indian economy is growing and the fundamentals remain strong with domestic consumption-based economic growth, I think energy security becomes a key. And for energy security, it is important that we understand that we don't have any other option for around-the-clock reliable power to have the energy security is right now the fossil coal-based power. So that is the reason Government of India revised upward the targets of adding thermal capacities and have announced 97 gigawatt by 2032. So we are also participating in that growth story, and definitely we are building the platform both in thermal space as well as continue to execute our green energy projects.
Every company, Mr. Mahendra, worth its salt is talking about the battery energy storage systems. I know you have large targets too. Can you enumerate that? Where are you on the progress of the battery energy storage systems?
Yes, energy storage is going to be key with so much of solar capacity addition happening, and maybe solar capacity post-solar hours suddenly goes out from the grid. So for grid stability and to take care of the evening peak requirements, I think storage is going to play a very, very important role. That is the reason that there is significant capacity additions in battery energy storage and pump storage, also hydro pump storage. is the key, and we are very well participating. We have a tied up capacity of 29.6 gigawatt for which we have signed the PPAs, a mix of hydro pump storage and battery energy storage. So we are in the process of executing, and will be start executing our battery energy projects in the current year. Will be start executing, and will going forward will continue to do that to reach 40 gigawatt hour of storage capacity by 2030.
Mr. Mahindra, the targets are stiff. I would love to know what your earnings trajectory for the next few quarters or few years could look like. Can you crystal ball gaze for us?
The variability in the earnings and all is a very, very important to this kind of business to minimize this. That is the reason that whatever now our present operational capacity, almost 95% of the capacity is tied up under long-term PPA, where we have to ensure the availability of the plant. So this gives us a stable cash flow. 5% of the capacity, which is open capacity close to the domestic coal mine with significantly lower fuel cost, gives us the advantage of whether like now what we are experiencing in terms of to sell in the open market. That also is an opportunity which we see. But going forward, the stability is the key to continue the growth momentum. We are executing all our projects, whether it is thermal, solar, wind, or hybrid, battery energy storage, or pump storage, or thermal capacities. All are tied up under long-term PPA, giving us assured cash flow and returns going forward.
Got it. But Mr. Mahindra, I'm sorry, but can I push you for a 3-year outlook, if not in exact number terms, then some color about CAGR growth rates?
See, one thing which is very clear, we have seen that we have added capacity in the current year. We started the year FY26 with 10.8 gigawatt, and we have ended by adding maybe almost 2.6 gigawatt of capacity, and which has come during the year also. So, and we have shown reflected a revenue growth of 41%. We have shown an EBITDA growth of more than 81% during the year. So I think this kind of momentum will continue. Of course, we have to remember one thing in terms of stabilized growth, a CAGR of 25 to 30% is what we see, because this time it is an exceptional growth in terms of revenue and EBITDA, because KSK Mahanadi was one plant which was not there with us in FY25, which has contributed significantly to our growth, generation and revenue growth. But RE growth, the capacities which are available, and this has given us a growth of almost 57% in generation this year, which has also resulted in a significant increase in the EBITDA growth. So this will continue to be available, this growth. And new capacities, if we are adding 3 gigawatt every year, these numbers clearly give the indication that how the trajectory looks like. But yes, as we are saying that maybe 20 to 25% CAGR growth is, we are confident that which we have demonstrated also, if we see our CAGR growth of last 5 years, we will definitely be continuing with that momentum.
Got it. Okay. Well, Mr. Mahindra, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time. That's JSW Energy with their view on what the outlook ahead could be like. Confident. Now, is it a part of the valuations already? Remains to be seen. Well, the markets though is sulking now. 23635 at the lowest point of the day, much like the rupee, and the culprit is Nifty IT because of what OpenAI has done. We'll talk about it. First, a word on what banks are doing as well. And Canara Bank is a bank in focus. It's delivered a mixed March quarter, if you will. A mark-to-market losses led to a trading book dragging the headline profits lower. Despite the hit, though, core fundamentals stayed resilient. Net interest income also grew. So some of these things looked okay. Let's tune into a conversation with Mr. Hardeep Singh Ahluwalia, Interim MD and CEO and ED of Canara Bank, in conversation with my colleague Piyush.
PM has actually made a big request to the general public, saying that please avoid buying gold for around 1 year. This depletes our forex reserves. Canara Bank, I understand, has a lot of gold loans on its portfolio. How do you see this development? How would this impact on your bank's gold loan segment?
So this is, I think, the PM has made this appeal basically on arresting the current account deficit. it won't be affecting our gold loan portfolio because in South India, people have ample gold with them. And whenever in need, they feel more convenient pledging that and taking loans for that. So I don't think that will impact much to our banking portfolio.
Okay, and in general, for because you also have downstream exposure to NBFCs who may also extend gold loans. There, in terms of LTV positions, how is it placed? I mean, in terms of renewals, also could we see a decline overall? Because the gold loan segment has been growing quite far, will we see it tapering down from here on?
So while we are growing our gold loan portfolio, we are also conscious about the fact to maintain LTV much below the prescribed regulatory levels. So that we are continuously maintaining that below the prescribed regulatory levels.
Sure. I also wanted to get your views in terms of the government's newly launched ECLGS 5.0 scheme. Canara Bank has a lot of MSME loans on its book. I want to understand what is the sort of quantum of loans that you would like to extend under this new ECLGS 5.0 scheme by the government.
Sir, for ECGLS scheme that has been rolled out, we have identified exposure of 90,000 crores. This will be eligible for around 18,000 to 20,000 crores fresh additional credit. So we'll be reaching out to these customers to avail these credit facilities.
Sure. Mr. Ahluwalia, just one question in terms of your tenure. The government has reappointed recently for a fresh 3-month extension. However, when can we see a permanent MD and CEO taking over the bank? Mr. K.S. Raju had retired earlier last year, sir.
So I am also waiting for a new MD to join. But since I have been working in this organization for last 3 years, so I know the organization very well.
Sure. In terms of Q4 numbers, we see that for FY27 guidance, especially on NIM, you have trimmed it down to around 2.50 to 2.60% as against the previous year's guidance of 2.75 to 2.80%. Now we are seeing NIM contraction happening across lenders, but how do you compensate for that? Would you look at growing your wealth management portfolio? What are the other opportunities you see when the core margin itself is, going down, and we may not see that 3% level sort of margins going ahead?
Sir, for this quarter, if you see Canara Bank results, so we have improved, our quarterly NIM has improved by 9 basis points, and cumulatively it has improved by 1 basis point. This is because we were growing the advances at 15.30%. So we were very much above the guidance number given to the market. So that placed us in a very good position that we could bargain with the pricing element. So that is how we could improve our NIM in this quarter. And going ahead also, although we have given the guidance numbers of 2.5 to 2.6, so we will be much hovering around this range. I think these are comfortable numbers to achieve.
In terms of your wealth management expansion, or in terms of non-core income fees, like in the non-interest income segment, how are you looking to grow those segments?
So in the non-interest income, if you see the fee-based income, the treasury income, the recoveries in write-off and PSLC. So fee-based income, I think we will reach our targeted levels. Under treasury, that depends upon the volatility in the your Sensex and the bond yields. So last quarter, we have seen that the Sensex corrected by almost 4,000 basis points. And the yields moved from 6.59 to 7.05. So we had MTM losses of 800 crores. Going ahead, if it cools down, the inflation comes under control, and there is an uptick in the Sensex, and geopolitical situation improves, and yields also softens. So treasury, I think, will start making more profits. In recoveries and write-off, it is always ranges between 1,500 to 1,600 crores. If you see last financial year, we have a TWO recovery we have done for 6,800 crores. This year also, we have done 6,500 crores. So, and going ahead in this quarter also, one or two good recoveries have happened. So I am confident that TWO recovery will continue in the same manner. Going ahead for the PSLCs, we are in an advantageous position. Continuously, we are maintaining the priority sector above the mandated levels. So this year also, PSLC income, we will be achieving the targeted numbers.
I just want to ask the final query on the RBI's mandate to banks to shift to expected credit loss model. What is the sort of provisions that you will have to make, the quantum of them? Also, would you have to raise fresh capital to actually, create those provisional buffers to meet with the newer ECL guidelines?
So for the expected credit loss, which is going to be implemented next year, so the assets are placed into 3 stages. Since the stage 1, this is almost at the present IRAC norms, so we don't see any much provisioning happening there. And almost in the stage 3 also, our PCR, which is the stage 3 is actually the NPAs, our PCR is much above 94-95%. So in stage 1 and stage 3, we are comfortable. But in stage 2, where the regulatory floor has been increased from 0.4 to 5%, there we need to make additional provisions. I think that will be, our rough estimate says it will be 2,500 crores. And based on the probability of default in stage 1, stage 2 and stage 3, I think additional provision of say 5,000 crores will be required in that. And for the non-fund business also, additional 2,500. These are rough estimates only. Once the entire model gets implemented in the system, that is likely by December, we will do that. We have already onboarded our knowledge partner. We have already onboarded technical consultant for the system level implementations. So even if I take 10,000 crores as a rough estimates, our profits are in the range of 19,000 to 20,000 crores in a year. And the ECL provision says it has to be staggered in 4 years. So even if I consume in the first outgo itself, so our CRAR will drop only by 1 basis point. So we are very, very comfortable absorbing the ECL and implementing in our bank.
All right, that's a word coming in from the Canara Bank management. Things might just be looking up, but it's cuts of about 0.75% for the benchmark Nifty 50 with the IT pack under considerable amount of pressure. The IT index down over 3% at this point, and really that is where most of the selling is being concentrated, apart from a couple of private sector banks. So there's ICICI Bank under pressure as well as HDFC Bank under pressure. We'll talk about some of this in more details, and of course we're sticking with the earnings conversation. On the other side of the break, we'll talk to the management of Fractal Analytics. Stay tuned for that.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on
Welcome back to India Market Open. You know, in terms of markets, that pressure to some extent has continued, but that mild recovery from the day's lowest levels is what you're looking at in terms of Nifty 50. Still cuts of 0.8 off a percent there, and Bank Nifty as well. A similar kind of trend is what you're picking up. In fact, we've said since morning that, you know, the setup with regards to Bank Nifty to some extent is looking weaker as compared to Nifty 50 as well. But let's see how this pans out. Moving on, one stock that is in focus is a Fractal on the back of Q4 numbers. That stock is seeing gains of almost 2%. Jasmeet is standing by to tell us more in terms of how has the quarter been and what are the key chat points that we should be looking at with the management. Jasmeet, over to you.
Well, hi, Errol. Very good morning and thank you for that. If you look at the Q4, the company did report a strong Q4 for the overall results. If you look at the EBIT margin, they have expanded by nearly 500 basis points in this particular quarter on the back of operational efficiency. The overall expense has reduced by 2.2% and revenue has increased by 3.7%, supporting that margin growth. Now, if you look at the other key aspect, we have seen that growth was led across the board, while the healthcare did really well for the company, which saw an uptick of nearly 82% on YOY basis. When we look at the BFSI, was the other sector that also saw a healthy growth of nearly 42%. In terms of share of the associate companies, the losses narrowed by 61% on QOQ basis, while we also saw that the overall other income saw an uptick of 15 times compared to what was in the previous quarter, supporting the profits. Now, if you look at the key numbers, we do see revenues up by 3.78%, while the EBIT saw an uptick of 54%, while the margins have expanded by 500 basis points, and net profits is an uptick of 14%, standing at roughly 170 crores. Now, while we would like to interesting to discuss with the management how the Fractal Alpha overall is going on, as we did hear in the con call that the losses have narrowed over previous few years, and further the plans of management when it comes to applying the AI in terms of the enterprise operations.
That's with regards to where Fractal Analytics is concerned. In fact, let's get in the management to talk to us about the way earnings have panned out. Joining us on the show, we have Shrikant Velamakani, co-founder, Group CEO and Executive Vice Chairman, as well as we have Ashwath Bhatt, Chief Financial Officer at Fractal Analytics, joining in. Welcome to the show, gentlemen. Always a pleasure to speak to you. Shrikant, my first question coming to you is, clearly strong growth in the fourth quarter, double-digit EBIT growth as well. Margins have expanded from year on. If you have to take cues from the fourth quarter getting into FY27, what are the key positives and where are you seeing concerns?
Thank you. First of all, we are seeing growth across the board. We have registered a pretty solid quarter. Overall, very good growth for the year. And most importantly, while expanding gross margins, EBITDA margins, and net income margins. So all of those margins have expanded. So overall, significant growth in profitability while continuing to grow pretty strongly. So that's pretty exciting. Now, specifically within this one vertical, we've had some degrowth. So if you take that out, our growth rate overall would be 27% for the year, which is a pretty solid indication of how enterprise AI is taking off across the board. We should see that Fractal expands in a similar way in the coming year. Some of the client-specific issues that led to TMT decline are behind us now. So we expect that to not play in this year. So overall growth should be pretty robust going forward.
Is it possible to quantify that though? And I see that the growth has been led by healthcare and as well as BFSI, both of those verticals looking strong. So talk about the vertical that did not work. And if you can quantify the move away from the degrowth in TMT and the move in FY27, how would that look?
In FY26, we had two client-specific issues that brought down the overall growth for the company. One of those companies went into a joint venture because of which they dramatically reduced working with us. The other one had a reorganization inside the company because they were themselves challenged in terms of their performance, and therefore their revenue for Fractal have come down dramatically. Now, both these issues are behind us, which means that not just all other verticals that we work in, even the TMT vertical is in a good place as far as growth is concerned in this coming fiscal.
Okay. The other question I have for you is in terms of where earnings are concerned, We are talking about how AI is panning out right now. The question is the impact it could have when it comes to employees, because retention, attrition, all of them become crucial, and that's what the street also is wanting to know. Your initial comments on it.
So the market for AI talent is expanding dramatically, and the bar for what is an amazing AI talent is going up a lot. And at that highest levels, there is intense competition for exciting talent to work for Fractal or for any other organization. We are very blessed in terms of the kind of people who are interested in joining Fractal. In a typical year, almost 250,000 to 300,000 people applied to join Fractal, and we get to select about 1,000 or so out of those 300,000. So we are in a very good place in terms of attracting talent and building that talent, specifically AI research talent, AI engineering talent, which is really, really scarce today. Luckily for us, India is a pretty good market for that talent, and we attract some of the best to work with us.
That's good to hear. Ashad, I want to come to you on certain metrics when you're talking about the margins, right? And incrementally, if you're talking about deal wins in the business that you will get in FY27, give us a sense of whether this 500 plus basis point improvement in the EBIT margin can be built on, or are we anticipating that they're more or less going to remain in this range that you've achieved in the fourth quarter for FY27?
Thanks for the question. I think the margins that we got to in Q4 are obviously, first of all, they are sustainable. We always focused on investing in R&D, which also helps us improve our gross margin over a period of time. So the idea is to keep increasing our gross margin, and SG&A itself from the first quarter of fiscal 26, where it was 26.5%, came down to around 22%. So that's the operating leverage that we have. While I'm confident that the current margins are sustainable, we want to keep building on it while investing into R&D, investing into sales if it's required, and keep increasing our gross margins so that the reinvestments comes out of the gross margin and we sustain the margins and keep improving further.
Okay, so that's from a margin perspective. Ashwath, the other question I have for you is in terms of sustainability of growth. I know, Shrika has also been mentioning about that, but Q4 revenue growth of 17%, if I have to look at YOY, FY26, 19%. So if I have to compare it to Q3, there has been some bit of deceleration because Q3 was 21%. Are you expecting this to normalize then in the first quarter of FY27?
Yeah, the year-on-year growth will keep varying based on how we grow quarter on quarter. But I think the key thing that Shrikant mentioned, like our 17% growth would have been more closer to 25% growth without TNT, or even for the quarter, like 17 would have been almost 32% growth without TNT. So once some of these two client-specific issues are kind of lapped into our normal quarterly run rate, we do expect the quarterly growth rate for fiscal 27 to come back to more normalized growth between that 20 to 25%, which we have achieved in the past.
Okay. My last question coming is with regards to the NASSCOM advisory, with regards to where work from home goes and what Prime Minister Narendra Modi has actually appealed. How are you looking at this in terms of impact, Shrikant, in terms of the industry and for a company like yours?
Thank you. The good news is that, first of all, I really appreciate the Prime Minister's message in terms of how we should all work from home and how we should cut down some of the expenses. He has a worldview and he has a full understanding of what's going on in the world. And based on that, this is a sort of recommendation. As far as the technology industry is concerned, as NASSCOM, what we have been doing throughout, starting from the pandemic, is creating extremely flexible working options. Even last year during the Operation Sindoor, we saw that the tech industry was very resilient, was able to work remotely and actually create the conditions where the best and the brightest minds can come and work for the industry. So we want to continue building that as part of the plan in such a way that overall, we are respectful of what the Prime Minister is saying, and yet we create those conditions for the success of our people and our clients.
Right. Shrikant, on this one, I'm sure we are going to connect once again between today and tomorrow to talk about it. But thank you so much for joining in. Always a pleasure to speak to you. Indian hotels is another one that we should be focusing on. A strong set of numbers that have been reported as well, though the stock is down almost 1.5%. I did speak to Puneet Chatwal, MD and CEO of IHCL, about the quarter gone by and the outlook going forward. Let's listen in. Indian hotels, as we know, a strong quarter that the company has reported, and this is in times of turbulence, which shows you the kind of performance that's coming in. Puneet Chatwal, MD and CEO at IHCL, joins in. Puneet, welcome to the show. Always a pleasure to speak to you. You know, all of this while, our conversations with a lot of managements have been about how are you actually navigating these times of uncertainties, what's the impact you're seeing. But at the face of it, when we talk about Indian hotels in terms of numbers, turbulent times, but a strong show. And the growth also has been pretty good. How have you managed to do this in terms of, is it demand, is it strategy? How would you want to put it?
Well, it's a bit of all. Firstly, thank you for having me. A very good morning. We embarked on this journey of diversification of our top line by brand, by geography, and by contract type a few years ago. We communicated that to the market, and that's how we quadrupled our ROCE in the last 7-8 years. We, inclusive of return on equity, also quadrupled. So I think the growth is a very important part of our strategy, and scaling up for resilience, scaling up to be future ready, and having very healthy margins so that any kind of turbulence that comes our way, we could weather that storm because of a very strong balance sheet, because of very strong cash reserves. It's all been communicated quarter on quarter. I think now we start to see the results of that strategy in difficult quarters that we have had. Last one, including this first quarter, will not be easy because of the West Asia crisis.
Right. Puneet, as you mentioned about West Asia crisis, well, if you have to look at industry, there is growth which did slip, say, in the month of Jan and Feb. Jan and Feb was strong. March, I think it slipped. In May, again, it has picked up to some extent, and that's what channel checks are indicating so far. With the way demand has been panning out right now, and with FY26 being a challenging year, does this leave a softer base for the next 3 quarters, taking the kind of guidance that you've given as well? If you have to actually match the two, would you say your guidance is more of cautious versus your usual upbeat tone, or would you say it's still as upbeat?
I think under the circumstances, to say double-digit growth, 12 to 14%, is not cautious. But should the crisis subside faster than we all think, then giving 15 plus percentage points on a very high base, because every year our base is becoming higher and higher. When we say 15, it means 1,500 crores more on the top line. Should be possible. So at the moment we have set 12 up to 14, but should the crisis subside by the end of this month or early next month, we could go up to 15 plus. And the reason being Q3 and Q4 are the strongest quarters, Q3 being the strongest always, Q4 the second strongest. So in this challenging times, if they are in Q1 and Q2, with a lower base, last year, same time with Pahalgam, with Operation Sindoor, with airline accident, I think we should be coming out quite well as a sector, but also Indian hotels in particular.
Okay, so that's an interesting one, because that's what the street wants to know. You know, the way Puneet's tonality is, that is what will guide where the company goes as well to some extent. Okay, let's look at events. Calendar year 26, you have the BRICS presidency, and that will probably drive diplomatic travel. And this is a segment which Indian hotels has captured really well. It will come in as a tailwind to a certain extent. To add to that, you have Prime Minister Narendra Modi's austerity announcement, which somewhere could create an overhang on domestic travel as well. If you have to look at both these aspects, how are you reading into it?
The international delegations have been really a big help to the sector in the last few years, starting with G20 and now, as you mentioned, BRICS summit towards September, October. Also in this month, we have the Africa summit. And when you come to India, obviously a brand as strong as Taj is obviously the preferred choice of the visiting delegations, but also of the government to host majority of our events. If you wanted to use the palace like a Rambagh or a terrace of the Lake Palace, then that is one of its kind. So I think we do benefit from the legacy. We do benefit from a strong brand. We do benefit obviously with our operational excellence. I see no change on that going forward. Actually, as India consolidates and solidifies its position in the international economic arena as well as in diplomatic arena, more and more delegations will come to India, and that should help our business, especially in the capital of Delhi and the commercial capital of Mumbai. Also that on the Prime Minister's latest announcement, I think should boost domestic tourism. Having said that, we need international. Our brand is just beginning to be recognized internationally, from the Fifth Avenue in New York to the Buckingham Gate in London to the properties which were doing so well in Dubai. I think, and we are very close to opening our hotel in Frankfurt in Germany. We do feel that if we look at it to long term, the international presence of Taj is equally important, and the performance also.
Okay. So that's with regards to Taj Frankfurt also that you've added. I will want a question on that one. But when you talk about Prime Minister's austerity announcement, any comments that you have on it? Because it's not really 100% created panic in terms of the stock markets. But if you have to see on ground, people are thinking what is going to happen, because a lot of comparison that is being made to COVID. Someone like you who's been in the industry for so long, how would you read into it?
With one sentence, this too shall pass.
Oh, that is called optimism as well. This too shall pass, Puneet. The other thing I want to talk to you about is if you have to look at the growth, and you mentioned about Taj Frankfurt. Now, the non-like-for-like, that is what is probably going to drive the incremental growth, and it all hinges on timely launches. There could be a historical slippage risk that comes in, something like a Taj Frankfurt, as you mentioned. If, God forbid, anything of like this happens, would it be still right to say then that 15% growth that you're looking at is the base?
Well, I don't know if you were aware, Taj Frankfurt already slipped by 2.5 months, and we have been carrying that pre-opening cost. Which is normal given the challenges on geopolitical front. But this time, I think we should be opening in 3 to 4 weeks' time. But it's not just Taj Frankfurt. We have a pipeline of 60 hotels which are slated to open this year, plus the integration of the acquisitions we did last year. So I think that gives us a very strong base for not like-for-like growth. And Frankfurt is obviously one component, but our renovations are getting completed in London, which also got delayed by a couple of months under the current circumstances. Same is happening in New York, but I think by June or latest September, we'll be ready with a very nice and very strong international portfolio, which we have never had. We had the dots on the map, we had the assets, but they were not fully renovated. So I think we will stand to capitalize a lot on that in the second half of this year.
Okay, so that's the international portfolio. A lot of analysts, Puneet, are projecting domestic demand to outpace the supply through 2027. In that kind of a scenario, what is that, occupancy or average room rate that you foresee if you have to look at 2027 or FY27 as a year? And to add to that, management fees are also expected to grow, right? So to what extent will this high margin income offset the potential wage hikes or inflationary pressures that could be coming in on the back of operating costs?
Well, that's exactly what we have been doing. Our management fee income has, increased by 300% over the last 7-8 years. we're doing a CAGR of more than 20% on management fee growth. And you know that management fee growth has a flow through of 60 to 80%, depending on which brand we talk about. So that will continue. Of the 60 hotels which we plan to open this year, 90% of those are on a capital light model, and at least 80% of those are on management contract basis. So I think that part remains very strong. It should be able to offset any kind of negativity on inflation or other kind of cost pressures. But we all have gone through, human memories are very short. We have gone through a very long period of zero revenue during COVID. If we could navigate through that as a sector, I'm sure, some inflationary pressures and some other negative environmental changes should be able to subside as far as our own strategy, growth, and management initiatives are concerned.
No, absolutely. Very well put, Puneet. And my last question is the asset-light transition, the shift towards a 65% asset-light portfolio. How is that impacting your ROIC in FY27, especially as you're aiming for a 20% plus ROCE under the 2030 plan?
Very good question. I think in this situation, we need a bit more patience because under the capital light strategy or asset light kind of business, the growth in revenue is only by growth of your management fee income. So it takes a bit longer, but it creates a very strong resilience. And we are now slowly moving from we used to be 35% capital light company, 65% heavy. Today, we are slowly transitioning towards 70% capital light. So we still benefit very strongly from our core assets, from our iconic assets, which we own. And now we have coupled that with the asset light business, which has actually driven the margins, which historical were at 13-14% to now consolidated at 35%, and on a standalone basis at 45%. So I think that is the proof is in the pudding, and I think this strategy up till now has worked, and I see no reason why it should not work in the years to come.
Okay, strategy is the key. Pretty optimistic, I would say, but the stock under pressure with cuts of 1% coming in there. So that's the conversation with Indian hotels as we speak. But moving on, if you talk about IT as a sector, that has been under pressure today as OpenAI's aggressive push into AI deployment has stoked fears of disruption. Jasmeet joins us with more details. Jasmeet, everyone was wondering as to what is creating this kind of pressure in terms of Nifty IT, the top losing sector today as well. What are you picking up so far in terms of impact of OpenAI?
Well, thank you for that. As rightly said, the Nifty IT is tumbling in today's trade down about 3% Now, what has happened is OpenAI has launched its new tool which deploys the AI engineers into the system. So now, this business is backed with an investment of nearly $4 billion, and this would lead to overall AI tool getting converted as an execution model. So now, what the fear is that this particular tool might replace Indian IT altogether, given the Indian IT were necessary on the back of the integrator opportunity, but given the AI tools are now able to even integrate themselves into the system is something that's getting the fear. Now, AI concerns have been there for Indian IT for very long. Even with HCL Tech coming out in the Q3 or Q4 earnings and giving out that they might see AI deflation of 2 to 3%. With this new tool, it becomes a key question of how much deflation of AI revenue can we see going ahead. Further, also, it becomes a concern that the gap between the AI tool and enterprise execution is getting narrowed day after day when they launch new tools. Now, with this new tool, it's something to watch out for what is the management commentary further going ahead and how this tool would really impact the overall top line. Though the business remains compounding for IT companies and it will not change over the next 7 to 8 years given the long-term contracts, but post that and the new deal win is something to watch out for.
Got it. Thank you, Jasmeet, for that. So that's with regards to where AI, which is actually becoming slightly troublesome when it comes to Indian IT companies, which is putting it under pressure. And an interesting take that to us as well, where Korea is looking at citizen dividend from the AI revenues, and that's actually what put Samsung under pressure in today's day of trade. Very lastly, Dixon Tech is under pressure. They will be reporting their Q3 numbers. Puneet is here to tell us what are the key expectations, though from the day's lowest levels, a mild recovery that has come through. Puneet, are the expectations aligned with what the stock price is doing right now?
Well, most certainly, it's a very crucial set of numbers for Dixon Tech. I think probably for the first time since listing, because we are just anticipating a 2% revenue growth for a company which is known for high flyers in that sense. So it's just 2% revenue growth expected for quarter 4. EBITDA is expected to actually fall by 9% because of the industry volumes for mobiles being impacted in this quarter, and Dixon has been one of the key beneficiaries of the mobile phone segment over the last 4 to 5 years. Net profit will also fall by 54%, but there is almost a 250 crore gain based on fair value gains of Aditya Vision's stake in the base here. So quarter 4 FY25 had that impact, and hence we are seeing a fall. But also when you look at the biggest talking point for Dixon this quarter will be the Vivo JV. Now the JV was announced back in December of 2024. So 15 December of 2024 is when it was announced. 17 months on and still no approval for this joint venture as well. So timeline for that, after the previous quarter, management had said it will take 45 to 60 days to ramp up as well. So once that approval comes in, it'll still be a couple of months. But industry had penciled in almost 10 million units coming in from this Vivo JV, and with this approval not coming yet, you could see some revision on the downside for the guidance, essentially, if not from this joint venture. So a lot on the earnings that's expecting a disappointment, but a lot of conversation will be on this joint venture as well.
Okay, the JV is going to be crucial because that's when we did see a minor cut that did come in terms of the stock price. Thank you, Puneet, for joining in. Always a pleasure to speak to you. But completely out of time, but that is a wrap on this edition of India Markets Open. Up next is Ask Profit with Mahima and Puneet. So you'll have all your queries answered. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade. Spots the trends.
Just my first question largely because, when you look at the year as a whole, you've grown by roughly 20% in terms of revenues. Profits have grown by 12% odd now. If you can give us a perspective of, and I can see that there are your employee cost has inched up almost 33% on a YOY basis for the whole year, of course, while your other expenses have also inched up just slightly in that aspect. So if you can give us some perspective of, was this a year where, of course, we've seen a lot of disruption from AI, but in terms of your planning from quarter 1 to quarter 4, has there been the plan to add and that employee cost inching up part of the whole scheme of things, and how do you view the line items for hiring trends essentially for the next year?
Puneet, first of all, thanks for having me. So on the year, I would say for the full year, I would kind of rate it as below average, especially given our own standards on how we plan our business. When we entered the year, we were thinking we were within shooting range of growing at about 30-odd%. We ended up at about 20-odd%, which in our books, I would say counts as a below average year. And I think if you were to characterize it, the first half of the year was, I think you started off strong, and the second half of the year got muted a little bit, especially Q4. Part of the reason being the war in the Middle East, and Middle East had become, for the last couple of years since we entered Middle East in a big way, it had become a key growth geography for us. I believe that is a temporary sort of lull in terms of both deal closures as well as, because the deals are all out there, deal closures as well as being able to send people and get the projects delivered and revenue converted. I think that should settle down. It already seems to be settling down, although, of course, the war needs to get over. The other parts of the business, data center continues to go strongly. We're picking up very large relationships with some leading hyperscalers. Transit continues to go strongly. We announced very large wins around MMRD, etc. We've had a little bit of mismatch in Q4, especially around the need to invest behind some of these large deals, and then a mismatch in terms of when the revenue flows in, when the project starts, especially on the large data center deal, right? So I would say that's how I would characterize the year. I think AI on the net is a huge opportunity for us. So we've stepped up our investments. We continue to step up our investments. We are probably the leading banking AI labs between Arya and Lexi in terms of actual real research on enterprise cases. And we're rolling out a full AI stack, right? So I think overall, from a business standpoint, that's how I would put it. Employee, yes, I think to some extent there's a little bit of an uptake, but that's, to grow the business at the scale, we've always grown people over the last 4 or 5 years. If you see, we've almost more than doubled the headcount in the business. I think now the rate of headcount growth is muted. We've had to invest in significant R&D around AI, and also the headcount there has gone up, as well as where the growth has happened on the data center and transit spaces, right? So I think that's how I would put headcount, but it's not right. Like it's more or less in line with growth.
Got it. Well, firstly, thank you so much for that perspective. So just a couple of follow-ups then. The expectations for FY27, because we are in a very uncertain time, then is it that you are likely to at least do a 20% growth because your standards are, of course, to grow 30%? So that aspiration stays at 30, but given the volatility, are you at least guaranteeing in that sense in this volatile time of at least a 20% growth at this point of time for the next year?
Look, I would put it this way, Puneet, right? I think for most of our businesses, the growth drivers are very, very much intact, right? So data center space continues to be on a tear. Transit will become one of the leading global players. Banking, AI, we are one of the leading sort of product vendors. We are one of the leading AI players around. So the growth drivers are very much intact. I think the big factor is the uncertainty. I don't think it would be, because there are things you don't know. The Middle East situation, we don't know. There's a lot of unknowns right now. So we feel it would be unfair to throw a number out there. I think the focus for us over the next couple of quarters has to be sharply focus on execution, focus on execution discipline, cash conversion, and get the growth done. And then we'll see middle of the year, I think we'll come back.
Because Mr. Rai, the reason why I asked this question also because you already have an 1,800 crore order book. Now you've done almost 1,400 crores in terms of revenue. So just in terms of that execution also, I'm guessing a lot, at least if you can give us some perspective on how much of this 1,800 crore order book is executable over the next year then.
Yeah, I would say, so that's a good question, Puneet, right? I would say a large part of it is probably 70% is, but the challenge is there's some execution risks that we are not able to control, especially the supply disruptions, the Middle East disruption, etc. Right? So I think there is we need to be very certain around the planning of these projects. We need to be very certain about being able to put our teams on the ground especially in places like Saudi Arabia, etc. And there are some unknowns there, right? So while the orders are there to be executed against, can you really execute at that pace? Even on the data center spike side, there are supply chain disruptions. So the planning goes for a toss. So I think where we are is not so much uncertainty in terms of deal flow, but uncertainty in terms of really being able to execute and convert. Having said that, I think you are right. I think the order book is fairly strong and we will continue to execute. So I think on the net, our growth trajectory, medium term, more or less remains intact. We'll just need to plan this granularly and maybe we get together in the middle of the year and see how certain it looks.
The other question was that, out of almost 1,400 crores of your revenue, the 930 odd crores comes from the services side of the business. The rest is coming from the equipment and the product licensing side. So how are you viewing the second part of the business? Because of course, the first part, you've given us some perspective on revenue growth. You've given us some perspective on the employee hiring, and your order book gives us some view of what FY27 could look like. In terms of products and licensing, because we've also seen, as you mentioned, the buzzword AI also being a base case essentially for a lot of services and products that IT companies have to give to their customers. So within this segment, what's basically your right to win strategy for the products and services businesses, and how are you seeing the revenue growth? Because that was almost 17% versus the overall growth of almost 21%. So what's the expectations for the next year for this business?
Yeah, so I think that's a great question, Puneet, right? So on the product side, we have some of the leading products on the banking side, right? Or the leading lending solutions, leading transaction banking solutions. We have a very specific point of view on the banking stack really needing to adapt to the age of AI. What does the next generation of banking software look like? What does the next generation of agentic execution inside the banks looks like? How do these come together? And we have been investing heavily in it over the last, I would say, couple of quarters, and we'll continue to do that. So you will see the first rollout you saw probably a few weeks back. We launched a completely brand new AI native trade finance solution. We are already in POCs with multiple design partner banks on that solution across Middle East, Europe, and India. We will launch a whole series of solutions which are fully AI native, and we are heavily building towards it. So over the next few quarters, you will see a whole series of applications go out. The trade finance was the first one, which we launched a few weeks back, right? So I think that is essentially our focus. We believe we are ahead. We've been one of the most successful product vendors in this space over the last few years, and we intend to continue to lead and support our clients. Increasingly, what we see is, given the nature of the change, we are increasingly at the center of this build that the banks need to do. And we're investing heavily to sort of have the right sort of solutions to respond to it, right? So we feel very good about that change. And over the medium to long term, I think this will really put us ahead in the space, and it will allow us to drive growth for many years.
All right, that was the management, of course, of Orion Pro. The stock, of course, tanking on the back of a weak second half of FY26, which was largely impacted by the West Asia crisis, but almost down 9% as we speak. But, let's start taking all your stock-related questions, because this is Ask Profit. For viewers who are tuning in, you can either give us a call or send us your WhatsApp queries on the WhatsApp number that's flashing on the screen up there. Before we start doing that, just a quick check on the markets. The Nifty 50 is down by about 0.9%, largely today dragged by the IT space on the back of the OpenAI announcement. There's Nifty Bank, which is also down by about 0.7% in that 54,400 levels. The Nifty 50 heat map, if you can try to pull that up, is largely being dragged by names like TCS, Infosys, HCL, Tech Mahindra, Wipro. So all IT names putting that kind of pressure. On the flip side, you have ONGC, Hindalco, NTPC doing fairly well in trade today and trying to pull the Nifty up. Let's try to pull up the sectoral heat map as well as the broader markets then. The sectoral heat map right now is indicating clear pressure on the Nifty IT, which is now down about 3.6 odd percent, and Nifty Realty continues to be under pressure. Just a few good days for the Nifty Realty, and then last couple of days we've been seeing profit booking. Media, defense are some other names which are under pressure. Oil and gas and metals are the only two that are holding up. The mid cap 150 and the small cap 250 as well. In the broader end of spectrum is also under pressure. The small cap 250 slightly more under pressure as compared to the benchmarks, down by about 1.4%. The mid cap 150 down by about 0.9%. So that's with regards to where the markets go. But let me also welcome in our guests for the day who are going to be answering all your stock related questions. We are now joined by Swati Hodkar, AVP Technical Research at Nirmal Bang, and Astha Jain, Senior Research Analyst at HIM Securities, joining us now. Welcome to both of you ladies, and a very good morning to the both of you. The first question that we have is from Ramesh, who's writing us from Bengaluru, asking about Thermax. He's got about 2 shares at the levels of 3640. Sitting on a profits of around 1,500 rupees right now, wants to know if he can go ahead and book this profit and get into something like a PFC and REC. I believe that this is a short-term query that Ramesh is asking. So, Swati, I'll take this up with you. Would you recommend that trade?
Yeah, at the current rate, whatever the Thermax he's holding, I will suggest to hold on this particular counter because it has a potential to reach up to back towards 4,800 to 5,000 levels. No wonder from the last 2 trading sessions, we are witnessing a profits booking, which cannot be denied after such kind of a rally. I will suggest to hold on this particular counter by keeping a strict profit stop loss of 4,400 rupees and for a target of 4,800 rupees. About the PFC and RECL, as of now, I will suggest to hold on for some more time, but PFC looks good. If you're getting any dips towards to 435 to 440 in that range, you can definitely take a fresh long positions. For a short to medium term, the target will be a 480 to 490 levels.
All right, Suzlon is the next one. Lalita from Bengaluru has bought 955 shares at the levels of 61 rupees. Currently sitting on a loss of over 8,000 rupees. Wants to know as to what should be her next course of action. Astha, very good morning to you. Your view on Suzlon?
So, Suzlon, first of all, good morning to everyone. Talking about Suzlon, what I believe that yes, we are positive on the power space, and hence Suzlon is looking strong to us. Today also we are seeing some sort of a upside momentum despite the fact that markets are not in a very, very good shape. So what I believe that one should remain invested in the Suzlon because we believe that this counter is well poised to move. Demonstrated a very, very strong execution, and in fact their numbers were very strong. If I take about demonstrated a very, very strong execution, and in fact their numbers were very strong. If I take about the 9 months of FY26, so the number posted by the company looks to be very, very strong now. We believe that the strong order flow will continue to will continue to provide momentum to the company in its northward direction. So my idea here is to remain invested in this counter with a price target of 58 to 60 in the coming days.
Okay, all right. So that's the view coming in on Suzlon. The next one that we have is on KSH International. Our viewer Yogesh wants to know if this is a good decision, whether to go ahead and invest in KSH International for the levels of 638 is what he's asking. Not mentioned whether it's a short-term query or a long-term one. Swati, your view on the charts for this one?
Well, my view is positive because the counter has witnessed a very strong rally from almost 400 to now 700. Now it's struggling nearby the 20 days moving average, and if it manages to give the breakdown of 610 levels, which is acting as immediate support levels, then more profit booking can be seen into this particular counter, which will take a stock towards to 520. So if you are going for a fresh long position, wait for some more time. The counter is under the profit booking phase as of now. If you want to go for a long, wait for some more time. 520, 550 are the good levels to take a fresh long positions where the risk reward will be favorable. And we are looking for a target of 600 to 650 levels on the high side.
Right, okay. For viewers who are watching us, you can also call us on the number that's flashing on your screen up there. Just reminding you that you can call us, ask your queries live. Moving on to the next one, Harsha from Vijayawada is holding around 30 shares of Interglobe Aviation at the levels of 5,000 rupees. Wants to know whether to continue to hold from a short to long term perspective is what she's asking. But Astha, your view on Interglobe?
So here, the view is long term. First of all, my idea here is that one should remain invested in this counter for the long term purposes. Although what we know is that some sort of negativity is currently hovering around the stock in the terms of the sentiment, and we have also seen that there is a ATF price revision, and that is after this start of the Middle East conflict. So definitely that has create some sort of environmental impact right now on this counter. But going ahead, my idea here is that this company is going to benefit because there are certain positives which are working for this counter. First of all, it is among the few listed companies in the aviation space right now which are working, and definitely it has got the highest market share with its monopoly. So my idea here is that this counter is a fundamentally very strong counter. Maybe some sort of a news flow has impacted this counter in the short term. So short term idea is not there. It is only for the long term. If one is interested in, then definitely remain invested in this counter with the price target of 4,500 to 5.
So that's the view coming in on Interglobe Aviation. The next one that we have is on Stallion India. Ramesh from Vijayawada wants to know if this is a good counter to remain invested for the next 5 years. Asta, I'll stick with you for this one. Your view?
So Stallion India, what I remember is that the IPO came, and it came in January 25, if I am right with my memory, and that too at the price of around 85 to 90. So from there, we have seen a quite strong jump in this counter. Now, if I talk about the company, now the company's fundamental seems to be okay because this is the company which is a Mumbai-based company, and they are in the business of selling of refrigerant and industrial gases. So this business is really gaining traction nowadays, and this company has posted very strong set of numbers. It has already risen a lot from its issue price of rupees 90, because at that time they have come at the price to earning multiple of 22. So my idea here is that this company is worth investing in. We are very much positive in this space. In fact, Rifex Industries is also looking good to us in the same space. So Stellar India, definitely one should remain invested in. Price target is 180 to 119. If anyone wants to make fresh investment also, then also this counter is looking good to us.
Got that, Vyasta. And yeah, it's a recent IPO, January 2025, as Mahima is highlighting as well for this counter, but continues to be an interesting one to say the least. The next one coming in on Craftsman Automation. Now, this one has been a rank outperformer. We put the stock into focus a couple of days ago as well when the results came out. And Lavanya actually holds 400 shares at 9,230. So she's bought it just around that time as well when it hit that high, as you can see on the charts, and then corrected a little bit. But Astha, what's your view on the stock now? Because one of the peers essentially of Bharat Forge and has been doing very well over the last 5 to 6 years. Any view on the stock now?
So what we believe that their aluminium business is, is a major growth driver for the company. And in fact, whatever results they have posted in the Q3 of FY26, that were majorly due to the high other income which this company has shown in their financial performance. So idea here is this company is looking, very much decent to us, but not we are very much, overly optimistic on this counter. So idea here is just to stay invested in this counter because in fact we believe that aluminum segment will definitely can prove a impetus and can be a growth driver for the company. In fact, management has also indicated in their commentary that they are expecting some high teen growth in that segment. So that can be the growth driver for the company, and only for that reason, just remain invested. Otherwise, results were not very strong for the Q3 of FY26. Remain invested for the price target of 9,000 at the initial levels.
Okay, all right. So that's the view coming on Craftsman Auto. We've got our first caller for the day. Aruna, I think, is calling us from Hyderabad. Aruna, very good morning to you. What's your query about?
Yeah, good morning, ma'am. Good morning to all of you. I wanted to buy Oracle Financial Services, ma'am. So what is the price to buy? Like, what is the support point? And what is the resistance?
Okay, all right. Got your question, Aruna. I take this up with Swati. Swati, on the charts for Oracle Finance, what is the support and resistance that you're spotting?
See, the downside support is lies at around 88.50 levels, the support provided by the 20 days moving average. Since the counter is facing a trend reversals from the higher side because the counter was showing a negative crossovers from the overbought zone. So the profit booking cannot be denied. If you want to take a long positions, wait for some more time. 8800, 88.50 levels at the good levels to take a buying position.
Okay, all right. So that's the view coming in on Oracle Financial Services. But time for the F&O space setup, and we have Shar joining by as always to give us a perspective as to what are the cues indicating. And Shar, I think it's IT that's contributing towards the red today.
Exactly. Thanks a lot for that, Mahima. Yes, definitely for the second straight day, the technicals are turning weak. Yesterday also we saw only 3 or 4 names in green. Today also is just, we could say same thing happening again. Tata Steel, NTPC, Bharti Airtel in the green, but majority of them, more than 90% of stocks are in the red. Sell-off, of course, no major support coming in from the banking. You mentioned the IT space, TCS, Infosys, Tech Mahindra, HCL Tech, all of them spooked out on the recent AI developments as well, and Street may not be giving that much valuations comfort also for this IT space as well. India VIX continues to rise for the second straight day, so 2 straight days of negative sentiment and no major bounce also is coming in. Let's see what the stock specific moves are happening. Remember, the earning specific impact is more, but ONGC, Oil India, both of them up as a rising crude prices are there, and we can see a sustained up move in these counters as well. That's what the street is expecting. Apart from that, short build up we are having JSW Energy, of course, back on the earnings. The commentary is also not very strong. Big downgrade from a broking house and Persistent System. There's reversals happening. Last week we saw mid-cap IT stocks doing well, and now some kind of profit booking and reversal in the trade. Apart from this, the long unwinding, we are having Vodafone Idea, where we are expected a little bit of profit booking. After some clarification also comes in. Yesterday, the stock was up more than almost 8 to 9%. Macrotech developers, Loda, out here also we see some action happening. The stock is down 2%. Apart from the long unwinding candidate, short covering, not much to be honest when it comes to the moves. Canara Bank and Blue Star, they're just there itself, but no major trade happening. But overall, the sentiment in the markets and also in the small caps and the mid caps is on the negative side. So yes, we might see some kind of selling pressure in this trade as well.
All right, Shara, thank you so much for getting us those details, and what he mentions is correct, because the pressure right now in the broad end of spectrum is more as compared to where the benchmarks go. But let's start taking our next caller. Anjali, I think, is waiting by, calling us from Hyderabad. Anjali, a very good morning to you. What's your query about?
Yeah, very good morning to all of you, ma'am. Thanks for taking my query. I wanted to buy Voltamp transformer for long term, ma'am. So I just want to know the support for long term, not for proper long term support.
Can you define long term for me? What is that time period?
Like maybe 1 year, more than.
Okay, and you saw the technicals, if I'm not wrong, correct?
Yes, ma'am. Yes,
okay, all right, Anjali. I'll take this up with Swati then. Swati, from a 1 year point of view, where's the support that you're seeing for Voltamp transformers?
Whatever the history shows of 2025, we have witnessed that the stock was under the consolidation phase within the range of 8,000 to 7,500. So those are the very crucial support levels, I believe, because that was a consolidation phase. And once it manages to show the breakout of 10,000, we have seen a non-stop rally beyond 12,000 levels. So those support levels will act as a very good zone support level. So 8,000, 7,500 at the good levels to take a fresh long positions on FD dips to that levels.
Okay, so that's the view coming in on volatile transformers. Time for our rapid fire round. Swati and Asta, you both know the drill. The first one that we have is coming in from Manoj, who's asking about Indian hotels. He's bought 200 shares at the levels of 690. Wants to know as to what should be the next course of action for him for this count. It's down 2% on the back of numbers today, but Asta, your view on Indian hotels?
Maybe some more downfall to 700 levels. Hold is the strategy from our side.
Okay, the next one is from Satyan. He's asking about BEML and wants a technical view on the charts for this one. He says that is it advisable to keep a stop loss for 1880 for the next 2 months? Swati?
1880 stop loss. I will suggest a stop loss for 1820 rupees on a downside provided by its 20 DMA. So keep that as a stop loss and hold the long position.
1880 might be the target, I believe, if I'm not wrong. Yeah. All right. The next one is on Jubilant Foodworks. Naman Jain is saying that he's bought Jubilant Foodworks at an average price of 555. Wants to know whether they can continue to hold or not. Asa, your view on Jubilant Food?
Continue to hold. It may take maybe another 1 to 2 quarters to go to those levels, but it is a long-term bet, so remain invested.
Okay, Titan is the other one. Kaushik from Vadodara wants a long-term view on this one. Asta?
Titan is looking good to us in the long term. Remain invested in this counter. If someone has this counter in their portfolio, the price target of 4250 to 4300.
Okay, the next one that we have is on Grow. Our viewer has bought 65 shares at the levels of 206. Again, he's a long-term investor, wants to know if he can continue to hold this counter or not. Asta?
Maybe it will take some time to come to the cost price, but yes, a long-term view is positive. In the short term, we can see some sort of a pressure in these stock prices.
Okay, V2 Retail is the next one. Our viewer Gaurav from Bengaluru is holding 450 shares at an average price of 218. Wants a short-term view on this one. Swati, on the charts?
I would suggest to hold on by keeping a strict stop loss of 205 for a target of 225 to 230 levels.
Okay, the next one that we have is coming in on, this is a short-term view on RBL Bank. Vijay from Chennai wants to know as to what charts are indicating for RBL Bank. Swati?
Little bit cautious at the current momentum price because the daily chart shows the negative divergence. Downside, we can see a fall up to 320 to 310 levels.
Okay. Swiggy is the other one. Divya from Abu Dhabi says that she's sitting on a loss of 15,000 rupees. She bought at the levels of 385 and 125 shares is what she's holding. She wants to know if she can book these losses and buy something in the next 3 months that could recover her losses. Swati, anything on the charts that you're liking and whether this is the right thing to do?
I will suggest to hold on this particular counter because it's already trading at a low levels. No need to book your losses at a lower side. And for 3 months of time, markets are very uncertain. It's very short period of time. But definitely you can go for a long positions into the pharma pack, such as the Sun Pharma looks very good. But Swiggy, I will not suggest to book your losses. Wait for some more time. The stock has a potential to reach up to 300 levels.
All right. Okay. So that's the view coming in on the counter that Swati just spoke about. But viewers, with that, completely out of time on this edition of course, Rapid Fire Round. But time to slip into a very short break. We'll be right back answering more questions on the other side with Swati and Asta. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp.
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are tuning in, this is a show that gets all your stock-related queries answered. So you can either call us or WhatsApp us on the number that's flashing on your screen up there. The next question that we have is from Sindhu Menon, who's asking about Vijaya Diagnostics. She's got around 5 shares at the levels of 12.39. Wants to know whether she can continue to hold or sell. Swati, on the charts for Vijaya Diagnostics? Swati, I think you're on mute.
I'm really sorry, Maima.
No worries.
Yeah. As of now, I will suggest to book the profits at the current levels because the counter is already trading at overbought zone, and after such kind of a rally from 900 to almost 1400 levels, profit booking cannot be denied. So book your partial profits at least at the current market price. Second partial you can hold on by keeping a stop loss of 1240, and if you are getting any breakout of 1370, 1320 levels on the higher side, 1400 are the likely targets.
Okay, the next one that we have is on Lumax Industries. Murli from Bengaluru is holding 100 shares at the levels of 1651. He wants to know if he can add more for the next 15 odd months and whether he can expect a 12 to 15% return on this one or not. Swati, I'll stick with you for this one. Would you recommend that trade?
Maima, I will suggest to hold on for some more time because as of now, I'm not witnessing major price momentum into this particular counter. If you're looking for a average out position or the fresh long positions, any dips towards 5300 or 5220 are the good levels to take a fresh long position. So wait for some more time.
Okay, the next one is on Eternal. Our viewer has bought at the levels of 267 and 800 shares is what Baba Saab has bought. He wants to know if he can average out, wait, what should be the next course of action if he's continuing to hold this. Astha, your view on Eternal where fundamentals are concerned?
The fundamental seems to be okay because what we are seeing in this counter is that the profitable growth is the factor which is continuously driving the company's stock price momentum because they are continuously showing the profitability. In fact, the quick commerce business and the margin delivery business, I mean, they are both working well for the company, and whatever they have posted in the number was also on the expected lines. So my idea here is that yes, Eternal Q4 FY26 performance was a decent one and it has a potential to show more upside from here. Maybe market conditions are not supporting stock prices at this moment of the time. So maybe it will take another 6 months to go till those levels. But 300 is what we are recommending as a price target to this counter at the initial level.
Acme Solar is the next one. Bhairav is asking whether he can continue to hold the 2,200 shares that he's bought at the levels of 292 and wants a one-year view on this one. He's saying that the stock went down despite of a strong Q4. Astha, your view on Acme Solar?
So if I talk about the Acme Solar, yes, their earnings looking to be stronger on the stronger side. And in fact, what we believe that their EBITDA will grow at a CAGR of more than 10% from the coming FY25 to 28. So we are positive on this counter and we are recommending a hold on this counter. In the short term, the valuation is the factor which is not letting these stock prices to move upwards from here. But in the long term, it will be very much, going in tandem with the historic valuation. So it is a long-term story and remain invested in this counter with the price target of 320.
Okay, the next one that we have is on Sterlite Technologies. Jai wants to know whether what upper levels can be expected for Sterlite and whether entering at the current price level makes sense or not. Swati, your view on the charts?
My view is definitely positive. The counter has a potential to continue this kind of a rally at least close to 430 to 435 levels. So you can definitely hold on the long positions. Or if you want to enter into this particular counter, wait for some more time. 390, 380 levels are the good levels to take a fresh long positions.
Okay, so that's the view coming in on Sterlite Technologies. The next one that we have is on Bazaar Style. Balwant Modi from Rajkot is holding 38 shares since the IPO. Wants to know the future prospects of this company. Asta, Bazaar Style, what's the view?
So I think the view is positive, but in the long term, not in the short term, because in the short term we need to see how the margin trajectory will be going in the favor of this counter. And in fact, from its issue price also, it has not seen a very strong jump. So we were at the time of the issue also, there was some valuation factor which was not looking so good about this company, and hence we have not seen this stock prices momentum to be on the very much positive side. In the long term, only one should remain invested in, but we are not very much confident in the short term about this counter.
The next one that we have is on Maruti. Anjali from Bengaluru wants to know if this is a good time to enter the counter or not. Swati, what are the charts indicating?
See, the counter is under the selling pressure, and today it has given the breakdown of a 20 days moving average also. I believe that the profit booking is likely to be seen, or the selling pressure is likely to be seen. Fresh longs can be added on any dips close to 12,800. Those levels are very attractive levels where the risk reward ratio will be a favorable, and the upside short term target will be a 14,000 levels. So wait for some more time. Any dips towards 12,800 should be utilized to take a fresh long position.
Okay, the next one is on Infosys. Siddhartha from Bengaluru is saying that he's holding 10 shares at the levels of 1174. He says that it's trading near its 52-week lows, and whether he should wait for whether he should remain first of all invested or not, or whether he should wait for IT sector's global headwinds to clear first. Asta, what is your overall view, first of all, with regards to the entire space? Because we've talked about how the OpenAI announcement, every time that it comes, whether it's from OpenAI or whether it's from Anthropic, the IT sector gets, the knocking. Do you think that somebody who has remained invested, stayed patient with the IT sector should remain invested, or it's time to, book losses or profits wherever they're sitting at?
So I think for a longer term perspective, one should remain invested in. Yes, what we are seeing is that the kind of news flow which is going around the IT sector with this AI factor, along with the fact that we know that the guidance was also weak for this counter. In fact, they were able to sustain their margin just on the basis of the cost, reduction. But if we look at overall growth perspective, that was not seen to be very much positive for this counter, because what we have seen that their deal conversion was also very weak, and the growth outlook, which is a major point for any company, so I think that is also very weak. So maybe it may take another 6 months for these companies to show some strong upside momentum. So it is a long-term story, and for the IT sector, if anyone has a perspective of more than 1 year, then they should remain invested in, because I don't feel that in a time period of less than 1 year, these counters seems to be showing very strong set of a number. So it will take whole lot of at least 3 to 4 quarters for them to go for the good set of numbers. So if the time perspective is a long term, then remain invested in. If the perspective is a short term, then try to book profit at every higher level.
Right, so that's the view coming in on the entire IT space. But the next one that we have is on Nestle India. Sridhar from Bengaluru wants to know if current price is the right price to make an entry into this counter. We've seen a extremely good Q4 performance from this one. A 500 crore beat versus estimates is what we saw for Nestle. And the commentary also remains positive going forward in FY27. Asta, what would you recommend for Nestle?
So recommendation is quite positive because they have posted double-digit growth in their some portfolios. In fact, their revenue growth is also looking very, very strong to us because it was a 20% plus growth which the company has posted. My idea is on the back of a very strong set of a number. Definitely, this quarter seems to be very strong for the company, and the coming quarter, that is, I'm talking about the Q1 of FY27, will also be looking very strong, and the Q2 of FY27. So, first 6 months of FY27 is looking good for the FMCG counters. And my idea here is to stay invested in this counter, and buy on dip strategy can also be applied. Price target can be set at around 1700 odd levels at the initial point of time.
Okay, one more query, I think, coming from the FMCG space. Sai from Hyderabad is calling us, and I believe has a query on ITC. Sai, go ahead, ask your question.
Yes, I'm having ITC shares for quite while now. So, what will be the best time to book my profits? I'm having 250 shares actually. I'm a long-term investor for 2 to 3 years actually. So, if not, suggest me any other counter in FMCG or something else.
Yeah, got your query, Sai. I'll take this up and stick with Asta for this one as well. But I mean, you have to be a patient investor when it comes to ITC, right? It is something that compounds over a period of time. Would you recommend him to continue to hold, Asta?
Is till 21st May when the company is set to announce its numbers.
Correct.
So I think before numbers, I think there is no logic of exiting this counter. Let's wait for the numbers to come in. Despite the fact we know that yes, the company was able to post some healthy performance in the quarter gone by, and their cigarette volume is working in favor of them, because in the previous quarters also cigarette volume has shown a strong growth of around 6 to 6.5%. And in fact, FMCG growth was also looking very good to us. So we are believing this quarter to be a strong quarter for the company, and believing great set of numbers from this. Keeping my fingers crossed, but I think it's better to wait till the results get announced, at least till 21st May.
For sure. I think FMCG is going to do the heavy weight lifting for the next year as well, because of the entire tax change in the tobacco space. But most certainly, a good quarter is what we're expecting from ITC. The next one that we have is from Padma, who's writing us from Bengaluru, asking about Uno Minda and wants to know as to what should be the entry price based on the charts for Uno Minda. Swati, your view?
My view is positive in this particular counter. The entry price will be at around 1100, 1120 are the good support levels provided by 20 DMA. So those levels are the good levels to take fresh long positions. The short-term target, it will be at around 1240 to 1280 levels.
Okay. The next one that we have is coming in from, this is from Kalpana, who's writing us from Muzaffarpur. She's holding 250 shares of HFCL at the levels of 130. Wants to know whether she can hold for the next 3 to 6 months or not. Swati, your view on the charts?
I would suggest the counter has already given a very good rally from almost 73 to 150 levels. Partial profits book are recommended at the current market price. And another half you can hold on by keeping a profit stop loss of 140 rupees on the downside. If the stock manages to hold such kind of a strength in this kind of a market, then it has a potential to reach up to 160 to 164 levels. But partial profits are recommended at the current market price.
Okay. The next one is on the banking space. Gary wants to know if this is a good time to buy SBI and HDFC Bank. Asta, while SBI earnings were disappointing, HDFC was, a stable quarter is what we can say. But overall, from a long-term perspective, do you think these are two good bets to invest into right now?
Not right now, because what we believe that SBI on the back of a number may show some more downfall from here. So it will give opportunity to go, or to move from here in the upward direction, but not at this present point of a time. Maybe after some days, I suppose. So 965 it is quoting right now. We believe that this stock has a potential to move more downside from here. Maybe entering at a price level of 900 to 910 is better at this moment of a time. So SBI is looking good to us, but not right now. At the lower level of 900 to 910, buying is recommended. For HDFC Bank also, we believe that HDFC Bank will not fall more from here. But again, it will start showing some sort of a, sideways momentum. This is what we believe, because the numbers were not very much encouraging, and now the markets are not looking, this counter as one of the premium counter in the banking space. I think ICICI Bank is looking better in that case. So HDFC Bank may be moving in some sideways direction from now. But among between these two banks, SBI is looking good to us, but strictly buy on dip strategy should be applied for that counter.
Okay, all right. So that's the view coming on, for SBI as well as HDFC Bank. In fact, Murli was calling us from Hyderabad. But Murli, I think we've just answered a query for HFCL. So you can just rewind back on our YouTube channel and, get that answer for yourself on this counter. The next one that we have is from Ramanan, who's writing us from Tamil Nadu and wants to know about Bank of Maharashtra. He's bought 3,100 shares at the levels of 65. What should he do next, Swati?
At the current level, I would suggest to hold on this particular counter. We might witness some sort of a profit bookings, which will take a stock towards to 78 to 77 levels. But you have to keep a longer term vision on this particular counter, because it's very slowly and steadily it shows the uptick rally. For short term to medium term target, I'm looking for 86 to 88 levels on the high side.
All right. There's an annual business summit that is organized by CII, and that's happening right now. And Uday Kotak is addressing that. Let's listen to what he has to say.
Power becoming the rule of life, and that is back to tribalism. That's back to a world which none of us have seen in the last 80 years. And frankly, markets also are playing on a fundamental theme, which is reversion to mean. And let's ask ourselves the question, even if the probability is 5, 10, 15, 20% of a structural change, how are we going to see that structural change? And what are we going to do as a country and each of us in our respective businesses? There is very little time we are spending to the fact that this time could be different. Because this is the classic cry wolf's mindset we have all lived with. And every time there has been a wolf is coming, the wolf has never come for the last 80 years. And we are naturally inclined that the wolf is not ever coming. But pause and ask, what if? And in that scenario, the key thing for us in this room is, how do we as India and Indians plan for this? There is a tendency in most of us to either be excessively optimistic about how things will play out or excessively pessimistic. But we need to be real, we need to be strategic, we need to be smart. And in a tribal world, what matters is control over assets, a strong balance sheet, supported by a P&L in a country. So the balance sheet and profit and loss account of a country needs to get much stronger. And ability to generate revenues by a country through its resources or its companies will determine the destiny of each country. The United States is powerful not just because of the reserve currency. The United States is powerful because it has extremely powerful companies.
In fact, from the same summit, CAV Anantha Nageshwaran is also addressing the annual business summit organized by CI. Let's hear him as to what he has to say.
Several other countries which in more peaceful and less uncertain times were able to get their manufacturing sector to have a large share of GDP. We all know that micro, small and medium enterprises in those countries played a very important role. And they are not technological backwaters. They in fact are at the forefront of technology and innovation in those countries. Whether you look at Japan, Germany, Switzerland, Sweden, and Korea, and more recently China, etc. In all these cases, micro, small and medium enterprises were actually one of the fountainheads of innovation and technological sophistication. How do we get our micro enterprises, which are relatively smaller in size? If we look at them, more than 90% of them are in the employment strength of about between 1 and 5, including the founding entrepreneurs. There are multiple areas to focus on. I will focus on the importance of trade skills. No manufacturing enterprise in the country, regardless of the size, can function without skilled human resources. And those skills will also today have to be such that makes them important and indispensable to the enterprise, so that they are not replaced by either artificial intelligence or down the road by industrial robots. So trade skills, where human judgment, skill, and craftsmanship are important, would be the areas like carpentry, electrical, plumbing, mechanical, civil. So how do micro and small enterprises make sure that they address this aspect in their own enterprises, so that their employees don't feel insecure and threatened by the technological developments, and they can be a source of such human resources to large enterprises? The first step is to have the entrepreneurs themselves invest in such skills personally and set an example, no matter how small their workforce is. And making sure that even their employees, no matter whether they are in service areas like human resources or accounting or inventory management, etc., also invest in at least one or two of these trade skills. Because that is also the pathway to growth. Even if the employment strength of the average micro enterprise in the country from the range of 1 to 5 were to double, that itself.
That was a Chief Economic Advisor, Arantha Nageshwaran, addressing the CI Summit. But let's, circle back to all your stock-related questions. We've got R. Ramakrishnan, who from Tamil Nadu, who is writing in and asking about ICICI Bank. He says he's got 75 watt shares, wants to know whether to hold or exit. He's not given the price point, but Swati, your view on the charts for ICICI Bank?
The longer term view is definitely positive, but short term, medium term view is a little bit cautious because the counter is trading in the low tops, low bottom formations, and we might witness the low towards 1200 to 1220 levels. So for a short medium to longer term view is positive, you can definitely hold on your long positions. And if you're looking for any average positions, wait for some more time. Any dips towards to 1200 should be utilized to build up the long positions.
Okay. The next one that we have is on Grow. Jayavardhan from Kapata is asking and wants to know if we can enter into Grow right now from a short-term perspective. Swati, I'm not sure if we took that question in the rapid fire round. I've forgotten, but your view on the charts for Grow, it's down 4% as we speak.
See, my view is a little bit cautious in this particular counter. No wonder it has a very cluster support zone of 184 rupees on a downside. But if it gets breakout on a downside, then one more selling pressure can be witnessed, which will take a stock towards to 175 to 170 levels. So fresh longs are not recommended at the current market price. Wait for some more time.
Okay, of course, this stock is today down on the back of the block deal that we saw on the street today. But the next one that we have is on, okay, we already took this question. The next one is from Jaya, who's writing us from Bengaluru, asking about HAL. She's got it at the levels of 4438. She says she's been holding this since the past 2 years. Wants to know if she can exit since it's not crossing the 5,000 mark. Astha, your view on HAL?
So view is, yes, this counter is not able to show its full performance in the last few days. But what I believe that in the coming days, definitely we believe that this counter can touch the level of 4,900. So 49.50 are our ultimate target for this counter. So just stay invested in. It may take another 6 months from here that this counter will take the time to touch those levels. But if we see their order pipeline, it is very, very strong. If we see their fundamentals, fundamental seems to be on the stronger side. So just remain invested in this counter for the price target of 4,900 to 4,950.
All right. Okay. The next one that we have is coming in, and this is from Mirza, who's writing us from Bengaluru, asking about Z Entertainment. Wants a short-term target for this one. He's bought 10,000 shares at the levels of 95. Swati, your view on the charts?
As of now, the stock is trading nearby the support levels. Only 8,800 are the support levels. So as long as it holds those levels, we can witness some sort of a pullback rally, which will take stock overs to 94 to 98 levels. So you can hold on this particular counter, but place a strict stop loss of 88 rupees.
Okay, time for our second rapid fire round. Swati and Astha, keep your answers as short as possible. The first one is on Cochin Shipyard. Surendra from Bengaluru has bought 50 shares at the levels of 1919. From a long-term perspective, continue to hold average. Astha?
Continue to hold with a price target of 1750 to 1800 of the initial levels.
Okay, Vadi Energy, 16 shares bought at the levels of 3197. Swati, this question is for you specifically. Opportunity enter when the stock goes down. Is that the right way to read the charts?
Yes, perfectly you were saying that. 2900 to 3000 levels are a very good levels to take a fresh long positions. Wait for some more time.
Okay, Cupid Limited is the next one. 500 shares. I'm just smiling because we get at least one question every day on Cupid, and our viewer has bought 500 shares at the levels of 105. Wants to know a long-term view on this one. Astha?
Long-term view is positive, but 105 is the cost price, so definitely book partial profit, or at least book profit in 25% of the quantity held.
Okay, Britannia bought around 5353. Can I wait, or what should be the target price on this one? Swati, your view on the charts?
My view is positive for longer term period, but definitely short term targets lies at 5700 to 5800 levels. So you can hold on the lots.
Okay, ABB India, 5 shares bought at the levels of 6380. Can I add more at this level from a long term perspective? Udit from Mumbai is asking. Astha?
No, not at this counter at this level, because results were not very much supportive. So this may take more beating. So just invest in whatever quantity you have. Don't add more.
Suntech Realty, 450 shares bought at the levels of 344. Hold, book loss. Swati, on the charts?
At the current level, I will suggest to hold on, but place a stop loss of 310 rupees on a downside. Upside 340, 350 can be sweet.
1800 shares of Reliance purchased at the levels of 1368. Should I hold or sell? Swati, on the charts?
Reliance, definitely you can hold on at this particular counter. Wait for some more times. 1440 to 1450 levels are the good levels to book your profits.
Natco Pharma bought at the levels of 800. Should I book profits or continue to hold? 1000 shares is what Ram from Hyderabad is holding. Astha?
Continue to hold this counter. Price target can be set at 1250 to 1300.
Protein Egov is the next one. Dr. Mohan from Vizag has been holding since the levels of 1530. He's sitting on a loss of around 1.6 lakhs. Should he shift to something like an E2E networks is his question. Astha, what is your view?
Although losses here are huge, so yeah. I think book these losses at a higher level, not right now. Let this counter move till the level of 560-70, which I believe it should. Then start booking out some of the quantity and don't shift to E2E network at this point of time.
Okay, Power Grid 100 shares bought at the levels of 317. Soumya from Bengaluru wants to know, so what should she do? She's sitting on a loss of around 1,000 odd rupees. Swati, on the charts?
Place a stop loss of 305 and hold your long position for immediate target of 320 rupees.
Alright, that brings us to the end of this rapid fire round. Astha and Swati, thank you so much for taking out the time and helping us answer all those stock related questions. Viewers, we're completely out of time on this edition of Ask Profit, but do stay tuned. KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, one of the best shows in the KYC segment where we find you companies where is there any alpha left or any other stories which we recover and get you. But before that, let's give you some hints. Try to guess the company today. It's of course a good decent mid-cap company. It's been buzzing all of lately. It's the second largest manganese ore miner in India. Hold your thoughts. The company is also the third largest iron ore miner in Karnataka. Of course, you'll be guessing this. This is, of course, largely the business is in Karnataka for this company. But recently, the numbers were phenomenal and a strong FY27 outlook also has come in for this company. The stock itself is up 36% from March lows itself. I've given you the hint of Karnataka. That's where majority of these resources are. And the company in focus is Sandur Manganese and Iron Ore. This is the company. It's also called SMIORE. That's the short form, SMIORE. But why are we calling this company? इस company में क्या खास बात है जो हम इसको KYC में लेके आए हैं? Let's talk about the first question. Why? Of course, the numbers were very strong. And how did the operational numbers pan out for this company? That's what we'll be asking. Second question we'll be asking with the management is the steel market volatility. Is that impacting the product portfolios? We have seen a lot of expenses have gone up. Is it impacting the company? Is there a pass-through? And also the pricing changes which are happening in the manufacturing industry. We'll compare that with this quarter with, of course, the sequential quarter as well in our analysis. Apart from that, we'll be asking the management how are the past acquisitions shaping up? इसका benefits कब से आने लगेगा इनके numbers में? That's a very important question. And the FY27 plans, especially for specialty steels, the way the government is pushing ahead and the Urja Steel, that's what they have actually acquired and integrated into the company. The manganese ore and ferroalloys, coke, key trends and the realizations volume. कहीं पे realizations बढ़ा है, कहीं पे realizations घटा है. Government initiative for the infra spends, and that itself also augurs well for the iron and steel industry. एंड ऑफ कोर्स जो ओर्स आते हैं वो यहाँ से आते हैं. FY26 record breaking year, but FY27 is the outlook more better than FY26? Let's see that. But of course, the stock has run up. To give in the perspective, we'll be joined in by Bahirji Ajay Ghorpade. He is the MD at Sandur Manganese. But let's try and understand the company. What it's all about. Of course, it's just not only manganese, there is iron ore and there are some other steel related products also. It's a flagship company of Karnataka based Sandur Group and it was incorporated in the year 1954. Also, let's talk about the facts of the company. It's the second largest manganese iron ore miner in India and third largest for iron segment in Karnataka state. Apart from this, looking at the mining reserves, they have leased up to 2033. Now, of course, these are the important mining tons which they can actually work at. Apart from this, also let's look at the manufacturing of other products. There is ferroalloys, there is coke at its plant in Vyasankar. It's near Hospet. These are all places in Karnataka. And the manganese ore is primarily used, if you must be wondering, in the production of iron and steel. So this is a very important point. Write it down, note it down, share a screenshot. And the current capacities, look at that. These are the current capacities in million tons per annum. Key products, of course, being ferroalloys and manganese ore. But apart from these current capacities, let's talk about how the numbers have been. And these are the FY26 numbers. Production 15% on a year-on-year basis, growth and sales. Look at that, 93% of that. And that's what is reflected in the stock prices as well. Looking at iron ore also, sales not so much, it's just up 2%, but the production levels that has also gone up. Remember, the lot of critical resources is required and the way the growth is coming in the copper, manganese, iron ore, seems like there might be a multi-year up move in the sector. But of course, that's something which time will decide. The new growth engine is the steel segment. And this is the cumulative capacity coming in for the steel manufacturing capacity. Also, let's look at the focus on it. And remember, the government is also focusing on it. So you can expect some good announcements and that is where the company will be focusing. But yes, right now the contribution is on the lower side. For this new growth engine, look at the key clients. They have got all the major OEM players, be it two-wheeler or the four-wheeler segment. Apart from this, also let's look at the Q4 earnings. The earnings are very strong. There are other key factors also, it's like to point out, and this includes the manganese ore realization. That has gone up 7% on a sequential basis. But on the iron ore side, it's down, largely flattish to down 1% on a sequential basis. And interestingly, the standalone debt, that is something which I have really liked. From FY25, it has come down from 0.4 to almost negligible status. So on a standalone basis, company net debt free ho chuki hai. That's the bottom line. Return ratios have always remained strong. Remember, ye private player hai mining segment ka, and of course southern region mein they do have a good monopoly. Realizations have improved in the month of April. We checked amongst the key products as well. So there is some kind of a positive momentum. But why there is bullishness in this counter? The valuations are still remaining attractive. Apart from that, also strong DI and HNI interest is there. The record volumes were there seen last week as well. That means there is a good absorption coming in the market. So this is all about Sandur Manganese. I try to give you the entire picture about it and what's my opinion on the bullishness of this counter. But let's try to understand, the important rating parameters where we judge a company in KYC, and that's very much important. The holy grail of accounting, income statement, balance sheet, cash flow, we get you that. Return ratios में हम आपको ROC और ROE दोनों लाके देते हैं. Shareholding, we'll try to understand how things have moved over the last 3 years. And street cred also, the long-term investors and for medium-term investors, how much returns or the money has been made in your pocket. Valuations, we'll try to compare it. They have comparison is moil here. So that's an interesting take we'll take on valuations. And the outlook, that is where management has given a lot of important outlook for FY27 and we'll try to decode all of them. But let's start with the first one, and that's the income statement. Let's get the numbers and look at the 3-year CAGRs. This is the right-hand side of the screen. Look at that numbers. This is where the growth is happening. And these are the key numbers to look out for. Revenue देखते हैं, EBITDA देखते हैं, PAT देखते हैं, तीनों के CAGR देखिए कितना ऊपर आ गया है. Let's talk about the earnings also, how things have panned out. I mentioned you the key earning pointers, also the realizations went well. And on a sequential basis and a YOY basis, look at the PAT number. This is something to look at. That has also gone up 51%. Let's look at the margins, how things have moved. It's been a very stable kind of a business model, ranging between that 23 to 26% sweet spot, and the company has maintained it. Remember, a lot of operational headwinds come in. कभी कभी क्या होता है, भाव बढ़ जाता है, but the way they are backward integrated, the operational efficiency tries to offset that, and that is why they're able to maintain the margins, and that's a very good sign for a company. So it's a strong thumbs up when it comes to the income statement. Let's look at the balance sheet, and I've given you a hint that the company had reduced its debt, and look at that borrowing from the 1335 crore, that debt has come down to 578 crore rupees. Almost 88 crore of cash balances are definitely there, and that is where a strength comes in. And of course, you can expect a ratings upgrade, and of course, the company is having a good borrowing profile. So it's a strong balance sheet the way they have managed it. So that's pretty strong as well. So we spoke about the income statement and balance sheet where the company is passing its flying colors. Let's see if cash flow does it hold or not. And yes, the cash flow segment, there seems to be a turn. I've just taken the last 3 years in my analysis. Then the overall FY26 numbers is something to look at, and this is where we see that also turning positive as well. So of course the cash flows is also coming in, and remember, this industry, the gestation period is high. So the company is doing decently here, but we need to give it more data to it to understand. So because of the nature of the business, I don't want to give it a strong thumbs up. I would be giving this a neutral rating. So we have done 3 of them. Return ratios is something I'd like to talk about, and look at the return ratios, the way they have pulled things out. Remember, अगर ये ज़्यादा खर्चा या capacity expansion करेंगे तो return ratios में दबाव देखने मिलेगा. But right now it's not happening. In case they do some major capex activities, then some issues might definitely have. But right now, as of now, the ROE numbers are strong. ROC is the same thing. In FY24, it was 15%, and then you see the way it has held the ground and actually increasing. Now, will this be the highest, or will it sustain and go touch the 30% mark? That's the question. But abhi ke liye return ratios is very strong, so I'll be giving this a thumbs up as well. Let's talk about shareholding, how things are moving. And shareholding, definitely the promoter stake is unchanged at 74%. But I do have a little bit of complaint. FIs and DIs are not increasing the stake. This company is doing so well. The valuations are also at times decent enough. But why the FIs, DIs are not increasing their stake? That's the big question for me. A very minor increase from 1 to 2%. Of course, it looks like the float definitely is, kind of on the lower side, and that's what we are seeing in the company. But we would definitely want to see some larger FIs and DIs also coming in this company as well. And because of that, I'll be still giving this a neutral rating when it comes to the shareholding. Apart from shareholding, let's talk about street cred and how much money has the company made for the retail. That's one of the most important questions to be asked. That's a key reason to be in the stock market. We all need profits, and this is what we see. March lows, the stock is up 36%. But if you take that 1 year basis also, the stock has given 34% returns. And congratulations to the folks who are holding this stock for more than 2 to 3 years. It's a multi-bagger for you. The stock is up 669%. To put that in perspective, 7 times, the stock has given the returns in the last 5 years. That is how a multi-bagger is there. But from this case, of course, the base becomes higher. Will the stock continue going the momentum? That's what we need to look for, and that's why we need to study other key parameters as well. So as of now, street cred, I'll be giving this a strong thumbs up. Let's have a look at the valuations, and interestingly, MOIL makes it to the list when you are comparing that with Sandur Manganese. But I did a little bit of data crunching, in the 5-year average P, if I talk about, it is still expensive at 21 times. Now compare that with 17.5 times for the 12-month trailing P numbers, and compare that with MOIL. It is still cheaper. Despite the run-up, it is still cheaper to its 5-year average P. It is still cheaper to its peer as well. That means value abhi bhi hai. So because of that, I'm going to give this, in the peer comparison for the valuations, we could say a strong thumbs up. The company is doing really well in the show. Let's see if we can continue in outlook. That's very much important. And I was reading their presentation, very detailed way of putting things out. They are mining fully utilization of the entire 4.5 million tons per annum iron ore facility. That means 100% capacity पे काम हो रहा है. MPAP, the maximum permissible annual production limits is the full form. That means the work is going on. That's a very key trigger when you understand about the natural resources, how much we need, and that company itself is in the first line of the chain. The improvement in the domestic and benchmark realizations in April, that augurs well, especially for both manganese and iron. And the downhill pipe conveyor system, it's expected to be operational in first half FY27. This is like an important, you could say, a phase which helps in the backward integration, and that aids well in the margins as well. Ferroalloys is seeing an initial signs of recovery, so we need to wait it out, get some data. Maybe for the first quarter we'll understand more from the management, and more supportive operating environment is coming for the iron and steel industry. We heard about the dumping duties announced by the government, the PLI schemes coming in, and the anticipation of a stronger performance from Urja Steel in FY27. That is where we'll be also watching out for. Of course, the contribution won't be that high, but definitely it's a high growth business. Potential to increase the production from the existing capacities, that's also definitely there. So outlook remains standout, and we had seen a good stock spike when these announcements were there, especially the outlook. So it's a strong thumbs up when it comes to Sandur Manganese outlook. Let's revise the numbers. We have given a lot of analysis on this counter and to see how things are panning out. The income statement, balance sheet have been really strong. Return ratios for a private iron ore miner, that's very strong, up almost 20% plus for both ROC and ROE. And looking at shareholding, of course, there is a complaint. FIDI holding is less. There's a lack of analyst coverage also. Maybe it's on the flows front, but definitely a lot of FIDIs are watching our KYC show should take note of this company in KYC segment. Street cred, largely it has been good for both medium-term and long-term investors. Valuation still cheaper compared to its average and its peer MOIL. And outlook is something which the street is really bullish on. So net, I would be giving this 7 out of 8. This is a final rating coming in for Sandur Manganese, one of the highest ratings. It's there and we have justified it why. But to understand a little bit more about the company, we will be joined in by Bahirji Ajay Ghorpade. He's the MD at Sandur Manganese, and there's a little snippet about him. Pretty interesting. He took charge in June 2020. He's a second-gen entrepreneur, and also he has been very instrumental in the growth for the company. He's also the chairman and MD of Urja Steel, the arm which I was talking about. And interestingly, he has an education from Harvard Business, and also he's a qualified CS as well. So we'll be getting you all the details from the management, but just after the break.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Welcome back to KYC, and we're joined in by Bahirji Ajay Ghorpade. He's the Managing Director at Sandur Manganese. Good afternoon, Adir. It's always a pleasure to have you, Bahirji. And the first question I'd like to ask is, what led to this growth in the fourth quarter? The EBITDA numbers are also pretty high. How does these factors pan out for the company?
First of all, thank you for having me. See, Q4 was the strongest quarter of the year that finished, FY26, and the Q2 and Q3 were slightly challenging. You know, the market outlook was also challenging. That point of time, the market was subdued. However, Q4 was a strong rebound, and market factors also started favorably supporting. At the same time, we could also achieve the best revenues from a quarter perspective, and that's how you see the best results of the quarter four.
Definitely, Bahirji, but there is a volatility in the steel market. Now, how is the impact coming on your product portfolio? Any adversity here?
First of all, from a mining perspective, we see a lot of good demand for the steel industry. And of course, the prices were up and down for some time. However, the Q4 again started showing good signs of rebounding. So, from a domestic demand perspective, from a iron ore and manganese ore perspective, it has been quite strong. And I see that continuing because the steel industry is on a growth path, and correspondingly, the mining industry also grows.
Right. Bahirji, how did the pricing change for the manufacturing industry? Now, compare that with the fourth quarter with, the sequentially the third quarter.
Q4, I think, was a point of time where again the prices started rebounding. Of course, last year was quite a challenging year from a global perspective also. There were a lot of discussions with regard to the tariffs going back and forth, and later on the geopolitical situation. However, through that, I see that Q4 onwards, again, the Indian manufacturing industry has again started showing very good signs of rebounding and being stronger from a steel perspective, and even from a automotive perspective, considering we have a good presence into specialty steel through the RJ Steel acquisition that we did about 18 months ago, and now we see that it is definitely doing well, and the Q4 was the best quarter from a specialty steel perspective too.
Right, Bahirji, I just want to understand much more about the specialty steel segment. How's the push looking like? And these acquisitions which were there in FY27, how are they planning out, and when the benefits will start coming in?
The Sandur Group is a group known for its presence in the mines and metal space, and we are a more than 7-decade old entity. So our presence has been mainly in the mines and metal space, and that's how we thought 1.5 years ago that we should get into downstream value-added steel making, and we did this acquisition, which was quite a significant step at an enterprise value of close to 3,000 crores. And we see that we have completed a full financial year of that organization being part of our group, and we see very good performance, and the turnaround also has been very strong. And going forward, we look at growing further in the specialty steel space, considering our background into mining, and we see that it is a very good value addition and integration from mine to a specialty steel product. So this is something we are definitely focusing on for some time to come.
Right. Bahirji, apart from that, let's also look at the key details about your products. Manganese ore is there, ferroalloys, there's been a good jump in realization, but of course the coke area that itself was impacted. How are you seeing these realization volume trends?
See, first of all, I would like to say this completed financial year has been a record-breaking year in terms of achievement of top line. For the first time ever, we have crossed 5,000 plus crores of top line and the highest ever EBITDA achieved. Now, coming back to what you mentioned with regard to coke and the ferroalloy segment, if you see the previous year, there was a significant negative of almost close to 100 crore. But however, this year it is a complete turnaround and it has turned positive. And from a coke business perspective, we have conversion agreements in place, which means that we convert the 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 company who wants to take coke from us brings in the coal and converts it. We convert it and give it back to them. So that the volatility with regard to the coal prices we are safeguarded from, and then and also the downside risk of losses also we are safeguarded from. But what is the advantage we gain is the power that gets generated as a co-generation power from the waste heat recovery, which gets fed into the ferroalloy production. And the ferroalloy production sees a good upside. Now, coming to the manganese ore perspective, manganese ore is one of our major products in our mining segment. We are one of the top three manganese ore producing companies in the country. We did achieve record production levels. Also, we achieved a record highest ever sales, which was about 4 lakh tons finished the FY26. Which is again very good. And I see that going forward, the manganese ore definitely will be stable and grow in demand because India is a net importer of manganese ore, and manganese is something which is one of the most important alloying material that goes into steel making, and which gives various properties to steel. So manganese ore is one of the very important products, and I see manganese ore doing very strong in the times to come.
Right, and also the government initiatives for more infra spends. How does that happen in the long term? A lot of initiatives are at play. Just wanted to get an industry perspective from you.
See, this is a very encouraging sign for our organization because we are in the core raw material space. Starting from the iron ore and manganese ore, and iron ore is the base material that goes into steel making. So any growth in any of these sectors, be it infrastructure, public infrastructure, or construction, or even the automotive space, or even the railways that has got so much of impetus. So all this definitely is a very encouraging sign. So we have always focused on integrating from ore to the finished product. That's how we getting into specialty steel making and creating value-added products again has helped the portfolio of the company diversify itself, also not only mitigate risk but put ourselves on a growth path. So that is what we have done. And if you see the trajectory in the last 5 to 6 years has been exponential. And we are looking to create the best value for all our stakeholders through this. And again, we have assembled a very good team, and because of all the team effort, we've been able to achieve this. And we look to continue this going forward.
Right, and the last question, Baiji, is that FY26 was a record year. We discussed that the fourth quarter. FY27 outlook is something which, a lot of things are written on a lot of sectors, and I really liked it the way the forward-looking statement was there. Just wanted to confirm with you, what are the key details from that?
See, first of all, I think year on year in the past few years, we have gone on strengthening our foundation. And we have reached, and year on year, we've been growing at a significant CAGR. Now, going forward, I see FY27 being a further stronger year, considering our stronger presence in the upstream, and also now with the downstream, which is the specialty steel making, which has stabilized. We look towards further growth. And also we look towards certain important projects which will add a lot more value dimension to our product portfolio and growth. So that is what we look towards in the time to come.
All right. Thanks a lot, Baiji, for your time, giving us a total perspective and the views of the company. and of course the outlook ahead. It's always a pleasure to have you and of course the second gen entrepreneurs. That's where we get a lot of more data for, and that's why we have got Sandur Manganese for you. So for interesting stories like this, stay tuned to NDTV Profit and keep watching the best show in town, the KYC segment.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world.
Prime Minister Narendra Modi reiterates his call for reduced fuel consumption, greater use of public transport and electric vehicles by citizens, and urges people to defer gold purchases amid the West Asia crisis, which has caused large-scale disruptions. It's weekly expiry today, and sell-off pressure and global cues weigh on Dalal Street, with the Nifty trading near 23,600 levels. Broader markets mirror the benchmarks, with all sectors in the red, barring metal. The rupee has depreciated to a new record low against the US dollar in early trade after US President Donald Trump says that the ceasefire with Iran is on life support, with hopes for a deal with the country fading, triggering a surge in crude oil prices. Major tech stocks under sharp selling pressure, with frontline IT companies such as Infi, TCS, Coforge and Persistent falling up to 3%, amid growing concerns about global economic growth, rising geopolitical tensions, broader market weakness and the AI threat. Hi, thanks so much for joining in. You're watching Markets at 12. My name is Alex Matthew. Now, we're going to get you all of the latest updates, but before we do, let's get you a look at what the Prime Minister said. It's a reiteration of his call to action. Yesterday, of course, he was addressing a rally in Gujarat when he asked people to refrain from buying gold and to shore up on Forex. Listen in.
सोने की आयात पर भी देश का बहुत बड़ा पैसा विदेश जाता है। मैं आप सबसे, देशवासियों से आग्रह करूंगा कि जब तक हालात सामान्य न हो, हम सोने की खरीद को टालें, गोल्ड की जरूरत नहीं है।
All right, we're trading not too far away from the low point of the day for the benchmark Nifty 50. Let's get you some of those figures up on the screen. The Nifty 50 trading cuts of nearly 1% or so, 225 points, now below the 23,600 mark, just a little bit though. The broader market's losing more ground. The mid-cap index down about 1.2% and the small-cap index seeing cuts of about 1.6%. So the market breadth turning for the worse. Pull up the advanced decline ratio just to drive home that point and you will see that we're at the widest point of the day. Now let's talk about earnings, and we've got MobiKwik that is in focus. It has posted a mixed set of numbers. You've had a second consecutive profitable quarter, and FY26 EBITDA has neared the break-even zone with a swing of 74 crore rupees. There are a few operational updates, of course. The UPI transactions have surged as much as 170% year on year, and that's 6.5 times the faster than the industry average. Structural margin expansion is also taking place in payments and financial services, and a deliberate shift is taking place into higher quality lending. Let's get the management on board. We've got Bipinpreet Singh, someone you'll recognize, of course, the co-founder and chief executive officer of MobiKwik. Bipin, thanks so much for taking the time. Let me ask you about this. The trajectory has been on the up and up in the second half of last financial year. What stood out in that performance? And is that transferable in the first quarter? Does that carry through in the rest of FY27?
So firstly, thank you for having me. And yes, the way we are building the business, we are building it with the long-term profitability and growth in mind. And so from that point of view, the biggest move for us is the fact that now back to back, we have delivered profitable quarters, not just in terms of EBITDA, but also in PAT. So it's 17 quarters of EBITDA this quarter and 4.5-5 crores of PAT. But more importantly, on the second half of the year, we are fully profitable. That's what we had committed to the investors. And that has happened because, both our businesses, the payment business as well as the digital lending business, both have shown great margins, great growth in margins compared to the comparative period last year. So much so that the contribution profit has doubled from 60 crores to almost 112 crores for this particular quarter. And I believe that this way we have achieved profitability not by cutting cost, but by actually improving the quality of the business, by improving the margins. And yet at the same time, we are increasing market share. Like you said, we have increased UPI share significantly thanks to our wallet business. We are still the number one PPI, number one wallet business. But also even in UPI, we have grown 170% year on year. We are one of the fastest growing UPI apps. And so I think all this is happening because of investments that we are making in a better business, a better product experience, and a higher quality team.
All interesting factors. Two recent announcements though, and I'm looking forward, as a lot of your investors will seek to do as well, Bipin. And I want to focus on two aspects. One is the NBFC application, which you've gotten approval for, and the other is the approval to commence stockbroking business. I'm wondering how that is going to dovetail with your existing business, because ultimately the way that everyone's looking at it, you're looking to build the full stack. And so from that perspective, you look at the financials, what is the implication in the first quarter? Are you going to have to wait for a little bit to see all of those factors playing together and leading to an up move in financials?
So good question. So, we are here for the long haul, and therefore, we are learning from the best. If you learn from the best, and the best are the banks, is that to build a diversified business where you have multiple revenue lines and multiple profit pools, because financial business is cyclical. We've seen ups and downs across, different business segments over the years. We have created a strong brand and strong customer franchise with more than 180 million users and almost 5 million merchants. So our endeavor over the next few years is to build multiple businesses. For the next 2 years, the new business that we are investing in is on the merchant side. Traditionally, we've been much more stronger on the consumer side, on the app side business, where we built the UPI business, the wallet business, and the digital lending business. Over the next 2 years, we're going to build the same on the merchant business. And the way we are going to build about it is, we want to build it with full regulatory licenses in place. Hence, we got the digital broking license, we got the NBFC license, which is unique because not many fintechs have the NBFC license to lend from their own book. We've got the PA license. So the way we are going about it is to build it so that we are covered and built a strong foundation.
Bipin, apologies. I'm going to have to cut you off. I'm so sorry. I did want to listen to this, but the oil minister is speaking right now. And you know the reason why we have to pay attention to what he's saying. That ultimately is the key issue to pay attention to. Let's listen in.
What you said about, you made a reference to the last day and a half. Before I come to that, let me say that our management of the energy system. Yes, when the Strait of Hormuz closed, I must tell you as a student of history, one who has followed, I was a professional diplomat for 39 years, we always spoke in terms of the likelihood or possibility of the Strait of Hormuz closing down. But we are for the first time facing that reality. And 20% of global energy used to come from the Strait of Hormuz. We are 85% of our imports of crude. Some percentage, large percentage used to come from there. But more important, our LPG, the cylinder gas which you use in kitchens, about 60% used to come from the Strait of Hormuz. Now we had to make arrangements, and look and behold, I am amazed at what we were able to do. Our domestic production of LPG prior to the crisis was 35 or 36,000 metric tons per day. We ramped up our domestic production from 36 to 54,000 metric tons. This by itself is a mind-boggling thing. Look, I have been around. I have traveled the world over. 39 years I was a professional diplomat in the Foreign Service. I spent 5 years international think tanking. I've been a minister for 9 years. Tell me any one country where prices have remained the same and there has been no shortage anywhere, in spite of the best efforts of some people to try to black market and raise false spreading rumors. Rumor mongering, shortage hone wali se kharid lo. Are bhai, during this crisis, our energy consumption has actually gone up. If I looked at some statistics which my colleagues gave me yesterday, petrol consumption has gone up by 6%. In a crisis, there have been no shortcuts anywhere in the world, no dryouts. Every petrol pump in the country has had petrol, diesel. LPG supply is more than enough. We have done some good things. We've ramped up LPG production. We've brought consumption down a little. Partly it's due to the weather also. But it used to be, I think, 90,000 metric tons per day. Today is about 75. I think it'll come down to 72. But the good news is we are no longer import dependent on our refineries. And that is where really our strength has come from. We have 260 million metric tons per annum refining capacity. We're taking to 270. Our refineries have produced more and more LPG. I've given you a somewhat long-winded thing to say what we've done, because you made the mistake of asking me how the last 75 days. Every day I spend an hour and a half with the CMDs of my oil companies in war session. No problem on the supply management side, no shortage of anywhere. And I'm going to conclude this by saying we have 60 days of crude, which is the maximum we need. We have 60 days of LNG, and we have 45 days of LPG. So there's no problem on the supply side. So why this panic since yesterday or a day and a half? Please see what the Honorable Prime Minister has actually said. And let's not put a bizarre construct on it. He's saying, and look, this is borne out by the facts. If you look at the news this morning, the leader of the largest economy in the world is saying that ceasefire is on life support. I think those are the exact words you use. I don't know what is happening, but isn't it time, when you look at the way this is happening, 75 days into a unending conflict, uncertainty is too mild a word. What he says, the time has come for us to look at our lifestyle also. And I totally endorse that. By the way, it's not that any lockdown is going to take place tomorrow. That's why I spend so much time giving you the supply situation. But surely, if you look at the fiscal situation, if you look at the fact that my oil companies are losing what, 1,000 crores every day, that the under recovery is going to be what, 198,000 crores, 2 lakh crores nearly. The losses are what, 1 lakh crore if you look at the quarter. In that context, how long can you keep it like this? Where is the oil? It used to be at around $64 or $65. I have my statistics here, gone up to 115 in that basket. So isn't it time for all of us, the fact that you can have this, of course you're immensely popular, the CII, but you can have this fantastic gathering here. Everybody, many people have flown in, many people are on the roads. I don't see any energy problem.
No, I think we must compliment the government for handling the quantity side of it, because that's what is in your control. And whilst for the first few days there was panic, but I think gradually people realized that it's under control. So I think on behalf of all of us here, thank you very much for the very, very deft management of the entire situation. I just want to keep carrying on. Towards the end of the conversation, you mentioned that the oil marketing companies are losing 30,000 crores a month. As they manufacture more LPG, they're obviously allocating their capacity towards LPG rather than to petrochemicals, which I'm presuming give a better yield as compared to producing LPG. How long do you think it'll be possible for refining companies and government of India to take all the load of increased prices? In some ways, demand not coming down, people not being aware, the Prime Minister exhorting people to be more responsible is great. But at some stage, some of that pricing pressure will come to the average consumer. What is the government's view on this? What's your view on this? We were having a conversation before this on some of these issues. People had different views on the subject. So it'll be good to get your perspective on this.
You can get my perspective, but I don't want to be pompous to say that that's the government's view. I mean, the government is, I'm a small cog in the government wheel, but let me come to try and give you the flavor, give you an answer which is able to capture the flavor of what is going on. Somebody whispered to me when I was coming in here, he said, till the Prime Minister made that statement yesterday, many people didn't know that there was a war going on. And they didn't realize that the war had been going on for 75 days. I think he handed out to the Prime Minister, he's made a visionary statement saying, look, if this continues, you have to start thinking in terms of measures that will require to be taken to lessen the fiscal strain. That is the point. And, I've been a trade negotiator. You use terms in the context of climate change negotiation, mitigation and adaptation. I mean, the time has come for us to also look at those things. Some of the other things that said, they've been said by our leaders over decades. When I was young, then Prime Ministers who said, it stares you in the face. If, for instance, now, how long will the oil companies be able to take it? Frankly, that's something that worries me. I mean, there have been times when the oil companies have done exceptionally well till recently. But the rate at which we are going, this 1 quarter of losses may wipe out the entire profit after tax of last year, which was what, about $28 billion or something, if I remember figures correctly. It can be wiped out. Now, all right, you can say companies will make money, companies will lose money, but no, these are good corporate citizens. They're taking a loss in order for the consumer to be insulated. I wish I could say this for everyone in the game. I cannot. Now, coming back to your question, how long can this happen? At some stage, the government will have to take a view on that. But the Prime Minister's reaching out to the country yesterday was to draw people's attention to what has been happening so far. And how long will this continue? I could argue if if you have a ceasefire which is entrenched, which goes into that, Strait of Hormuz open, the price of oil, which is what, in 116 or something in that basket, comes down from 116 to 70 or something. Well, you may not have to take any hard measures. But on the other hand, you would be failing in the discharge of your obligations and responsibility if the overall magnitude of the issue, as I said, I tell you very frankly, I had this feeling, which somebody mentioned to me, till yesterday, till the PM made the statement, people didn't know we were at war. That's the feeling I used to get. Look at the kind of people who meet me every day. I become a little less this thing, because we're doing supply management 24 hours. But some people come and say, वो हमारा इसका है, इसका एक commission rate अभी बढ़ा नहीं है 3। मैंने कहा यार, उसे oil companies are losing 1,000 crores a day, and you are reminding me. I said there'll be a better time, and I said I'm confident there will be a better time, and better time soon.
Yeah. No, I think we had a conversation in the session before this and earlier also on Prime Minister's statement, and I think all of us felt, I think as individual citizens, as corporates, we have to be mindful of the country's profit and loss and balance sheet. If there are ways in which we can moderate consumption without impacting the economic productivity of the country, I think we should be responsible towards that. And I think that statement has been taken very positively by everyone. Some people may try and spread panic around it, but I don't think that's the overarching view. The overarching view is, firstly, acknowledging a problem is very important, and secondly, not giving simplistic solutions to how you can resolve the pain to some extent is very important. So I think it was a very positive statement.
And I must thank you, and through you, the corporate King Kongs, as I'm saying it affectionately. I've seen the statements. I mean, they're so reassuring. I mean, they know what it is to conduct a business. And look, I'm a declared, unapologetic, strong supporter of the private sector and of business. And I believe that when businesses realize that, we had situations where one sector of the economy had to undergo some hardship. We drew down levels, you understand, of what LNG we could supply to them. But we've almost restored it to all the sectors. So there's no issue there. Coming back to the refineries, I don't think there's a problem. Making more LPG means perhaps making less other petchem. On petrol or diesel, there's nothing. But yes, I think there will come a time when there was a big worry initially when we said that we are ramping up LPG production. A lot of people said that वो agriculture sector के लिए वो जो jute bags होते हैं या बाकी petchem से जो बनते हैं, not jute is a natural fiber, they may not be available. No, we were able to restore that. When the ceramic sector closed down for a while, it's not that the gas was not supplied. There were pricing, there were issues of economics. All that has been restored. When we found that migrant labor, which uses the smaller, what's it called, that 5 kilos cylinder, we just increased it. But it's not just that we increased LPG. We brought in more kerosene. We brought in biofuels. We did other things. So as a whole of a government approach, I think we've managed the crisis, even though, and I have to be careful with that, we managed it with a sense of responsibility, no dryouts anywhere, but the process is still on.
Yeah, it's still going on. There's one question which I asked you last year also, and I'm asking this again. It's probably become more contextual this year than it was last year. That on one area, if I compare India's production of oil and India's production of gas from where we were 10, 15 years back to where we are today, I think that's come down. Oil has come down. Oil production, we have not had a major discovery probably after 2002, 2003. Oil production has come down by 15-20%, I think by 28 metric tons. Gas production has also come down. Let past be past, I mean, it is what it is. But I know we will have to look at alternatives. But do we have a strategy on how do we, given the resources that we have in the country, do we have a differential strategy to say, how do we pump up more from what we already have, both in terms of oil and gas?
I'm glad you've asked the question again, and I'm only hoping, because I don't remember what I said last year, I'm only hoping that I give you a better answer last year. No, I'm glad. But let me tell you, exploration and production, this E&P, this is what your question is all about. Rajiv ji, this is a highly capital-intensive process which requires perseverance and no deviation. So my starting point is, we have done some very good things. We have amended the law, the new ORD Act which has come into being. That is a very major achievement. We are now incentivizing production. We have no shortage of oil and gas. If you look at the geography, the sedimentary basin, we were not out of the sedimentary basin. We have about 3.5 million square kilometers of sedimentary basin. We were exploiting only 6% of that. We want to take it to 15%. There was 1 million square kilometers which was no-go area. We've opened that up, and today the government can put the past behind it. The fact is, between the years 2006 and 16, it was a dead decade. Not a single expenditure was incurred or any effort was made. Now we have gone in the other direction. There is a Samudra Manthan scheme announced by the Honorable Prime Minister from the ramparts of the Red Fort on 15th August last year. We are in the final stages of getting money. Let me tell you what it means. In Guyana, they dug 46 deep sea wells. One deep sea well costs $1 million. $100 million. You see, I tend to forget that. 100 million. This was not rehearsed. It is $100 million. $100 million into 46, they couldn't find anything. On the 47th go, they found the oil. And the rest is history. Yeah. I have been quoted. Sometimes I'm trolled also that I said we have many Guyanas available. Why do I say this? If you look at the Andaman Sea, where is it coming from? Right on one side from Indonesia, the other side, if you get from Myanmar, every time we have dug there, we have found gas, oil and gas. It means it's there, but you need to do more. I'm told that we are in the final stages where some hard negotiations following between the Ministries of Finance and Petroleum and Natural Gas. We are getting the allocation we are looking for. I don't know, they haven't told me the sum, but we'll have enough money now to go and do repeated digging of wells. We were making a presentation to the Honorable Prime Minister, and he turned around and said, "Kuए khodiye, what's stopping you? This is for the government." I mean, he gave a number. Of course, the number will have to be backed up by money, and that's the process. But look, first of all, let me correct the perspective on even gas production and oil production. If you don't dig new wells, then it stands to reason that the existing wells will be diminishing at a particular rate, and that rate is certain. For instance, that's why whatever we did in Bombay High, 1976, I think, we are now rejuvenating it. And there are partners who are doing it. They're very hopeful that some major rejuvenation will take place there. Look, a year ago I used to say our production is going up 18% per year.
Okay, production is going up 18% per year. Now, quite a few important statements being made by the Petroleum Minister, most importantly with regard to strategic reserves and the availability of crude oil as well as gas. 60 days of crude is available, and that, if anything, should be the big takeaway from that conversation at the CII. We'll bring you more updates over the course of the day, and we'll tell you more about what the Oil Minister is saying and everybody else with regard to the Prime Minister's appeal, his exhortation to reduce the usage of petrol and diesel, thereby putting less pressure on the Indian rupee. Stay tuned, lots more coming up over the course of the afternoon. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, who's standing at the NDTV Profit market pit with all the action in the markets today. Sharad, I mean, the downtick has continued. The sentiment continues to remain weak. And I think it's Prime Minister Narendra Modi's second appeal that he made last night is something which is having that sentimental impact, because he's talking about government and private institutions, from offices, schools, all of them, to probably look at a work from home kind of a culture as of now. And that's something which is creating that little bit of panic.
Well, that's right. Good afternoon, Hiral, and you are exactly right. For the second straight day, the markets are spooked. Of course, there are some domestic cues which you discussed, Hiral, and the international as well. But right now, as we are talking, we are at the day's low level. Look at that. We had a gap down opening, but we are seeing more sell-off intensifying. The same thing is going on for Nifty Bank also, if you would like to pull up. And important technical levels are being broken. And yes, look at it. Look at these levels. We are at the day's low for Nifty Bank as well. That's where the concern starts coming in. Is the street getting spooked for something further as well, especially on the domestic cues front? And you rightly mentioned PM Modi's second appeal as well. But let's look at the key factors to watch out for today. What's actually happening? And remember, both international cues are also not very strong, and that's why the Asian markets are also largely mixed or red. Apart from this, the second straight day of sell-off is there, and remember, there will be volatility as today is Nifty weekly expiry as well. But talking about the levels, Nifty support is at 23,500 odd levels, and we are just 25 points away from it. If that gets broken, then further downfall is expected. The range which I have given for Nifty Bank support is between 53,300 to 53,800. That's what we will be looking out for. Apart from this, the technicals remain weak, and a further sell-off is possible from the current angle as well. The rupee has hit its record low levels in the opening trade as well, and there isn't major interventions at play as of now. The expectations of a petrol diesel price hike is also something which the street is getting spooked for second straight day. We are having that sentiment. The IT stocks are dragging on the AI sentiment. The SMIDs, there is no value buying also there, and that is where a concern comes in. India VIX jumps up, of course, for second straight day, and yields are also climbing up, both domestic and international segment. US-India CPI data today, and interestingly, the Q4 numbers, something to track. Remember, all of them are actually in the red. We have Dr. Reddy's Labs, Tata Power, and Dixon Tech making it to the list. So, of course, we'll be focusing on the earnings, but overall, Hiral, the sentiment is very muted, and we can see some further sell-off as well.
Absolutely, the sentiment is absolutely muted. If you just pull up the rupee as well, that weakness in terms of rupee is categorically seen. 95.56 is what you're tracking at this hour, so pretty much down there. Let's pull up Brent crude prices as well if we have that, and that will tell you the kind of impact it's having right now. We'll come back to that, but let's look at individual stocks now and the watch list that we have on the show. ONGC, Oil India, the royalty cut impact, that's positive. You have Dr. Reddy's, Dixon, Tata Power. All the three are trading under pressure ahead of the numbers. You have the IT sector also. There is a sell-off there. It's an AI-led cloud which is looming on them on the back of what OpenAI is looking at. Abbott India, highest dividend is what they have announced. That stock is in focus, and Grow has seen a block deal where the anchor lock-in, has opened up. Paradip Phosphates, Oren Pro, Manorama, all of these buzzing on the way. Earnings have panned out. Heritage as well. JSW Energy is very interesting. In fact, the management is absolutely bullish, whereas the brokerages are absolutely bearish when it comes to JSW. Sonata Software is another one which is buzzing on earnings. Afcon has seen an order win, strong volumes on TTK Prestige, Birla Soft, and Lloyd's Engineering. So these are the stocks which are on our radar. But let me go across to Sharad to take the rapid fire with Vishnukant as well.
Thanks a lot, Hiral, for that. Good afternoon, Vishnukant. It's always a pleasure to have you. We'll start our rapid fire segment, and the company in focus is Abbott India. Of course, the company comes out with its numbers. How are the important levels looking like here?
Hi, Sharad. A very good afternoon. So the stock, has rebounded sharply from its 52-week low, but in today's trading session, the stock is down more than 3%. But the way prices recoup from the lower levels, I'm quite, sure that there will be some buying in days to come, because we are expecting that there has been some big buyers from the lower levels. The stock is currently trading above the 21-day exponential moving average, so I will be in buying from the lower levels again. If someone finds levels near about 26,150, 26,180 sort of levels, one can go along with keeping stop loss below 25,500, while on the higher side, prices has the potential to regain 29,000 sort of levels.
Right, and Vishnukant, your views on Grow. Interestingly, the share lock-in expiry was there, and there was a big block also. There is a sell-off. Is there a good time to enter this stock, or do you think there will be more sell-off? And if there is, what are the stop losses?
Well, so the stock is in, bearish trajectory. In fact, the stock has, fallen below its all key moving averages. So I will not go long in the stock at a current market at least, because I'm expecting there is a more pain in the stock left. and I'm expecting 178, 177 sort of levels will be on card very soon. So it's a clear-cut avoid counter.
Right, avoiding grow right now, there might be further pain in the counter as well. Next stock, Paradeep Phosphates, a mixed set of numbers coming in. Do you think this company will be around that consolidation mark, or is there any breakout or breakdown levels to watch out for?
Yeah, definitely there has been a breakout from the very thin consolidation band of 127, 120 sort of level. So stock is now up more than 7% in today's trading session, but yes, it is down below. It is currently trading below its 200 exponential moving average. But the way prices are rebounding, I am quite expecting that prices will definitely invalidate its 200 exponential moving average. So yes, it's a buy counter, and I'm expecting 150, 155 sort of levels will be on card. So one can go along in this counter at a current market rate.
Right. Orient Pro Solutions, interesting cash market stock. Our company come out with its numbers also. There is a little bit of volatility at play. Is there any alpha to be made here?
No, definitely not. I'm not expecting any firework in the stock, because I'm expecting the next support align somewhere around 725. It's making a sort of lows kind of pattern and M pattern on a daily chart. So it's a clear-cut avoid counter.
Right. Another stock, Manorama Industries, numbers were on the good side. A capex plan is something which the street is bullish on as well. On a medium term to long term basis on the charts, especially on the monthly charts, how does this counter look right now?
Well, so if you look at a monthly chart, prices are now just recoiling from the upper range of 1550, and it is just toppled around 11% so far this month, and I'm expecting slight pin in the counter that should be containing around 1350 sort of levels. So if someone is planning to buy or get entry in this counter, so 1350, 1340 can be a good price zone to get under.
Right. Another stock is Heritage Foods, a very weak set of numbers. The stock, of course, there is a sell-off happening in this stock. So I just wanted to understand, Vishnukant, there's a further downtick in the technicals for this stock or the support levels?
Yeah, definitely. Next support aligns somewhere around 326, 320. So I'm expecting prices to extend this losing streak towards that support area. So there is no buying at this present juncture.
Right, and a quick view on Sonata Software also. Last week, of course, the numbers came in. There was a good up move. Profit booking candidate right now?
Which stocks?
Sonata Software.
Okay, Sonata Software. Well, so in fact, the stock is currently trading above the their short-term moving averages. So yes, as long as prices are trading above 257, one can hold the positions. But if prices falls below 255, 250 sort of levels, so definitely there will be a exit plan in this counter.
Right, and Afcon Infra, a quick view on that as well. They have got a large order win.
So technically prices are just oscillating in a very thin horizontal band, that is 353, and in lower side 310. So as long as prices are just oscillating in this trading band, one can buy the dip and sell the rallies.
Right, there are some stocks like TTK Prestige and Birla Soft, which are the volume buzzers. Either of these stocks, any view on them?
Well, Sharad, so TTK Prestige looks quite bullish, as the stock has just penetrated its 200 exponential moving average, and the way prices are moving and the volumes are coming in this counter, I am expecting the winning journey are likely to remain intact with a potential gain towards 620 and 630. So one can go along in TTK Prestige.
Right, go long on TTK Prestige. That's the rapid fire round, but Hiral has some interesting stocks to focus on. Hiral, what's there on the Google trending stocks?
Even I'm eagerly waiting, Sharad, to see what's actually trending on Google, because there's so much happening right now with Prime Minister Narendra Modi's appeal, the impacting stocks. You have a SBI, Vodafone Idea for interesting reasons, Kalyan Jewelers as well, which has been under pressure, MCX and a Swiggy. So interesting names there. Vishnukant, anything that you like from the names that I've just mentioned which are trending on Google?
Well, Hiral, so let's look at the SBI. In fact, we all know that the stock is a portfolio stock, but yes, from the technical point of the view, in last couple of days, the stock has, declined more than 10%, and now currently it is below. It's a 200-day exponential moving average. So I believe there could be some pain in the prices, and that pain can take prices further lower towards 920, 930. So yes, one can accumulate, and gradual accumulation can be done in this counter. So in a staggered way, we can start accumulating the counter. 50% positions and 40% positions can be bought at a current market rate, while if any decline comes towards 920, 930, rest position can be built there.
Regards to what's trending on Google. Thank you so much for joining in. Always a pleasure to speak to you as well. But let's shift focus from here on and see what's happening with the OMC space. Let's pull up all the oil marketing companies from HPCL, BPCL, IOC. ONGC is up in trade. Oil India is up in trade, and that's for obvious reasons when it comes to the royalty cut aspect. But pressure continues to build in terms of the marketing companies. And amid these concerns over supply disruptions and speculation of restrictions, Petroleum Minister Hardeep Singh Puri sought to reassure markets and consumers on India's energy security. He actually said that the country has adequate stock of crude, LNG and LPG. I think 60 days is what we're talking about. Let's listen into what he had to say.
No problem on the supply management side, no shortage of anywhere. And I'm going to conclude this by saying we have 60 days of crude, which is the maximum we need. We have 60 days of LNG and we have 45 days of LPG. So there's no problem on the supply side. So why this panic since yesterday or a day and a half? Please see what the Honorable Prime Minister has actually said. And let's not put a bizarre construct on it. He's saying, and look, this is borne out by the facts. If you look at the news this morning, the leader of the largest economy in the world is saying that ceasefire is on life support. I think those are the exact words you use. I don't know what is happening, but isn't it time when you look at the way this is happening, 75 days into a unending conflict, uncertainty is too mild a word. What he says, the time has come for us to look at our lifestyle also. And I totally endorse that. By the way, it's not that any lockdown is going to take place tomorrow. That's why I spend so much time giving you the supply situation.
Well, that's a very interesting take on the supply situation. But on the other hand, business is also something which we track, and OMCs, it seems like a lot of losses are at play in the first quarter. So Amit, what's the total picture of that?
Well, as the minister was saying, that OMCs are staring at a loss of nearly 1 to 1.2 lakh crore in the first quarter of FY27. Now, this amount is slightly higher compared to what analysts were penciling in. They were expecting a per month loss of close to 27,000 crore rupees for the oil marketing companies, which comes to around 81,000 crore per quarter. But what the government is quoting is around 1 to 1.2 lakh crore rupees, and this is at crude being at around $120 per barrel. Now, how long could the oil marketing companies sustain is the biggest question here. Now, if you look at the combined net worth of the oil marketing companies, it stands at close to 3.5 lakh crore rupees, and this is as per September 2025. So theoretically, 2 more quarters they can easily withstand this losses. I'm not saying that this is something that is going to happen, but theoretically, if they do not take a price hike, then at least for the next couple of quarters, their net worth won't be negative. So which means that they can sustain these losses for the next couple of quarters. And what do oil marketing companies need at this moment? They need a price hike across LPG, petrol and diesel. And if you look at the quantum, as per analysts, for LPG, the price hike required is around 956 rupees per cylinder. And I'm talking about the 14.2 kg per cylinder, which is used for domestic purpose and not the commercial cylinder. And if you look at the quantum of price hike for LPG, it stands at close to 105%. But when it comes to petrol, they require a price hike of around 28 rupees per litre, which is around 29.5% based on the current prices. And for diesel, they need a price hike of around 32 rupees per litre, which is close to 36.5% of the current price that is we are seeing for diesel.
Right, Somit. But Somit, a little bit more concern is there. Some royalty-related announcement has come in, and it becomes very Greek to understand this oil and gas sector. Just simplify it for us. What is this announcement? Who gets the benefit?
Well, the royalty announcement is actually beneficial for oil and gas exploring companies. In this case is ONGC, Oil India and Vedanta Oil and Gas, which was demerged from Vedanta but is yet to be listed on the stock exchanges. So the announcement here is that they have changed the crude oil and gas royalty rates. They have reduced it. For oil, it has been reduced to 12.5% from 20%. Obviously, there are a few other categories as well. I'm just keeping the simple rate and telling it right now. From 20%, it has been reduced to 12.5%, and for gas, it has been come down to around 9% to 10%. So how does this benefit? If the royalty is something that these oil and gas exploring companies used to pay the government, now they have to pay less, which means that their realization increases, their revenue increases, and their earnings as well increase. Now, Oil India, as per analyst, is expected to benefit the most out of it, followed by ONGC and then Vedanta Oil and Gas Company. Now, CLS and UBS have come out with their reports on ONGC, where both of them have a buy rating. In fact, CLS has a high conviction outperform rating with a target price of nearly 405 rupees. They say that the government cut royalty is to encourage upstream production. They are very positive for ONGC, and they believe that the upstream royalty cut is against the fears of any windfall tax, which means that no windfall tax will come in and a royalty cut will benefit ONGC and Oil India. Now, they're expecting the fair value of ONGC and Oil India to increase by around 6 to 7% because of this royalty cut, and they're quite bullish on ONGC given the fact that they're seeing a 40% plus upside based on their target price, and also the dividend yields are around 7%. And UBS has also maintained the buy rating on ONGC with a target price of around 350.
Thanks a lot, Somit, for that very detailed analysis coming in, and Somit tracks this space very diligently. But joining us, we are having Kush Gupta. Kush, Somit was mentioning about both angles, one on the OMCs as well as on the benefit from the royalty segment as well, ONGC and Oil India. In this oil space, how are you looking the space, and any fundamentally, any stock which is looking good here? Kush, can you please unmute yourself?
Oh, yeah. Sorry.
Yeah.
Hi. So I believe I agree with him on multiple factors. There are a lot of benefits to be seen in this sector, especially for ONGC and Oil India. I feel today we are seeing a lot of positive turn on Oil India and ONGC both. And especially if we talk about Oil India, there is a policy catalyst. The rally was triggered by a surprise government cut on the royalty rates. And if you look at the past performance also, YTD year to date, it has gone up by 15%, which is clearly beating the benchmark. I am bullish on both. ONGC also had a very good history of, giving dividends. They maintained a good 38% average payout over 3 years. And at current levels, the dividend yield of 4.36 odd % goes favorably with the GSEC return. So I would maintain my position on both these stocks. While there is crude oil, price sensitivity remains due to the war, I would still think that long-term India's energy transition pace and gas pricing reforms will shape upside for both these companies.
The view coming in for these OMCs and even Oil India and ONGC, but let's look into Atlanta Electricals. The stock is locked in an upper circuit, and listen to what I had spoken with the management. The first question is, congratulations on a good set of numbers. What led to this growth? And on a year-on-year basis, most of the parameters have doubled up. Will we see the same rate of growth coming ahead into the next financial year?
This growth plan was predominantly planned. It was multiple year planning that went through. We have expanded our manufacturing capacity to manufacture more and more transformers, and also going higher kV class, going into higher kV class segments. Now, the growth is actually driven by the power demand. We need energy, and when we shift from fossil fuel to renewable, more and more energy would be required. And our products, transformers, are predominantly used for transporting energy. So there's sort of demand coming in for energy in power in terms of from railways, EV charging, like Mr. Modi, our Honorable Chief Minister, just said that we need to cut down on fossil fuel, where we need to still drive cars. So EV requirements will come in, and energy for that particular is going to rise in the near future.
Right. Right, Anandji, apart from that, I have a question for you is how's the numbers looking like? Any outlook you'd like to give? Now we have finished the financial year 26. Anything, future forward looking which can be quantified? Everybody wants to hear that.
We have refrained till date in giving any forward-looking statements. But again, what we always say is that we are a company which has been growing at a pace of 40% CAGR basis. And that is the target we have taken internally for this particular year also. The kind of capex we have done in last year, we are sure that we are pretty geared up in for achieving that kind of a growth rate in a time to come also, including this particular year.
Niralji, another question is on the entry of this 400 kV or 765 kV segment. What's the growth expected from this segment? Any kind of investments you have earmarked for it?
Well, the investments for this particular technology is already done by the company. We are very well placed in the market to start manufacturing 400 and 765 kV class products. We're fortunate enough to receive one 400 kV class order also. And in future, we are going to receive further. This year is going to be vital to make these kind of prototype transformers in our manufacturing facility. So the revenue stream of this kind of products will be predominantly seen on a large scale in the coming financial year because the delivery times itself for these products are long.
Anandji, let's talk about the entire order book setup, how things are looking like, and the power transmission segment especially, what are the order book numbers, what's the outlook looking like?
We have we registered an order book of close to 2,500 crores last year, which led to the opening order book of again close to 2,500 crores for this particular year. Order pipeline or inquiry pipeline is pretty strong. And once we get this prototype testing done for 400 and 765 kV, I'm sure it will go up significantly from that particular point on. As on date, the kind of orders we have, we are sure that we are filled for next 12 to 18 months with the execution time.
So that means the revenue visibility comes in for the next 12 to 18 months. Niralji, I just want to understand about the margins. There's a good margins bump up and 20% coming for a profile of your company seems very strong. Will this be sustainable going ahead? Because this is a pretty much like a peak margin, or is this something else which is there as a growth lever for the increase in margins going ahead?
Well, typically the thumb rule for our industry is higher with the KV class you manufacture, higher are the margins. This particular year, since we have already done the capex, we utilize the capex, the facilities to make more 220 kV class products, which actually was one of the vital points in margin correction. And plus economies of scale, when we ramp up the facilities and use it to its full utilization, we get economies of scale, which again help to build certainly good EBITDA numbers.
Anandji, another question is on the export market growth front. Is there some issues there coming in, or are you looking at some new geographies also? I just wanted to get that entire picture for the export markets.
Export market is one wherein, we did not approach export markets till last year because of the domestic orders, our facilities were running full and hence we did not touch base with the export market. Now is the time that we have started exercising our options for export market. We are not restricting ourselves during this discovery phase to specific geographies. We are looking for markets where we can start and we can work for a longer duration. So we are in a process of finalizing those. And in coming months, I'm sure we'll have our own set of geographies wherein we would like to work for a longer duration.
Fair enough, and maybe the clarity also comes in, especially on the tariff trade front, because there seems to be a little bit of issues definitely globally in the export play as well. But Niralji, I just want to understand, from the perspective of the industry, the entire industry has been re-rated when it comes to the transformer demand in India. You spoke about it also. I just wanted to take your views, especially in Eastern India. A lot of changes have happened and everybody is trying to go there as well. Do you think any kind of East India exposure or something the demand is coming in?
Certainly. And development, whenever a state goes into a major development, requirement of transformers will definitely come in, because that is one infrastructure the government would always focus upon. So yes, we see a lot of requirements coming in from the eastern side. We have constructed our presence there in the eastern market as well, and we see a lot of inquiries coming in, both from the private sector and from the government utility side sector also.
Okay, so that's the management of Atlanta Electricals. That stock is locked in upper circuit on the back of the strong set of numbers. And as Sharad was talking to them, it's very interesting to see how growth is panning out. But moving on, JSW Energy, it's an interesting set of numbers that the company has reported. Management is pretty confident, but Varsha, it seems that the brokerages are absolutely in denial of the performance, and they've cut the target price as well.
Right, so if I were to talk about the overall numbers were above estimates, but there were certain one-offs, which has given a strong number. So let me just highlight it for you. So revenue includes one-off of rupees 100 crore. There was an adjusted miss on estimates, and the one-off income, if I were to talk about, so almost 210 crore income was from Supreme Court win incentive ruling, 100 crore in revenue and 110 crore in other income, and the earnings were supported by one-time gain as well. Onto the interest cost, if I were to talk about, there was a there was an increase of 138% year-on-year, which is I would say a negative thing. Also higher than estimate. This was due to elevated debt levels, which had a drag on profit. On 27% of generation sold in stock in short-term market versus 13% last year. And also the good things were the renewable energy, which was strong, was up almost 68%, and the capacity, the target of 30 gigawatt by 2030 remains unchanged, and they've added 22.6 gigawatt of renewable capacity in FY26. Now, talking about lastly the strategic shift, of course, the focus remains on retaining part of thermal capacity, and renewable addition will be slow, 3 gigawatt guidance by FY27. So overall the number looks good, but there are certain one-offs which have given this strong set of number, and hence we are seeing the stock under pressure.
Thanks a lot, Varsha, for that detailed analysis. But Kush, I just want to get your views also on JSW Energy. Numbers were decent, but the fall happened. Varsha explained us the reasons. What do you think on the medium-term, long-term perspective for this counter?
So I feel, great analysis on JSW. I feel the debt to equity ratio is 2.5, which is, very hard to follow. And, while all the numbers are great, the operational capacity is also reached 13.45 gigawatts. And there is a very ambitious target for 30 gigawatts. So I feel like, first of all, achieving this target may be a little bit of a, tall order for them to reach. So I would stay cautious on JSW. While we are bullish on the India's energy sector and renewables specifically, where JSW has shown a lot of, green signals on the renewable side. But I feel operational capacity and operational challenges still remain. So I would wait and watch before taking a call in JSW.
Well, that's an interesting take. Thanks a lot, Kush, for your time. And it's always a pleasure to talk with you. But now we are running out of time. That's all, folks, for the day. It's from me, Hiral, and the entire team who have put together a show of trending stocks. Keep tuned to NDTV Profit.
On account of the closure of the Strait of Hormuz, a process that started on 28th February, we are now into 75th day of that. Let me tell you categorically, we have no supply side problems. Today, the country has more than enough stocks of crude oil, LNG and LPG. When this crisis began, there were some concerns, but we converted the challenge into an opportunity. We have ramped up our domestic production of LPG, which used to be 36,000 metric tons per day. We have now taken it up to 54,000 metric tons per day. All of you live in Delhi or you travel around the country, you must have seen there are no shortages anywhere. Some of my friends tried to say that, some shortage is coming and therefore you should do some buying. That was also short-lived. Today I can tell you that this situation In the last 4 years, there has been no increase in prices. Today we are in a situation, we don't know how long the blockades or counter blockades in the Strait of Hormuz will continue, but I can tell you categorically that today we are in a situation where, unlike other countries in the world, which have had to either face severe problems in terms of availability and supply, or where prices have gone up 50-60%, the Honorable Prime Minister's statement is very visionary. It looks to the future, that if this were to continue, we also have to look at what we can do in terms of lifestyle changes. And I think, as I mentioned in the CII session today morning, I warmly welcome the support that the CII corporate executives have given to that call. There are certain activities which we can curtail. It's not that something is going to happen. That's all negative, panic-creating activity. I can tell you, as somebody who's more involved in this, I review the situation every day along with the CMDs of the oil sector for an hour and a half. My next meeting is at 2 o'clock with them. There is absolutely no cause for anxiety, but we should, going forward, we don't know how long this will take, and also be very clear that this prolongation of this is creating a fiscal strain. My oil companies are losing 1,000 crores a day. Their under recoveries are in the tune of nearly 1,98,000. So we will have to start worrying about these things, and in that we should. Some demand for LPG has come down. It used to be 90,000 metric ton. It has come down to 75. Some of it is because of the temperature. But even otherwise, I think prudent supply and demand side, we have done very well, and I have no reason to believe that we will not do well in the future. But we should, certain activities which can be curtailed without this thing. Please listen to what the Prime Minister said, and it's a very visionary statement. Going forward, we should bear that in mind.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the story.
Prime Minister Narendra Modi reiterated his call for reduced fuel consumption, greater use of public transport and electric vehicles by citizens, and urged people to defer gold purchases amid the West Asia crisis, which has caused large-scale disruptions. Weekly expiry sell-off pressure, as well as on the global cues, is weighing in on the Dalal Street as well, with the Nifty 50 now trading close to 23,500 odd levels. Now we've seen broader markets largely mirroring the benchmarks, with all sectors currently in the red. Major tech stocks under sharp selling pressure, with the frontline companies such as Infosys, TCS, Coforge, as well as persistent all-round 3 to 5% amid growing concerns over the global economic growth, rising geopolitical tensions, as well as what we've seen with OpenAI and going into the IT services side of things, along with Anthropic, which has already done the same. Hello and welcome. You're watching Lunchtime Trades. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and get you a roundup of everything that's happening around the world of commodities, news updates, as well as some of the key top stocks which are buzzing in trade today, some that you need to have your focus on as well. Now, we'll get you all of that perspective, but before that, a very quick check of how the markets are doing, because it's been a day where there's been consistent pressure on the index today. So when you pull up the Nifty 50 as well, that shows you the perspective of what we've seen today as well. Across the board, selling pressure now close to 23,500 odd levels. And we said that in the morning that 23,600 is going to be a crucial level that got broken down in today's trading session. But also pull up the heat map as well, and that'll give you a perspective of the individual stock movers for the Nifty 50. Now, we've seen amongst the key ones that are moving in trade today, ONGC continues to be one, but largely seeing the IT pack consistently under pressure. TCS has now hit a 52-week low as well today, now below the 2,300 rupee mark as well. But in terms of the broader markets, let's pull up the advanced decline ratio first as well, because we've seen pressure over the broader markets over the last couple of days. Today as well, when you look at that, it's been a clear day of only one stock that's advancing in trade versus 5 that are declining as well. And the mid-cap and the small-cap index mirror what we are seeing right now on the screen, with the consistent pressure that we're seeing across the board. So 1.5% down, the small-cap index almost down 2% at this point of time, and the BSE 500, which gives you the perspective of the individual movers as well. Some have reacted to results, so we've seen at least the oil and gas pack doing well. TTK Prestige is also up, but largely a day where Sonata Software on results, Privi Specialty, JSW Energy also down in trade today, and GR Infra after a weak set of earnings as well. But let's focus on some key national news as well, because amid concerns over supply disruptions of LPG and crude, PM Modi appeals again for work for home, for government as well as for private offices. Let's listen into what he had to say.
टेक्नोलॉजी की मदद भी हमारे लिए बहुत फायदेमंद होगी। ये जरूरी है कि सरकारी और प्राइवेट दोनों ही दफ्तरों में वर्चुअल मीटिंग्स और वर्क फ्रॉम होम को प्राथमिकता दी जाए। मैं कुछ स्कूलों से भी आग्रह करूंगा कि कुछ समय के लिए ऑनलाइन क्लासेस की व्यवस्था पर काम करें।
But while we have seen, some key measures, some key conversations around this topic as well, there's also been some panic as well. So Petroleum Minister Hardeep Singh Puri also sought to reassure markets as well as consumers on India's energy security. He said the country has adequate stock of crude, LNG as well as LPG. Let's quickly listen to what he had to say.
No problem on the supply management side, no shortage of anywhere. And I'm going to conclude this by saying we have 60 days of crude, which is the maximum we need. We have 60 days of LNG and we have 45 days of LPG. So there's no problem on the supply side. So why this panic since yesterday or a day and a half? Please see what the Honorable Prime Minister has actually said. And let's not put a bizarre construct on it. He's saying, and look, this is borne out by the facts. If you look at the news this morning, the leader of the largest economy in the world is saying that ceasefire is on life support. I think those are the exact words you use. I don't know what is happening. But isn't it time, when you look at the way this is happening, 75 days into a unending conflict, uncertainty is too mild a word. What he says, the time has come for us to look at our lifestyle also. And I totally endorse that. By the way, it's not that any lockdown is going to take place tomorrow. That's why I spend so much time giving you the supply situation.
There were also some other conversation, of course, which Hardeep Puri spoke about. The losses that OMCs are doing almost to the tune of 1 lakh crores per quarter, 1,000 crores a day. And we've played that through some important conversation over the last hour as you've been watching our screen as well. But some individual stocks that you should also have your focus on. Let's quickly put up Syrma SGS first. Now, the company reported results yesterday. It was a strong beat. But what we potentially might be seeing at this point of time is money being taken off the table because stock has now got into that slightly more expensive zone as well. But look at the results. Revenue was up almost 59%, EBITDA up 62% as well. Margins at 11.9% versus estimates of almost just 10%. Shows you the beat which you see in this counter as well. Also net profit up 54%. And when you look at the segmental, that gives you the clear picture. The three key segments, industrial, auto, as well as consumer, the growth of almost 21 to 100% is what we've seen across these, while IT and healthcare, being on a lower base, have also grown well. We've also seen that, the acquisition, one of the major ones of K Solar, has now actually been called off by the company. They've said that both Syrma as well as Premier Energies was set to acquire the company, but the Syrma has highlighted that certain conditions precedent to the acquisition being completed were not fulfilled, and hence they've pulled back on the same as well and decided not to proceed. While they've maintained strong cash positions as well as return on capital employed ratios, I just want to quickly highlight what they've said for FY27, because we had the management con call which happened today morning at 10:30, and we've not seen any kind of revival in the stock price. They've guided for 10.5 to 11% margins given the current uncertainty. Q4 I spoke about had 11.9, but they have said that the pass through of these costs do happen with a lag, and hence given some they are being conservative at this point of time, but they've absolutely guided for a 30% growth in EBITDA for FY27 as on that number. But they are not chasing growth at the expense of working capital. In this particular quarter, you saw that happen, that the industrial segment was slightly lower than estimates, and then the overall revenue guidance hasn't been met of 5,000 crores. But for Syrma, those were some of the key highlights as well. I just want to quickly highlight Dixon Tech also, since it's from the same sector, and you're seeing that pressure on Dixon Tech as well. Let's pull up the chart. Now down 4% almost at this point of time. Also because results are due today. So in terms of what we see in the result picture, it's not a very, very exciting one at this point of time. Revenue is just expected to rise by 2%, while EBITDA is expected to be down by 9% at this point of time, and hence you could see some pressure. Vivo JV is a crucial one for the company, given some update, because that is embedded in the guidance for the company for FY27 as well. But we spoke about, when we started the show, about how IT continues to be under pressure as well. Now this has been after OpenAI's aggressive push into AI deployment as well. So what was expected to be an opportunity for the Indian IT service companies in terms of deployment of these AI tools might be done itself by these said companies. Jasmeet is now joining us to give us more details about the same. Jasmeet, over to you.
Well, thank you for that. We have seen that AI overhang has been on IT for quite some time. It's been almost a year where Nifty IT has hit its record low levels, and even today, Nifty IT is down about 3.5%. If you look at TCS as a company, even that is down about 4%, touching the 52-week low levels. Now, what has happened is OpenAI has launched its new business model where they will start deploying AI deployments and consulting business. Now, what we were expecting earlier, IT companies to be the integrator between the AI tools and enterprise. Now, the tools, the AI new tools, the AI deployment tools will be the integrators. So this is why we see the fear in the market, where we are seeing that this AI deployment tools can replace IT companies altogether, and the overall business can reduce, and deflation from the AI tools was earlier 3 to 4%, but deflation in terms of the AI deployment tool may be much higher than what it is currently. And that's why we see the overall fear in the market, and OpenAI is spending nearly $4 billion in this particular project, and they see the result coming up soon. So all in all, it's a wait and watch of how does this new tool get developed and how will this impact the large companies. Now, given Nifty IT companies generally have a long-term contract, so we cannot really expect anything happening to the top line in the next 5 to 6 years. But eventually, when the deal wins reduce and the overall top line can get impacted if the overall AI deployment tool really works out for OpenAI.
Got it. Well, thanks so much for that, Jasmeet. But, viewers, as we go across the show, Commodities is something that we want to focus on, and Kunal Shah, head commodity research at Nirmal Bang, is now joining in to give us some perspective of what he's picking up across the spaces. Kunal, it's been a while since we've spoken. Thanks so much for joining in today. Just my first question on actually, the bigger topic that's been, actually been national news as well, because Prime Minister Narendra Modi, while speaking about reducing fossil fuels, reducing petrol, limiting the usage of them, he's also highlighted that for gold as well, that we should limit our purchases for gold. Now, while not a direct impact, do you feel there's a sentimental one that we are seeing, or is it still too early at this point of time to call out any action?
Well, I think looking at the way the things are right now, it's been more than 70 days and there's no resolution. The OECD inventory and the SPR have been depleting quite sharply. So now the tough part starts, because if there is no resolution right now, I think we are heading for a sharp upside in oil prices, not desirable, but that is how it is right now, because the last glimmer of hope is the Trump and Xi meeting at China. If there is a possibility of peace or truce or whatever the deal, it is only in this last meeting, because after that the ball goes to the Pakistan, and I don't think so that's going to work out. So China would like to take a credit if there is a peace, and will establish themselves as a world leaders by doing that. So that's the only hope right now. And if that doesn't happen, oil is heading towards $120, $125.
Got it. But Kunal, also in terms of the broader question, so you covered oil for us. Give us some perspective on gold as well. Do you feel Prime Minister's appeal right now has a sentimental impact on gold purchase in the near term? And if so, could you see some kind of, if not a price correction, at least a time correction coming in right now? And what's your target that you're watching in the near term?
Okay, so day before yesterday, there was an announcement, and I was able to speak to the bullion banks and everyone. So in an anticipation that there can be some hike in duty, or there can be a hike in GST or whatever. So people have bought gold yesterday. There has been buying going on, because now there is a broader fear. What if there is a hike in duty, or what if there is a hike in GST? So let me buy it right now before anything happens. As far as the demand is concerned, okay, I would say the last leg of rally where we saw gold futures hit $5,500 back in January 2026, I think this was predominantly driven by ETFs. So the jewelry demand had not a major role to play over there. I think the investment demand have remained pretty strong, looking at what theme has been going on, de-dollarization and everything like that was the key reason for gold to really rally hard. So considering that, I mean, it's not going to change. So even if today an investor wants to buy an ETF, they will go and buy. But indirectly, by doing that, they are buying physical gold. So I believe it's not going to have a significant impact. I would agree, and I would totally assert with the way the Prime Minister has convinced or try to convey everyone that it's a time you should not buy. But I think people who wants to buy, they are going to buy, and that's the difficult part. And now looking at the way oil is sustaining at 107, if it shoots up from here, and if there is a gold buying, so you see from last 1 month, the gold imports have been negligent. And going forward, I think the whatever imports are going to come, they are going to come through IIBS in a smaller quantity. So I think gold imports to remain subdued, but the local demand may not collapse the way it should have.
Got it. Well, and very, very put together as well, Kunal. But, we leave it at that. Thanks so much for coming in and giving us your perspective, both on oil and gold. Both of those are very keenly watched at this point of time as well. But appreciate your time here to the channel as well. But Moving on, earlier today we actually spoke to Timothy Moore. He is the co-head Asia Macro Research and Chief Asia Pacific Equity Strategist at Goldman Sachs about the Indian market sentiment as well as what he thinks of the domestic flows as well. Let's quickly listen into what he had to say as we wrap up on this edition of Lunchtime Tapes. Thanks so much for watching.
Well, in May 2026, the headwinds for India abound, where more or less midway through the earnings season, there's quite a bit that still has to pan out, but there are question marks about how India is dealing with the macro challenges, particularly the price of oil. The other question, of course, is how foreign institutions are looking at India and when they will change their perspective and start investing again, or at least stop selling India. I'm joined today by Timothy Moore, co-head of Asia Macro Research and Chief Asia Pacific Equity Strategist at Goldman Sachs. And quite a few questions that I have for you, Tim. First of all, though, thanks so much for taking the time and for speaking to us on NDTV Profit. Let me ask you whether your view has changed on India at all from when, as I understand it, you were positive at the end of 2025. Has that changed at all?
Well, first of all, thanks very much for having me on. The quick answer to your question is yes. I say so, it's sort of a reluctant yes, because it's not as though we were wanting to become more conservative in our view on India, but as the famous expression goes, when the facts change, you have to change your mind. And the fact is that with the outbreak of the Iran war and the spike in energy supply costs, that is something which impacts India to a greater and more negative degree than some other parts of the region. So when we upgraded our view in India at the end of 2025, as you correctly said, it was really that India had gone through a period of earnings downgrades and economic slowdown, which we thought it was coming out of. And in anticipation of recovery and profit momentum and valuations that were high, but we felt justifiable, we thought that the risk reward in India again looked better. But now with this new information coming out in terms of the energy shock, we've taken our earnings numbers down for this year for the MSCI India index on a calendar basis from 16% to 8%. And consensus is still at 16. So our concern is that as we look ahead in the next 1 to 2 quarters, we're likely to see the consensus come down to our numbers, and you have a market that's still trading at 20 times earnings with some earnings downgrades ahead of us over the next, call it maybe 3 to 6 months. That's typically not an environment where the market performs as well as some other ones, particularly North Asia, where, as I'm sure many of your viewers know, Korea, for example, and Taiwan are enjoying exceptionally strong profit environments because of the semiconductor cycle, and their stock markets are doing exceedingly well, with Korea so far year to date up nearly 100%. So against that backdrop, the relative performance of India looks less favorable, hence our view for a more conservative allocation recommendation.
I'll circle back to the earnings picture, but you mentioned the MSCI. I'm curious what you think about the weightage as things stand right now, because part of what you're saying, Tim, seemingly, despite the argument on multiples, is already priced in on a relative basis. Because if you look at India as a whole, and I don't know if that's the case today, but just a short while back, the weightage as a whole on the MSCI was lower than TSMC. That's one company. And so therefore, would you say that on balance, the bottom is kind of captured? And if we may not rise too much from this point, because incrementally it may not make too much sense, but in a way that bottom is protected?
I think that's a fair observation. So maybe I can just disaggregate that a little bit. So we see a lot of ebbing, sort of toing and fro in terms of the relative weighting of markets, whether it's in the broader emerging market index or even, in fact, in terms of global market cap rankings. In fact, one of the points we just made, which is a positive point for Asia as a whole, is that Asian markets are now 6 of the top 7 markets globally. Of course, the U.S. is by far the leader with a 77 trillion exchange level market cap, but markets number 2 to 7 are now all Asian. And that's because Korea and Taiwan have just recently surpassed, in market cap terms, both the UK and Canada. and now sit just behind India in terms of the overall exchange market cap. Now, more directly to your question, the North Asian markets have rallied very, very strongly, having delivered very strong profits. But we have to remember that, particularly in Korea's case, that's coming off a very, very suppressed valuation backdrop, where Korea started this year, 8 to 9 times forward earnings, whereas India is, as we know, is sort of 2021. So actually, because of the very strong profit delivery in Korea, the forward multiple is actually compressed and is currently about 7 times earnings, just because the earnings revisions have been so significant this year, mainly concentrated in the semiconductor sector, but not wholly. So if you strip Hynix and Samsung out of the broader Korean index, those are the two semiconductor stocks, the rest of the market still has earnings growing 42% this year. So my point here is that when you've got that kind of extraordinary profit growth going, which is way larger than India's, as I just mentioned, which we think will be about high single digits this year, I think that explains why investors have been more concentrated on the North Asian markets than on India. And if I could just add one point to that, if you may.
Yes, please.
It's that I really think that if we want to, we've had so many questions about, when will India's, time in the sun come back? We all know that markets go in cycles, that things are a little bit bleaker now, but these things don't last forever. I really think that the key to this will be when corporate India is delivering good profits again, then I think that the investor enthusiasm will correspondingly return.
Interesting. Okay, so it's not a macro worry per se, despite the fact that Tim, you're seeing a slide in the Indian rupee where today at all-time lows. And I was speaking to a commentator earlier today, a currency expert, who says that 97.5 for the USD INR pair is actually a possibility down the line this year itself. That's not the best prospect for a global investor looking to invest in India, because ultimately you're going to look at dollar returns, right?
Right. So I do want to be clear that there definitely is a macro component to our overall view.
Sure.
At the end of the day, the stock markets really run off of profit. So I went straight to sort of the sort of the focal. But obviously, the way you get there is thinking about what the background macro environment is, and many of the points you've just quickly summarized are very valid. Maybe just to expand on that, if you look compared to February 27th, which was the closing day before the war started, and where things are now, we've made, broadly speaking, 5 key changes to our macro views in India. We've reduced our GDP forecast. We've raised our inflation forecast. We've widened the fiscal deficit somewhat to 4.7% of GDP. We've increased our INR. In other words, we've weakened our rupee forecast. And we think that the RBI will now have another 50 basis points of hikes, just to kind of stabilize the environment. So those are all kind of 5 what we call negative deltas, 5 changes at the margin that are, less favorable. And then those in turn, along with the oil price increase directly, are what filter into our earnings forecast and inform our market view.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volumes. Firstly, let's see what's on the show today. Firstly, we'll be speaking with the management of ESAF Small Finance Bank. Now, the stock is up nearly 28% in the last 1 month. Good set of numbers. The loan growth guidance that the management has given for next financial year, that is FY27, is close to 20 to 25%. When it comes to Butterfly Gandhimathi, again a strong set of numbers in the fourth quarter. In fact, exceptionally strong is what analysts are saying. EBITDA margins have been increasing for the 7th straight quarter, and that is the consistency that we are seeing, and that's the reason the counter is up nearly 14% in trade today. Apart from that, we'll be also talking about Heritage Foods and Parag Milk. Both are in the same sector, but we are seeing divergent moves here. Heritage Food is at its 4-month low, while Parag Milk has snapped its 2-day falling streak. The stock is up nearly 5% in trade. What's the divergence? Why the divergence here is something we'll try to decode on the show today. And lastly, we'll be speaking about a host of companies like Antelope Ceylon, Jindal Drilling and Deep Industries. What is the news behind this? How does the royalty rate cut does benefit these companies is something that we'll try to discuss on the show today. The stocks are up nearly 5 to 12% in trade. Right now, if you look at the markets, Nifty is trying to find some support near the 23,500 level. We are slightly above that level. So it will be very crucial to see whether we break that level or not in days trade today. Technical analysts do believe that 23,500 is a strong support zone coming in for the markets. Look at the sectoral indices, is the PSU, it's the IT and the real estate which are down the most in trade. Over 3% fall is something that we have seen, while on this flip side, it's the PSU names and the metal names which are managing to stay in green. Not much of a gains that we are seeing, just 0.5 to 0.1% up in green. But Mahima, when it comes to small cap names, selective counters are still seeing a strong buying action. If you could highlight those.
Yeah, absolutely, Somit. In fact, one of the managements that we spoke to yesterday, Saskin Tech, is also up 13% today. Yesterday was Dr. Napasaki, today up 13.8%. Butterfly Gandhimathi, as Somit was mentioning, on the back of strong numbers, also up 13%. You've also something like a Sarkar Health, which is also doing very well in trade today, up 11%. A lot of these counters on the back of either news flow, news development or earnings is what we're seeing, the major development in terms of where the counter goes. Something like Jindal Drilling also up 8%. We're seeing counters like Satin Credit Care, which is also up 5.6%. Something like Mirae Asset also doing fairly well. But, on the flip side, you have counters that are under pressure, includes something like Dynamic Cable, which is down around 18% You have Orion Pro Solutions on the back of that numbers coming in. Plus management also, when they spoke to NDTV Profit today, did say that, the outlook remains cautious right now, down 12%. Some of steel also down 10%. You have a lot of profit booking, a lot of pressure in terms of jewelry counters as well. That continues for second day in a row. Mobiquick also down around 8%. Heritage Foods also one of the counter which is down 7% in trade. So that's with regards to where a lot of these names go, but as promised, let's try to get in the management of ESAF Small Finance Bank, and we are joined by K. Paul Thomas, who's the MD and CEO of the company, joining us now. A very good afternoon to you, Mr. Thomas, and thank you so much, first of all, for taking the time. My first question to you is that overall Q4 has been a good quarter for you. Largely, margin was supported by lower costs as well. Give us a perspective of what's worked and not worked, as to what's not worked this quarter.
Thank you for good afternoon. Thank you for having me on the show. So Q4 was overall it was a good quarter for us. We have after having problems of 5 quarters, we come out of it in Q3 itself. Q4 we have recorded a profit of 24 crore, and growth was back. So on the asset side, we have grown 19.5%. On the deposit side also, 11% growth is there. And on the deposit side, 92% of our deposits are granular retail deposits. That is a very positive aspect. And major change happened during these last 2 years is that we have strategically identified the asset diversification program. We introduced a strategy called MARK, my MSME, Agri, Retail, and Gold. And we brought down our the unsecured book from 70% to 39%. And gold loan constitute around 39% today. And the other assets are also growing. So both on the asset side and on the deposit side also, we were able to make a very good positive impact.
Okay, if I look at your net interest margin, it has expanded on a sequential basis. I believe the number stands at around 7.3%. Is that sustainable over FY27 as well? If you could give us some guidance on that front.
Yeah, it is that it may, because of the asset mix change, it may, but around 6% we will be able to maintain it, because the the microfinance portfolios we have reduced. So the other assets are not, the yields are not to that level. So there will be a small impact on that.
So where are you seeing the NIM number for FY27?
Yeah, close to 6%.
Okay.
Mr. Thomas, your credit costs have come down to around that 4.1% mark. And if I'm not wrong, you've given a guidance of around 2%, coming down to that 2% mark by FY28. What is giving you, that kind of confidence? And what is going to lead to that cutting down the credit cost by almost half as to where it is right now?
The one on the overall, the SMA book is almost, if you take SMA 1 and 2, there is a reduction of 50% reduction in compared to 25 and 2026. So that is one confidence. The second, we have improved our underwriting process specifically for after the SROs, Sadhan and MFIN have introduced the guardrails for micro loans. So we have strictly implemented that. So that also improved our collection efficiencies. So the current collection efficiencies have reached to 98.5%. So and the other books, the diversification also in gold book and other retail book, the NPS, the slippages ratio is very, very less.
Does this mean that the pain point in MFI segment is now over?
Yeah, that's what we are experiencing almost across India. What we are seeing that it is over, because the all institutions, banks, MFIs, all have implemented the state guardrails. So that is giving results now.
Mr. Thomas, you've said that overall the loan growth guidance is around 20 to 25% going ahead. What are the key areas that you're expecting, or key drivers that this growth will come in from?
Over the last 9 years, we have set up our well-defined, diversified, geographically diversified decentralized branch network. We have 804 branches. We also developed a partner network, business correspondent network, around 32 institutional BC partners we have. They have set up around 1,047 customer service centers. So these franchise we built over the last 9 years is going to, and also last 1 year we built our credit area asset centers for the retail loan processing. 33 area asset centers we have set up over the last. So this is going to give results for achieving our credit growth. And we have historically we have been growing at this level.
If you could just tell us what is the share of gold loan in your overall portfolio, and where do you see it, say, 1 year down the line? And do you see any impact of PM Modi's comment on delaying of buying gold?
See, our overall gold loan percentage is 39% today. So we will be maintaining around 40-45% will be going forward. We'll be maintaining the gold loan, and I'm not seeing any big immediate impact on, because already gold is there in our country. So when it is a small percentage only, it comes for availing gold loan. So it is about the new buying. So already people have gold.
Mr. Thomas, as a part of your digital monetization, the Bank 2.0, which is going to be your platform transformation, a core platform transformation, is scheduled to be completed by Q3 FY27. Give us more details on that. And once that it is completed in Q3 FY27, what are the synergies that it brings in?
So we are moving. It's a big bang migration we are doing. Actually, we are migrating our CBS to FlexCube, Oracle FlexCube, and also along with many of the surrounding systems also changing. Our new mobile banking and internet banking platforms we are introducing, and new CRM also being integrated along with the new transformation. So this work is progressing. The migration mock trials are happening, and training of the field, the branch team is also progressing. It's also happening. So we hopefully that will give a very good customer experience after we migrate.
Okay. With regards to your overall the mark portfolio that you call it, that forms around 57% of your advances. Within MSME, agri, retail, gold, which of this is kind of seeing the strongest growth and the least stress currently?
It is gold only, but now this year we will be focusing more on building our MSME and the retail book.
Just wanted to check on this. You said you're looking to migrate. By when will you do this application, and by when do you expect the migration from small finance bank to overall complete bank to get over?
To fulfill the eligibility criteria, we will have to wait for 2 years. So then I think after that, when we become eligible, we will be applying for the universal bank transition.
You will do all the pre-prep work that is required for the application, I believe. The asset diversification and whatever other norms are.
That's what we have already working on it. Already started the work on that.
Okay.
All right. With regards to overall GNPA, which is improved to around 5.4%, can you give us a breakup as to how this will fare going forward, and in terms of the breakup between unsecured as well as the microfinance books, how is that going to look like?
Going forward, we wanted to bring down to close to 2%. That is our aim, and majority of the NPS GNPA comes from the unsecured book only. All
right. Okay. So
just last one thing I wanted to check with you, sir, on what is the quantum of ECL related provisioning that the bank might have to do?
So we are small finance banks are not included. Actually, we may come at the. We have not started the work on ECL provisions because SFBs are excluded on that.
All right, Mr. Thomas, thank you so much for taking out the time and, helping us answer all those questions and speaking with us at NDTV Profit. I think we're also joined by Tapan Doshi, who's a research analyst at Tapan.in, joining us now. Tapan, a very good afternoon to you. You heard the management. Overall outlook looking very strong, but from your perspective, what should an investor do right now with regards to this counter?
Very good afternoon, Mahima. Yeah, see, the management looks quite they're quite promising, and they are saying that from here the things will improve. Because see, the improvement is coming from last 2 quarters only. Earlier, almost 1.5 year there was a losses. Now the gross NP is actually going down slowly and gradually. The main thing is microfinance stress is coming down. That's a big thing. Credit cost still remains high, but I think if in future asset quality improves, that will add to the profitability. Retail deposit growth also they are targeting. So we have to see how the gross NP is improving in next few quarters. And profitability improvement will bring the EPS up. And overall, if you see from last, I think 20-25 days now, the stock is already up by 50%, 40 to 50%. So I think the most of the gain is already there. But I still wait for next 1 quarter now, because already stock has gone up a lot and want to see how they are going to improve on gross NP. So I'll wait for 1 more quarter, then only get into it. Otherwise, we have to see at least 15-20% and then someone want to enter, then only they can enter.
Right, before we move on to our next small cap stock, let's get in Sharad to understand what's been buzzing on the F&O side.
Well, to be honest, it's been a big sell-off happening and a basket sell-off in most of the segments. There's nothing major happening here. NTPC, Tata Steel barely in the green, but most of them are seeing red. At 10:45, what the update was, it's much more worse than that. Important technical levels have been broken. And just look at the stocks, IT stocks, and even your consumption stocks, banking stocks, all taking a big hit. Let's see what's there in the stock-specific markets when it comes to the long build-up. And I think there's no guess. It's ONGC and Oil India. Last time also these stocks were there on back of important developments. And of course, the Brent crude is also rising. That's aiding this interest in these two counters as well. Let's apart from long build-up, let's look at the other interesting aspects of short covering. Pidilite is there, that's around 2% and Lupin, but no major move, to be honest, coming when it comes to the long, short covering also. Apart from this long unwinding, we are having Adani group of stocks. And also let's focus much more on the other stocks as well. Let's just get in the other short build-up, and this includes JSW Energy and Keynes Tech. JSW Energy is sell-off, of course, coming back of earnings, but EMS stocks are also taking a big hit, and that's why we are seeing a sell-off happening. So these are the stocks which are in focus in the F&O space.
All right, Shad, I think Keynes is the one counter that we'll be watching out for the earnings and in terms of guidance as well. But thank you so much for getting us those F&O cues. With that, time to slip into a very, very short break, but we'll be talking about more small cap buzzers on the other side, so do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Well, the next stock that we'll be talking about is Butterfly Gandhimathi. Now, a strong set of numbers is what the company has reported, and as per analysts, this is an exceptional quarter with 7th consecutive quarter of margin expansion. What led to this? Let's get in Jasmeet with more details on this.
Well, thank you for that. Before we get into the Q4 result of the company, let's quickly understand what does the company do and a bit background about the company. Well, the company operates under the kitchen and home application manufacturer, and they also operate under the name of Butterfly brand. Now, in terms of what they produce is they make LPG stoves, add pressure cookers and mixer grinders as well. And this quarter saw a healthy volume growth in terms of the overall movement. Now, in terms of the overall shareholding pattern, we have Compton Greaves, which nearly holds 75% stake in the company and is a promoter of the company as well. Now, in terms of the stock performance, the stock is up nearly 13% not today, but over the last 1 year, the stock has been up more of nearly 2%, while over last 5 years, the stock has hardly moved 4%. So there's been a flattish stock for several years, but today it's up in trade about 13%. Now, in terms of the overall Q4, we do see exceptional quarter for the company where the revenue is up nearly 16%, while the PAT has seen an uptick of 26.7%. Now, while the overall EBITDA margin expanded for the 7th consecutive quarter, now is at 8.9% versus 8.7% in the previous quarter. Now, in terms of what led to the overall growth is the pressure cooker sales that increase in the 4th quarter led to the overall expansion in terms of the volume. Further, the company also says the gas stove also was something that drove primarily the growth in the Q4. Further, the electric cooking application also saw higher adoption given on the back of that lower LPG availability. The company saw high sales in terms of the electric kettles and electric pressure cookers, while breakfast application also saw a under new brand which saw early traction as well. In terms of the other key financials, the revenues of 16%, while EBITDA margin at 8.9%, and the profits uptick of 26%. If you look at the full year figure, we see again a revenue up by 9%, while the EBITDA saw an uptick of 22%, while lastly the PAT grew at 40% on the annual basis. So all in all, we do see a good quarter for the company, but if you look at the overall stock performance, the stock has stayed flattish over several years.
Right. Tapan, how are you looking at this counter, Butterfly Gandhimathi? Would you be interested in buying this counter when it's up around 14%, or would you play this via Compton Greaves only?
If you see for this company, the margin pressure may come in the next few quarters because of the commodity cost. And again, competition, Crompton and Prestige are giving a very good competition. Again, it's much more a seasonal demand. Profitability is still quite moderate, and raw material volatility risk is there. So if you see the valuation, it's on premium only. It's not so cheap comparatively. But yes, kitchen appliances demand will be strong in future. So we have to see how the premium product mix will be there. But looking at the valuation and all that and seeing the competition, I'll give a miss to this counter.
A host of counters actually that stand to benefit or either financially or sentimentally because of the news that has come in, where government has announced that they will be cutting the oil and gas rated royalties. Now, Antelope Ceylon, Jindal Drilling, Deep Industries, these counters are up anywhere between 5 to 12% in trade on the back of this news. So what is the news exactly? So government will be reducing the royalties that they charge on exploration of oil and gas. Now, for oil, the rates have been reduced to 12.5% from 20% earlier, and for gas, the rates have been reduced to 9% from 10% earlier. Now, why the government has done this? Because their intent is to stimulate investment in the oil and gas exploration business in India. They're doing this to encourage upstream production and also to attract foreign investments in the oil and gas segment that we have that is the aim of the government. Now, how does this benefit the three companies that I just mentioned? Now, what does Antelope Ceylon do? It has 9 oil fields across offshore Mumbai and Mahanadi. So this cut in royalty rate will actually lead to increase in the company's realization, because royalty is something that Antelope Ceylon used to pay to the government. Now they have to pay a lower rate, and hence the realizations will increase, and hence their EPS will also increase because of this. What does Jindal Drilling do? They have offshore jackup rigs, around 6 of them, 3 of them they own, while 3 of them is rented. Now these jackup rigs could see more demand if there is more investment that comes in the oil and gas exploration space going forward. So it is sentimentally positive when it comes to Jindal Drilling. And similarly for Deep Industries, they have around 18 operating rigs across Gujarat, Tripura, Assam and Andhra Pradesh and Jharkhand. Now, if again there is more investment that comes in, there will be more demand for these rigs, and they could charge a higher rate, which in turn could benefit these companies. But as of now, it's sentimentally positive for Deep Industries and Jindal Drilling, and financially positive only for Antelope Ceylon in terms of higher realization in both oil and gas. Tapan, how are you looking at these three names when one has to play this cut in gas, oil and gas royalty that the government has done?
See, all the three companies have a good financials. No? They have been able to perform in last few quarters very well. Even they are able to maintain the margins also. Of course, this news is positive for all these three companies, but it's a long-term thing. So we have to wait how the things are going to pan out in future. But if you ask me specific any company, then I'll go for Jindal Drilling. I think that looks much better. And from here, the prospects look good. So out of three, I think I'll go with Jindal Drilling.
All right, so that's the view coming in on all of these names. But the other pack of stock that we tend to discuss is the milk pack, where both Heritage and Parag Milk are buzzing today, one positively and one negatively. Heritage on the back of numbers being, especially the EBITDA and bottom line being impacted on account of tight milk supply, which led to procurement issues, and that's why the company has seen a pressure on margins. Almost 300 basis points of a margin downtick is what we saw. But on the other side, Parag Milk today did announce it was in pact with Tetra Pak to kind of launch a milk-based protein drink. Their own brand, that is Avatar, is going to launch a ready-to-drink protein cold coffee. In terms of Q4 also, numbers were very well. Q4 new business saw growth of 109%. Overall, in terms of milk prices, they inched up, but they did take price hikes to kind of cover that. So, two different working in the same industry, but working in divergent range today is Parag Milk Food and Heritage Foods. Tapan, how are you looking at both of these? And if you were to choose anything from this space, would you choose any?
I choose Parag Milk now because if you see, they are going to add much more value-added products in future, and hopefully the EBITDA margin recovery will be there. Again, protein waste segment expansion is quite good. Of course, there is high competition in dairy segment, so one has to keep in mind that margin pressure. But it's a working capital intensive business. But hopefully, they are going to have a double-digit revenue growth in future. That is what the management is talking about. So, looking at the strong brand and all that, I think I'll go with Parag Milk. I think even at this level, one can buy it in a SIP manner.
Okay, all right. So that's the view coming in on Parag Milk Foods, and SIP manner is something that you can go ahead and kind of invest in this counter. And like Tapan said, value-added products are contributing very well to the company as well, and that's where the new age business growth is coming in from. But Tapan, thank you so much for taking out the time and helping us with understanding all the small cap buzzers that we discussed today. Viewers, we are completely out of time on this edition of Small Cap Buzzers. If you've got stock-related questions, then do stay tuned because Ask Profit is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri. With me as always is Mahima Vachrajani, and we'll start taking your queries very shortly for the next half an hour or so. You can start sending them on number that's flashing on the top of your screen. You can also call us, speak to us as well as our guest on your stock related queries as well. But as is visible, the market's mood is off by quite a bit now. It's down to 23,500. And that level also got broken down. So we are in a territory we've not been actually at for a very long time, to say the least. 23,800, 23,600 continue to be a good support level for the markets, but both of those levels got broken down today. So we're now down almost 330 points at this point of time. And the heat map shows you this. The IT index continues to be under pressure today, led by what we are seeing also from Anthropic's peer in terms of opening as well. Let's look at the Nifty stocks first and then go to the sectoral heat map in a bit. And that's visible in names like TCS, also Tech Mahindra as well. You're also seeing Infosys down 3.5%. So Infosys, TCS, both stocks have hit a 52-week low. TCS down 4.6%, and you're also seeing pressure today on the other stocks like Jio Financial, Bajaj Finance as well. So largely a red screen that was visible, only 5 to 6 stocks that are up today. The oil marketing companies, ONGC, actually the refiners in that sense are also leading the trade given the uncertain geopolitical environment. Sectoral heat map also shows you that pressure on the Nifty IT today down 3.5%. You're also seeing pressure now on Nifty Realty, Defense, which are also down 3% each. And the advanced decline ratio doesn't lend support today. So we've seen even the last leg of support that was visible in the broader markets, that have also gone away. And now we're actually seeing that the declines are actually more prominent in that sense. So almost 100 stocks, roughly around 490 to 500 stocks were advancing just in the last hour. That has also reduced by this time of around just 380 points at this point of time. And the mid cap and the small cap show you the pressure. Small cap was down 2% at one point of time as well. Mid cap is now going to that level, while the small cap 250 also has actually gone and breached that, down 2.5% now at this point of time. But it's a good time to get in your stock related queries and welcome in our guest as well at this point of the show. You have Akshay P. Bhagwat on the technicals, for the senior VP at JM Financial, and Radharaman Agarwal, Managing Director and CEO at Swom Advisors. Gentlemen, both of you, thanks so much for joining in. Let me go across, take actually just a tech check from Akshay. Akshay, good afternoon and welcome to the show. Where are you seeing the current levels of the Nifty? Because you're seeing 23,500 also getting breached now. Is there any kind of near-term support for the last hour of the trading session?
Yeah, good afternoon to all. So for the last hour of trading session, there is significant put writing at 23,500. We are trading below the support as of now. But considering the high open interest concentration, somewhere 23,450 to 23,500 can be the support which is applicable for the next hour of trade, considering today is the weekly expiry for the Nifty. But overall, I think one shouldn't be looking at buying opportunities for this dip, because this support is just for intraday for the next 1 hour. Overall, I feel the chart gap of around 23,150, which is still evident, can be filled, and that should happen very soon. And that is the downside target one should work with.
All right, so that's the view coming in on the benchmarks, but let's start taking your stock-related questions. Pradeep from Vizag is calling us. Pradeep, a very good afternoon to you. What's your query about?
Yeah, very good afternoon. Thanks for taking the query. I have a query regarding BEL or Canara Bank. Which one to enter? This is the right time if it is.
Okay, all right.
For the short term, 3 months, 3 to 6 months.
Sure. Okay, got your question, Pradeep. I'll take this up with Akshay. Akshay, where are the charts looking more attractive? Is it BEL or Canara Bank?
Yeah, Canara Bank, I think, is better placed over BEL, because I believe there is a dividend being declared post in yesterday's quarterly results of Canara Bank. And the stock reaction to today's negative market is more muted. It is 0.8% positive in the negative market. So I think overall, if strength comparison on charts has to be made, Canara Bank is the better alternative for short term. The support zone is around 125. If the stock bounces from the support, from a 3-month target, we can look forward for targets till 150 to 155.
Got that view, Akshay. But the next one that's coming in is from Yamini from Chennai. And she's asking a question on Sansera Engineering, bought at 2415. And she's holding 50 shares. Now, asking what she should do with this counter for the long term. Radharaman, good afternoon. Welcome to the show. We've seen that the aerospace side of the business now is getting a lot more value. And hence, you've seen a re-rating over the last couple of months. Is that here to stay for Sansera right now?
Yeah, good afternoon. I think it's a good time to stay on and then be long on the stock itself. So it will be a good time to keep the stock and continue to hold for a medium-term perspective.
Okay, all right. So that's the view coming on Sansera. The next one that we have is from Udit, who's writing us from Mumbai. He's asking about ABB India. He's got 5 odd shares at the levels of 6380. Wants to know if he can add more at the current level from a long-term perspective. Radharaman, your view on ABB India?
So ABB, in fact, came with the results. The results are a bit negative, but I think it's a good time to accumulate from a medium-term perspective. It's a good price to enter, and given the space, I think it's a good time to add now.
Well, the next question that's coming in now, this one's from Soumya from Bangalore, and her question is on Equitas Small Finance Bank. It's a Q4 was strong for the company. She bought 200 shares at 67, so very close to the current market price, and asking if she should, hold, sell or average down at this point of time. Radharaman, coming back to you, because the first such quarter after many, I think 4 to 5 quarters of underperformance, should she continue to hold?
I think she'll continue to hold. I think the numbers are good, and then it's better to keep a hold on the stock.
All right, so that's the view on Equitas Small Finance Bank. The next one that we have is on L&T. Our viewer Ekambarai from Hyderabad is holding 10 shares at the levels of 3,500. He says that he wants to book profit and re-enter. Give your recommendation. Since the market is bearish is what he's saying. Akshay, I'll stick with you for this one. Would you kind of recommend that strategy, or do you think that averaging out makes sense?
I think yes, if it's a short-term trade with a month's time horizon he's looking forward to, then 3,500 is a good entry price he got in the prior correction. You can book out profits, at least half quantity at the current rates. And if you're looking for re-entry on dips, then 3,500 again, if you are getting those prices, considering that the markets might stay bearish for 1.5 next months, and you get those levels, then that's a good level to re-enter again in L&T.
Got it. That's the view on L&T, but Sridhant is now calling us and he has a stock-related query on Vedanta, I'm guessing. Sridhant, very good afternoon. What's your query?
Good afternoon, Puneet. So I was looking for a tactical bet on Vedanta.
Okay.
I got like 560 shares and I averaged it at 317.
Okay.
So I am looking for, maybe like a 2 to 3 months if, my average price would actually cross and maybe it hits 320 or 325, something like that.
Got it. Sridhant, do you have, this is the first time you are buying Vedanta, right? After the demerger, so you don't have it in your portfolio.
No, actually, so I had like initial just 10 shares of Vedanta, and I bought it around like 570.
Okay, and then you have
now I deployed the remaining 550 shares.
Got it. Well, Akshay, on Vedanta, because we've now seen the demerger happen, and then essentially this will become a holding company. So in the next 2 to 3 months, are you seeing any momentum right now, or is it a difficult one to call for now?
See, on the charts, the prices have had their share of a positive move till now. And since the corporate action is done and dusted, now it's the next phase where things will not be so smooth as it has before. It will be a bit of a rough ride. I don't say it's a reversal, but I think the stock might be confined in a range of 320 on the upside and somewhere 270 on the downside. So if you're really keen on averaging, you need to give some more time, have patience. 275, 280 is the apt level to take a re-entry in the stock on the long side or on the buy position. Wait for those dips. Your stop loss is 260, and a recovery from dips of 275 should see a revisit of 310 to 320 again.
Okay, all right. So that's the view coming in on Vedanta. The next one that we have, I think we've got Mohan who's calling us from Mysuru. Mohan, a very good afternoon to you. Go ahead, ask your question.
Just want these 11 shares of MTAR. So I just wanted to know, can I add these shares for furthermore for long-term horizon?
Was your buying price 1320, Mohan? Am I reading that correctly?
Yeah, 1320.
Excellent. So I want to understand as to what was your thinking behind buying MTAR at those levels, because you've spot on bought it at such lower levels and you're sitting on handsome profits. So just wanted to get a sense.
Is more on more defense and defense sectors. The sectors, government is.
Right. Okay. Got it, Mohan. So got exactly what you're trying to say, but you're looking at this from a long-term perspective, I believe.
Yeah, I'm just looking for long-term. Can I add buy some further shares on this?
Sure. Okay. Radharaman, the stock is currently trading at 6,385 rupees. Do you think averaging out at these levels would make sense, because his buying price is as low as 1320, and since he's a long-term investor, what would you suggest?
I suggest that he should hold on. He should not add further quantity, but I think he should definitely hold on. I think he has held it for a good amount of time, and he's sitting on good gains, and he should capitalize on that gain and keep holding on.
Got that view, and definitely a beneficiary of Bloom Energy and all those orders coming in on MTAR Tech. But go across for the next question from Prashant from Hyderabad, and hopefully Mohan, that answers your question. Prashant is holding on to 175 shares of Force Motors bought at 20,000 rupees. Now he's asking if he should hold on or sell from the short-term perspective. We've just seen a breach of that level at 20,000. Akshay, is this a key support level? What's your view on the stock now?
See, for Force Motors, the view is neutral from short term. The stock has been choppy, but its range of 19,000 support is intact. That's where some key long-term moving averages support the stock, and the resistance is at 22. So the suggestion is probably from a couple of months view, continue to hold with a stop loss of 18,500, and any recoveries around 22,000 should be looked to book out profits.
Got it. So that's Akshay's view on Force Motors. Hold is what he recommends, at least in the near term as well. But across another query now, and caller who's Varaprasad is now joining in for a stock query. Good afternoon, Varaprasad. What's your query?
Good afternoon, sir. I have bought Ashok Leyland at 149, and when it have gone to 191, also haven't sold it. I'm holding around 220 to 230 shares. Now the price has again hit back to 155. So I just wanted to know what is the prospective selling price for me at this point of time, or should I hold it for long term, or should I just sell it off? I just wanted to know that.
And did you buy this initially looking at the fundamentals, or was this more of a chartistic view which turned out well for you?
I have initially done like that. I have brought it, but when the stock was nearly 15 to 20% up, I thought I'll still wait instead of capitalizing on it.
So it's
but
from the charts kind of perspective that you had actually bought it, right?
Yes, correct.
Got it. Okay. Akshay, on Ashok Leyland, actually, as Varaprasad highlighted, there's been pullback from those levels of around 200. What's your view on the stock now? Because it's trading bang on what he bought it at.
See, short-term prospects, technicals are negative for Ashok Leyland. This is only for short-term, where the stock can revisit its swing lows of around 140. So you should be prepared for targets of 140, 142 in the coming days. And if it's a short-term bet, then I believe you should be looking for exits and not adding on dips.
Okay, the next one is on Tube Investment. Piyusha Kanodia from Jaipur has bought 130 shares at levels of 2796. Currently, you're sitting on minor profits is what she's saying, still at 26,000 profit. Wants to know if she can hold, average or sell at the current price. The quarterly results are to be declared tomorrow is what she's saying. Akshay, your view on this one, considering the charts, should she continue to hold?
Tube Investment, if you look at the chart structure, still it is positive, though neutral for the very short term, but the support at 2900 is a pretty strong support. So continue to hold. Your stop loss is 2850 and potential short term targets should be 3250.
Got that view, Akshay, and that's hopefully Piyusha that answers your question. The next, another caller now dialing in from Hyderabad. And Murli has a stock query for us. Murli, good afternoon to you. What's your query?
Good afternoon, sir. I have HFCL at an average of 75 rupees since last 5 years.
Okay.
And I just wanted to know under 6 months to 1 year, is there any upward trend or should I remove my investment and leave the shares as it is for next couple of years more?
So Murli, you've been holding on to these shares for the last 5 years, you mentioned, correct?
Correct.
Got it. Radharaman, he's been holding on, as mentioned, at 75 rupees. There's been some quarters where you've seen trajectory, but that has failed to continue, right? Over the last couple of years, we've had these bouts. What would you recommend Murli to do now?
So I would recommend that let him hold on, because I think he has already had a patient period of waiting and we see some momentum and certain movements in the stock. So in fact, it's a good time to hold on and maybe reap the benefits of whatever long-term holding he has been doing.
Okay, all right. So that's the view coming on HFCL.
Okay.
And we've got Anjani, I think, who's calling us from Hyderabad. Anjani, a very good afternoon to you. What's your query on?
Yeah, very good to you, ma'am, and all of you. Thanks for taking my query. So I wanted to buy Vimta Labs, fresh entry. What is the entry point and what is the long-term and short-term targets for this?
Okay, got your question, Anjani. Akshay, your view on the charts for Vimta Labs?
Yeah, so for Vimta Labs, it's the charts are negative, and I would not recommend you to buy this at current levels because 440 is the immediate short-term support, and you might head down further till 400. So I would not recommend to buy Vimta Labs.
Got that view. I don't know, Mahima, if it's like everyone's had a good lunch, but we're getting so many calls today. I don't know if it's that or if it's the markets.
It's the markets.
It's the markets. Unfortunately, everybody's worried at this point of time.
Or probably, everybody's looking at a point where they can enter. So
enter
both
that as
ways,
well,
yeah.
yes. Unfortunately, a lot of queries that we're getting in, but keep them coming as well, and we'll try to take all of those in the remaining part of the show as well. The next question that's coming in actually now is from Jatin from Chandigarh. He's holding 1,000 shares of Infosys at 1390 though. Stocks at a 52-week low, as I mentioned, and he's in loss of almost 2.5 lakh rupees. Asking, if AI threat continues to the company, but Akshay, he's actually asking a 3-month view on the stock. It might be very difficult to go back to 1390 in the next 3 months, but what's your recommendation on the stock now that it's broken the 52-week low again?
So, see, the charts are negative. It's almost near the lows of the last few months. And still, although oversold on the charts, I do not see any major recovery signs as yet going by the chart patterns. So, the view is to exit. Irrespective, although it is oversold, it's an exit.
Okay. Torrent Power is the next one. Anjali from Bengaluru is asking if this is the right time to enter into Torrent Power, wait for the earnings. Radharaman, your view on Torrent Power?
I think it's a good time to enter into the stock. So it's a good time to maybe add on at this point of time.
Got that view. The next question that's coming in now, this one, it's, on Dixon Tech, and a viewer is holding shares at 10 shares at 10,790. So 10,790 just slipped below that mark today. And asking Akshay if you should use this opportunity to average or exit. We also have the results today. So a lot of those fundamental factors, would you just avoid trading into it right now at this point of time?
See, ahead of results, it's always a difficult call, but going by how the IT results has been lately, I think most of them have been muted or there has been a sharp negative reaction. So one should consider that factor. And even technically, Dixon is trading in a range and seen selling again emerging from the resistance zone of 11,500, which signals that targets of 9,500 on downside can be revisited. So it's a negative setup which continues for short term in Dixon Tech, and ahead of results, still I would say better to take an exit and not wait on hopes.
Okay, all right. So time for our rapid fire round now. Akshay and Radharaman, you both know the drill. The first one is from Anand, who's writing us from Bengaluru. He's got Chennai Petroleum 73 shares bought at the levels of 997. Hold or sell from a short-term perspective, Akshay?
Exit.
Lalu Raji from Kerala is holding on to SBI at 1030, asking for a medium to long-term view. What should he do now? Is it a good time to average, Radharaman?
You should exit this.
Geo Financial 400 shares bought at the levels of 232. What are the charts indicating, Akshay?
Negative 220 can be revisited.
Biswajit from Kolkata is holding on to 290 shares of LIC Housing bought at 612. Asking if he should continue to hold for the long term. Radharaman?
You should hold on.
Godfrey Phillips 50 shares bought at the levels of 2214. From a long term perspective, continue to hold, sell. Radharaman?
You should hold.
Reshma from Qatar is holding on to Anand Rathi stock broking at 632. What should she do with the 800 shares, Radharaman?
You should hold on.
Is this the right time to replace TCS by Netweb Tech on the charts, Akshay?
For Netweb Tech, I would say better to avoid IT as a pack.
Okay.
Got it. HDFC bought at 800 rupees. Is it good time to average down, Radharaman?
No, you should sell.
Okay. Garden Reach bought at the levels of 3,200 quantity is what Darshan is holding. Hold or sell, Radharaman?
Sell.
BEL 100 shares bought at 456, Akshay. Ramesh wants to know what he can do with the counter now.
It's weak. 400 is the short-term downside target.
Premier Explosive bought at the levels of 522. 200 is the quantity. Currently on a loss of 4,000 rupees. Hold, sell, average, Akshay?
Sell.
Eternal bought at 258 by Lalita. She's currently sitting on a loss, Akshay. What's your view on the stock?
I think exit. Downside 220 is... 220 is the downside.
Go ahead. HDFC Bank is the other one. Arvind has bought... Arvind wants to know whether does it make sense to make an entry right now, Akshay?
Yeah, it's better to wait, not to make an entry. 200 and I think it's still heading down for possible 3 to 4% correction from current market price.
Vanita wants to know between Piramal Pharma and Marksans Pharma, what's a preferred pick? What would you recommend, Radharaman?
Piramal Pharma.
Polycap 4 shares bought at the levels of 7907. Sell, hold, buy. What should be the next course of action, Radharaman?
Hold.
Akhil from Pune is holding on to Sandur Manganese at 163. He's asking what's a 3 to 5 year view, Radharaman?
You should hold on. Yeah.
Vari Energies bought at the levels of 3240. Short term target on this one, Akshay?
It's not a buy. Downside can be around 2,900.
Suresh from Kerala is holding on to KPI Green. Can he buy more at the current market price, Radharaman?
No, you should not buy.
Okay, BSC or ICICI AMC, which one is a better bet for the next 1 year? Radharaman?
ICICI AMC.
Dr. Bharat from Andhra Pradesh is holding on to Rain Industries at 164. What should he do and what's the target on the stock now, Radharaman?
So I think you should hold on.
50 shares of Meesho bought at an average price of 173. What's the fundamental view on this one, Radharaman?
It's a good stock to hold.
NHPC or SJVA, and what's a better pick for Shankar? Radharaman, what would you recommend?
NHPC.
NTPC Green bought at the levels of 98. 500 shares is what Murthy is holding. Continue to hold. Book profits, Akshay?
Continue to hold.
On Aeroflex, Akshay, Abhin from Kerala wants to know a view on the stock.
Aeroflex Enterprises or Industries?
Enterprises.
Enterprises can see the slight correction short term till downside till 90.
90, got it. Well, that is the end of the rapid fire, as well as this edition of Fast Profit. Akshay, as well as Radharaman, thanks so much for giving us your time and your inputs as well. But viewers, thanks so much for sending across so many queries just in the last half an hour. I know it's been a tough market scenario, but do stay tuned. India Market Close comes up next. Thanks so much for watching.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. With me is Hiral Dadia. And, well, the thing is that the markets are at pretty much the low point of the day. It's not the best picture. It is, of course, the weekly expiry. And it's panning out the way that we expected this morning, Hiral, with cuts of about 350 points for the benchmark Nifty 50. But the difference today is that while in previous sessions, particularly over the last week and a half, you've seen resilience in the broader markets, today that is not visible.
That is not visible, and what's happening is the second appeal that has come in from Prime Minister Narendra Modi last night. Post that as well, you are seeing a lot of corporates who are giving their reactions in terms of what could happen, because you see the kind of spike that's come in terms of Brent yet again today. You see the weakness that's coming in terms of the Indian rupee as well. I think altogether that entire package is playing out, which is not really favorable for the Indian markets right now, and that's where we stand. If you see in terms of Bank Nifty as well, a 1.5% cut that's coming in there, very similar to what's happening with regards to Nifty 50. And as Alex was mentioning, in fact, the cuts in terms of broader markets are much deeper as compared to benchmarks.
Let's pull up those intraday charts for the mid-cap index. Actually, pull up the chart, because I'm pretty sure that you're very close to the low point of the day. About 2% for the mid-cap index. Remember, it's coming off from all-time highs, this particular index. The small-cap index also seeing substantial cuts. 2.5%. So therefore, what you will likely see when you pull up the advanced decline ratio is that we'll be at the widest point of the day, and it's IT that is losing ground from the large caps, but we're at the widest point of the day for the advanced decline ratio as well.
This is the longest losing streak that we are seeing in terms of broader markets as well after quite some time, right? That euphoria that was there for a little bit, where you saw that buying interest that's fading off. And I think people are concerned, Alex, right now as to what do we do? Do we just pull out and sit on cash, or what is happening? So I think there needs to be some bit of clarity that markets are awaiting right now. Let's just pull up the heat map in terms of Nifty 50 or the contributors as well, and that will tell you something. I mean, look at what's gaining. You just have, 6 or 7 counters which continue to trade in the positive. Again, you have a ONGC which is up in trade, but that's only because of the royalty cut that has come in, which is favoring it, and a couple of metal counters. But look at this. Shriram Finance, Adani Ports, Tech Mahindra, TCS, Geo Financial Services, Titan, Adani Enterprises, BEL. You know, I'm picking up names from various sectors, which is telling you that across sectors you're seeing that pressure come in. And let's just look at the sectoral heat map that Alex can take us through.
Yeah, sure, absolutely. So, but IT there, it's of course, realty is now pipped IT as the worst performing sector, but 3.5% cuts for IT because there's further question marks. While all of these issues on geopolitics continue to pan out, there is a challenge that is being posed by the likes of Anthropic, by the AI machinery, and there's a worry about whether business continues to get taken away from the Indian IT space. India defense losing about 3.5%, consumer durables as well as media losing 2.4% or thereabouts. Private banks not too far behind. PSU banks has continued to lose ground as a pack as a whole, and that continues to be the case. State Bank of India losing quite a bit of ground. Oil and gas just about 0.1%, so it's broadly negative.
And just to add in terms of real estate, you know, Alex, we're talking about the impact from work from home on commercial real estate, and I think that's what is having a bearing as well, and that's the reason why you're seeing this kind of pressure. I think one of our reporters did speak to the association in terms of real estate. I'm not sure what the name is, and they've categorically said that yes, there will be a hit when it comes to commercial real estate, and that is what is putting pressure. IT companies, NASSCOM has come out with a statement saying that they are encouraging work from home right now. To what extent, we don't know, but that is something which will again put pressure in terms of real estate, very similar to what we saw during times of COVID. So watch out for this space pretty closely, but this is an interesting picture we are watching out for. Let's quickly look at the factors we are looking at. A decline for 4th consecutive session is what you're staring at right now in terms of Nifty 50, and this is the longest losing streak since the 9th of January. Apart from that, if you talk about index levels, we are already at the lowest level in over a month, and a close below 23,500 actually opens the door for a further fall to 23,200. Now, we are right now below that 23,500 mark, so if we are closing below this, don't be surprised if you are going to 23,200 levels in tomorrow's session. Bank Nifty, again, we mentioned this in the morning, technically it's looking weaker than Nifty 50, and 53,500 is the key support level. We are still a little away from there. We are 180 points away from the key support level on Bank Nifty, but if that is broken, it's going to be interesting. In fact, Nifty has actually slipped below its 20 DMA and 50-day EMA as well, and the short-term trend has actually soured from here on. The market has transitioned from a buy-on-dips market to a sell-on-rise market. And if you have to talk about sectors, IT, the stocks are a drag on the AI sentiment, while real estate on the work from home sentiment, as we mentioned. So all of these are factors one should be watching out for, not only today, but in tomorrow's session as well. Let's get in our guest. We have Sunny Agarwal, Head of Fundamental Equity Research at SBI Cap Securities, who's joining in. Sunny, welcome to the show. Always a pleasure to speak to you. This is Hiral on the side. You know, the sentiment right now is absolutely weak. The longest losing streak that we are seeing in terms of Nifty 50 as well. With the Prime Minister's appeals coming in for the second time, where he's not only encouraging work from home for private companies, for government companies, he's talking about schools taking classes online as well. What does this tell you in terms of the overall sentiment for the market, and what are you talking to your clients right now?
Yeah, good afternoon, Hiral. Definitely, I think it's a precursor to certain steps which the government may take to ensure that the pressure on forex outflow is something which is taken care of. So, if you go by historical playbook in 2013, when there was a run on the rupee at that point of time, I think RBI has taken some measures like to attract the forex or dollar in the country. So, there can be some attractive scheme to for an NRI or the investor who are out of India to plow the money in the fixed deposit in India. So that can be one of the major. On the other hand, to discourage the spend on items like gold, there can be a probability of increasing some import duty over there. And at the same time, on the other hand, I think there is not much choice left on increasing the fuel prices, at least petrol and diesel. So at least gradual step up approach can be seen over there. And the impact of everything is being seen on bond yields. So we have seen that market is already pricing in that, and we have seen some marginal inch up in terms of India 10-year bond yield. So right now we are hovering closer to 7%, which was closer to 6.85 just 2-3 days back prior to this appeal by Honorable Prime Minister. So I think all in all, I think the only silver lining which I see in this entire scenario is the cracking of crude oil price. In case there is some resolution between US and Iran, and in case crude goes back to a double-digit number, then all the narrative will change in favor of equity markets.
Okay, that's a fair point, Sunny. We're also joined this afternoon by Kunal Shah, Senior Technical and Derivative Analyst at Mirae Asset Share Khan. Kunal, thanks so much for taking the time as always, and good afternoon to you. Sell on rise market, but the question is, how low can you go? The benchmark losing quite a bit of ground, and this time it's across the board. It's not the broader markets that are being resilient. So how do you trade this market?
Good afternoon, Alex. Good afternoon to everyone. So I think, yeah, definitely the range what we were consolidating into at 23,800 to 24,300, that has been broken on the downside. And now we are going further down to fill the gap area of 23,100 on the downside. So still, even from the current levels, more to 200 to 300 points downside is left for the markets. And probably we might stabilize somewhere around these levels of 23,100. The real problem has been the Bank Nifty index. So even Bank Nifty index post that spike what we had got towards 56,200, 300, we were not able to surpass that. And again, we broke down on the downside. So the real pain point has been Bank Nifty for the markets. And this is heading even lower towards 52,700. So even from the current levels, you can expect a 1,000-point fall in the Bank Nifty index. So again, for both the indices, the approach remains as a sell on rise mode. Whatever bounces you get, utilize that as an exit opportunity for the very short term.
And okay, so therefore individual picks at this juncture, because there's no way that you're going to play I'm not saying no way, but then you might want to stay away from index strategies at this juncture. Individual names?
Yeah, I think individual names, one stock which I would like to go on the buy side over here is from the cash market, and the stock is Balrampur Chini. Again, the technical setup looks extremely good, where the stock has been forming heart of high bottom formation. Even in the weak market, in the last two trading sessions, we have seen good volume-based buying that has been there, and I'm expecting this move to continue on the upside. So Balrampur Chini would be a buy for me at the current levels, keeping a stop loss of 510, looking for targets of 560 to 575 on the upside. So that would be the first pick, which would be there on the buy side. The second would be on the sell side. So we have already seen the correction that has started even in the broader markets as well. We had seen a spectacular rally in mid cap and small caps, and now it is time for them to see a little bit of cool off that would come in, and that is where you will see the momentum getting lost. So here my sell would be Premier Energy. Already the stock has seen a good run up in today's trading session. The stock has breached the 20 DMA as well. With volumes that has been breached, and one can continue to remain on the sell side with a stop loss of 990, looking for targets of 940 to 920 on the downside.
Okay, so that's with regards to a couple of companies that we're tracking. Premier Energies has a sell call on it. But moving on, amid concerns over possible supply disruptions of LPG and crude oil, Prime Minister Narendra Modi has once again appealed to the government and private offices to adopt work from home. In fact, a lot of appeals being made with regards to schools, adopting classes from home as well. Let's quickly listen in.
टेक्नोलॉजी की मदद भी हमारे लिए बहुत फायदेमंद होगी। ये जरूरी है कि सरकारी और प्राइवेट दोनों ही दफ्तरों में वर्चुअल मीटिंग्स और वर्क फ्रॉम होम को प्राथमिकता दी जाए। मैं कुछ स्कूलों से भी आग्रह करूंगा कि कुछ समय के लिए ऑनलाइन क्लासेज की व्यवस्था पर काम करें।
Okay, and you have comments coming in from CA V. Ananta Nageshwaran. He's talking about the fact that crude prices or crude futures have risen over 40%, and these are not necessarily readings of a temporary shock. He says that the West Asia crisis is a balance of payments stress test, and India's fiscal consolidation path provides the foundation, but a rethinking needs to be done. Now, this is a very important statement. Take a look at where the rupee is at right now. It hit a fresh all-time low in trade today as well, and it is at 95.68, pretty much at the low point of the day. We were speaking to a currency trader earlier today, an expert, and they said that they expect that the rupee could well head to 67.5. This is not something that you had anticipated at the start of 2025. India is one of the worst performing currency, or rather rupee is, over the last year and a half, certainly. Now, even as concerns grow over supply disruptions of crude and possible restrictions with regard to certain derivatives of crude oil, Petroleum Minister Hardeep Singh Puri has sought to reassure the markets and consumers on India's energy security. He said that the country has adequate stocks of crude, LNG and LPG. Listen in.
No problem on the supply management side, no shortage of anywhere. And I'm going to conclude this by saying we have 60 days of crude, which is the maximum we need. We have 60 days of LNG and we have 45 days of LPG. So there's no problem on the supply side. So why this panic since yesterday or a day and a half? Please see what the Honorable Prime Minister has actually said. And let's not put a bizarre construct on it. He's saying, and look, this is borne out by the facts. If you look at the news this morning, the leader of the largest economy in the world is saying that ceasefire is on life support. I think those are the exact words you use. I don't know what is happening, but isn't it time, when you look at the way this is happening, 75 days into a unending conflict, uncertainty is too mild a word. What he says, the time has come for us to look at our lifestyle also. And I totally endorse that. By the way, it's not that any lockdown is going to take place tomorrow. That's why I spend so much time giving you the supply situation.
Yeah, you know what else he said? He said that there is a possibility that the oil marketing companies will wipe out their profit from FY26 in 1 quarter of losses. Now, you have seen that HPCL, BPCL, IOC have been under a tad bit of pressure. A couple of those stocks are actually off the low point of the day. This is not necessarily something that you didn't know. But let's put things in context. And we've got Mr. M.K. Surana, former CMD of HPCL, joining in. Mr. Surana, as always, thanks so much for taking the time. We didn't play out that one sound bite from the minister, but he said that's something that worries him. Clearly, the street is also bearing that in mind. I don't think the street is ready to accept losses of over 1 lakh crore of rupees. So what needs to be done right now to assuage the investors and also protect the OMCs while they protect the rest of the nation?
So, good afternoon and thanks for inviting me to your channel. See, the situation is abnormal and the solution will also be abnormal. We have to assume that. So this is not a situation which you have seen earlier when you got a problem on the supplies, you got a problem of higher rates, you got a problem of higher exchange rate altogether. And with no immediate end visible in the near future. And therefore, the solution has to be found keeping in mind all those parameters. And there is a lot of crystal gazing required in this because every day the situation changes. Just 2 days back, the oil was hovering at around 98, 99, and it has gone now to 105. So definitely, without any doubt, the oil companies are having the under recoveries and almost for 75 days of war, which we are, it was around $70 a barrel. It has gone to 120. It is hovering at around 105. And the cracks are also high. If you are buying the products, the exchange rate is high. It was around 80. It is around 90.95. And the market price are not changed for almost 2 years or so. A part of the relief was given by reducing the excise duty cut, but that wouldn't be sufficient. So without getting into the specific of how much under recovery, what quantum of under recovery, without any doubt, there is under recovery. And right now, probably the cost of the product is lesser than the cost of the crude itself. And with every day going on, it will be only increasing the stress on the oil companies. So we need to find out a solution on that. Now, every solution has got a plus and minuses. If you increase the prices, there will be some impact on inflation. Some of the people who will have a budget a bit on more on a tightrope. If we do not increase the prices, the OMCs will be in a lot of stress, and the financial health will be affected severely. Their working capital management will be affected. The borrowing rate will go high. And if these companies are not strong enough, you will have problem in supplies itself and subsequently.
So, Mr. Surana, my question, Mr. Surana, I will interrupt over here. The question is what Mr. Hardeep Singh Puri said is that we have stockpiles to the tune of 60 days if you talk about, diesel, petrol, or for that matter, LPG, which is the highest we've had in terms of number of days right now. In that kind of a scenario, you're not really looking at a supply side shock. The shock is mainly in terms of what's happening with crude prices and the kind of losses that they're already sitting on. So it is going to be a short to medium term phenomena where the OMCs will have to recover that. And once crude prices come down, it will somewhere break even and balance out. In that kind of a scenario, how much time where OMCs can bear the brunt, number one. And two, you have the government who's gone ahead and slashed the oil and gas royalty rates as well. So ONGC, Oil India are a few of the names which benefit. How do you think it was a need of the hour to even do something like this at this point?
No, we should not be confusing with the long-term measures with the immediate things which are playing right now. So the moderation of the royalties or a recalibration of the royalties must be a long-term thing which must be going on to ensure that there is a more attraction to invest in the upstream sector. Because reducing the consumption or ensuring that the OMC doesn't suffer the another connotation if we start producing more internally. So they are the two sides of the similar coin, but in a different plane. So royalty thing is a longer term issue. Now, whether it should have been done today, after 1 month, 2 months, that is a different part of the story. But it's a longer term issue. As far as the today's management of the OMC is concerned, that is because of the, as you rightly said, is because of the crude prices and the exchange rate. And the question which you asked that how long? The question, it is not that the oil companies are sitting with a kitty and you can say that, okay, you got a tijori and how long it lasts like that. So if you are short of money, you are basically borrowing. Now the question is, more and more you borrow, it affects your working capital management, your short-term borrowing goes up, then the interest rate also goes up, and the serviceability also becomes a problem. So the question is, how long is not an issue. It should be as early as possible so that we restrict the problem or contain the problem to where it is.
Yeah.
And then we see that we do not extend it further.
Yeah, absolutely. That's the best description of the scenario as we look at it. Mr. Surana, as always, thanks so much for taking the time.
Thank you.
That one bit that we were asking Mr. Surana about, and he's saying that you cannot conflate short-term issues and long-term solutions that are being sought. The government has slashed its oil and gas royalty rates, and as a result of which you have ONGC, Oil India, Vedanta that are in focus, at least with respect to its oil and gas business. What has happened is that there is a change, as I said, in the crude oil royalty rates. The rates on onshore crude oil royalty have changed. For the nominated block and the pre-NELP PSCs, it's been reduced from 20% to 12.5%. The new well gas rate has also been reduced from 10% to 9%. And there is a beneficiary, of course, in this. Essentially, lesser needs to be paid out for these blocks. Oil India is a beneficiary, ONGC, as I mentioned, Vedanta as well. NWJ essentially means that new well gas. This is looked at as positive, as a result of which you have ONGC that's up and about. You have Oil India, pull that up as well and see where it's currently trading. ONGC up about 5%. Oil India, let's pull that up. It's up about 7.8%. There, a pretty significant benefit. The question is, Kunal, on the charts, would you buy into these? Because they've proven to be fickle friends in the past. I do not know whether you can bet on them continuing an up move. So would you book out if you manage to get it earlier?
I think, yeah, definitely. If you manage to get it earlier, then definitely book out. These are counters which are generally very volatile in trade and depending on the crude prices. So if the crude prices continue to head higher, then probably this will continue to have the momentum. So better to have strict stop losses in such kind of a counter. Specifically for ONGC, 277 is what I'll be eyeing for. If that is triggered on the downside, then exit your long positions. The immediate hurdle for the stock is at 307. Once that is taken out, then probably we'll be heading towards 320 on the upside.
Sunny, on the fundamentals, since we've been speaking about both upstream and downstream companies, what's the view at this juncture? Would you venture into any of them? Would you stay far clear at this point?
Alex would like to stay away from this sector as of now, at least in a short term, because there is not a very clear direction in terms of where the crude oil prices are heading as we go over the period of next 3 to 4 weeks. But anyway, my preferred bet, in case somebody want to take a high risk, high return bet, will be an oil marketing company, because I think worst is already in the price. We all know that Q1 is going to be a very muted quarter for all the oil marketing companies, with the losses mounting. So maybe once this entire fiasco between US and Iran settles and crude oil goes back to maybe $100 to $90, at that point of time, we'd like to add oil marketing companies. Today, the measures by government is to encourage more oil exploration, and that is something which will benefit all the upstream companies in a medium to long term. Short term, definitely, to the extent the royalty has been reduced, that number will obviously percolate directly to the profitability, and that is the reason we have seen the street has given thumbs up today. But I think most of the positive are discounted, as we are seeing that many upstream companies are up by 5 to 7% in the trade.
Okay, so that's with regards to where OMCs go. Let's pull up a Dixon Tech on the screens. That company will be reporting numbers, and you're seeing a lot of pressure that's being built up with regards to Kaynes Technologies as well in trade. Dixon is nearly at the day's lowest levels, 5.5% downtick coming in there. And if you look at a Kaynes Technologies as well, let's pull up that one and see what's happening. There you go, 6.5% downtick, on this counter. In fact, in terms of Dixon, the revenue is expected to rise with a margin 2% kind of a move. EBITDA expected to fall 9%, and margins expected to go down as well. In fact, profits are expected to fall by 54% at 182 odd crores. The key to note is going to be that Q4 FY25 profits had a fair value gain of 250 odd crores and an exceptional gain due to fair value gain of investments in Aditya Vision. Adverse operating leverage and weak mobile volumes may hamper growth is what you're looking at. But the Vivo JV, that is going to be the key monitorable, because the approval is still awaited, and this JV was signed in December 2024, and the JV will take 45 to 60 days for ramping up as per the management. A lot of notes were indicating, commentary was indicating that probably there is a potential where the JV may not get through. That is going to be key on this one. Sunny, let me come to you in terms of Dixon with regards to expectations, and Kaynes Technologies as well, which has been trading under pressure today.
Like you rightly pointed out, I think Q4 is likely to be muted because of the pressure on the memory prices. We have seen memory prices going up by more than 40-50%, and to that extent, there is a likelihood of pressure on the margins, or either in terms of volume, because as the cost pressure has been passed on to entry level mobile phones, so to that extent, volume may get impacted. So that is the reason Dixon may report a muted set of numbers. Kaynes have been grappling with a multiple corporate governance issue, and I hope that as guided by the management, cash flow is something which investor would like to see in FY27 and FY28, in case they are able to walk the talk in terms of cash flow guidance for FY27-28. I think Kaynes is something which has already discounted the negative number. Sirma among the EMS has reported a very good set of numbers. So seems that as of now, that seems to be a better play if somebody want to add in their portfolio in the current fall.
All right. On that note, gentlemen, I'd like to thank both of you for taking the time for speaking to us on NDTV Profit. Pleasure having you. All right, let's talk about one of the big stories that we've been tracking through the day, and perhaps what has caused the street a little bit of worry, which is that it's all coming to the fore right now. The government has stood and protected the Indian consumer so far, but Prime Minister Modi coming out twice within the span of 2 days and calling out the need for austerity measures to protect India's currency and the fact that there has been downward pressure on the rupee. Let's bring in Piyush to give you some context on how the forex reserves have played out in the last couple of months or so over the course of the conflict so far. Piyush, what have you found out?
That's right. Actually, since the conflict in West Asia began in February 2026, India's forex reserves have actually come down by 35 billion odd dollars. In February, India's forex reserves stood at $723.60 billion, which came down to around $690.69 billion in May. The foreign currency asset, which forms the largest chunk of the overall forex reserves, stood at around 551.82 billion in May, as against 572.56 billion in February. The gold reserve also have come down by around 27 odd billion dollars to $115.21 billion in May. We have also seen the INR depreciating by around 5.5% in the current financial year. We do understand today again the INR hit the record low of 95.65 level versus the US dollar, and the INR was trading at around 90 levels when the West Asia conflict began. According to traders in the know, RBI already has a short book, forward book position of around 80 billion versus the US dollar. So they see limited intervention possible by the regulator to control the depreciation in the Indian rupee, and which is why we have seen that there are talks that the RBI could allow certain deposits like FCNR deposits or certain NRI specific bonds to bring in dollar inflows into the country. And essentially this is the concern that the PM had mentioned, that India's forex reserves are going down and we need to act and take measures to curb the forex.
Got it. All right, Piyush, thanks so much for that update. I want to talk about the rupee and pull that up very quickly because it is at the low point of the day, and it's an important point to raise with Upasana Bharadwaj, Chief Economist at Kotak Mahindra Bank. Upasana, in 2 days in a row, the Prime Minister coming out at different fora and calling out the need for austerity measures. This is bringing to light an issue that a lot of people were aware of, but let's face it, a lot of people weren't paying too much attention to. Is this now the need of the hour where collectively there's a need to tighten the belt, so to speak?
Absolutely. I think, there were hopes that this issue is going to be resolved very quickly in a couple of weeks and we wouldn't have to take any austerity measures. But I think eventually what we're seeing right now is that there is no respite in sight just yet. Geopolitically, the constraints are still existing, and there is limited hope that this is going to be resolved very soon. So unless the Strait of Hormuz opens up freely, it's going to take a lot of time to normalize supply. And for that, I think the Prime Minister has appealed to the nation. And this is the right way forward to begin with, I guess, because at this point in time, given the constraints on supply side, demand has to moderate. There is no alternative to this. So rather than taking very drastic measures, if consciously we can see some kind of a reduction in demand, then that will be good. Otherwise, much more meaningful and concrete measures will have to be taken to manage this kind of a supply-demand mismatch.
Okay, Upasana, good afternoon, Hiral here. So are we trying to say that this form of necessary austerity is something which is absolutely needed, number one, though it might go ahead and stifle your short-term consumption pattern? However, from a longer term, this is going to be a key tailwind.
See, at this point in time, we have much more headwinds, and to call it a tailwind, it's a little too early. I think the bottom line here is there is a supply issue, and that supply constraint is going to be here for a while. Even if we were to start seeing ships pass through the Strait of Hormuz, we will not see normalcy prevail over the next couple of months. And to that extent, it is absolutely necessary to manage this demand supply gap is what I'm trying to highlight. Then as a result, these austerity measures are needed. But this will probably not suffice if this geopolitical tensions were to continue over the next few weeks or months again. So, we might have to go ahead with further more concrete measures to handle this situation.
And what could those be? So, for example, in 2013 or thereabouts, you had the measures that were taken to dramatically shore up the rupee. Is something as drastic as that required at this point, Upasana?
Yeah, so I guess there are two parts to this. One is, of course, that we have been seeing a capital outflow problem even last year as well. And that problem is persisting. And alongside, because of higher input prices, now higher energy costs, we have a current account deficit problem as well. So it's a double whammy, of course. And to that extent, now the balance of payment is looking quite fragile. Hence, fundamentally, RBI will have to take up measures that could try and provide some kind of buffer and some kind of natural demand, diminishing in terms of, the pressure on balance of payment. And hence, number one, if you recall 2013, the playbook which is there, we will have to see measures to curb current account deficit pressures from building up further. The Prime Minister has also indicated in terms of reduced demand or reduced buying of gold. I think that's the first step. We had seen such kind of curbs put in the previous crisis period as well. So maybe some curbs on the remittances side, the LRS, on ODI, or some capital controls, some or outflow controls will be needed to manage the current account deficit at this point in time. Besides that, as was being mentioned before as well, I think a bigger and a more sustained benefit could come only if we are able to manage and see how capital flows can improve. And that's where I guess some kind of dollar bond issuances will come much more handy because that would provide some stability that we're looking for. We cannot really expect RBI to continue to defend the currency in an environment which is so fluid. So that is the reason I think the fundamental support will come if we are able to attract capital in some form or the other.
Upasana, today we have CPI that will be coming in as well. What's your expectation in terms of the numbers? And what are the key risks that one should be tracking from here on?
Yeah, so we are expecting CPI inflation at 4.2%. Now, of course, the biggest risk at this point in time, apart from the geopolitic-led supply disruption, is the added supply disruption possibly coming because of the El Nino phenomena that is building up. Now, that is another thing to keep in mind because we already have an inflationary environment which is building up because of the global issues. And then if El Nino was to add on to that pressure, then the inflationary environment is going to become very generalized and it will become a challenge for the policymakers to handle this situation in a much more normalized way. So we are watchful of how the monsoons play out as well, alongside how geopolitics is playing out.
Okay, so the El Nino is something that we should be tracking as well in terms of the key risk, but the CPI number is going to be key. Thank you, Upasana, so much for joining in. Always a pleasure to speak to you as well. But very quickly, let's just once pull up the markets and see what's happening there. Nifty 50 and Bank Nifty along with the broader markets, because we've continued to slip is what I can see. There you go. You're at the day's lowest levels. You're below that 23,400 mark as well on Nifty 50. And a closure below that is something which takes you on the downside further tomorrow. Let's pull up Bank Nifty and with that, the broader markets, because they are taking a further beating. A similar kind of downtick coming in terms of Bank Nifty as well as we speak right now. And you have the broader markets which have been trading under pressure. So, it is expiry. In fact, the MSCI rejig that will be announced tomorrow as well is something that the street is eyeing. We will try getting you more details on that. But clearly the pressure, Alex, has been building up. But before we talk further about anything more, let's quickly slip into a short break. And here is another positive reaction coming in from India Inc. Sanjeev Goenka Group's Shashwat Goenka backs PM Modi's comments on India becoming self-reliant. Let's listen in.
Shashwat, also, what are the sort of discussions now happening at the industry level, right? There's a lot of work from home calls. There's measures to sort of reduce foreign travel, forex spending as well. Talk to us about what you are thinking now about that.
See, I think I'll repeat exactly what I just said as well. It's really about becoming a lot more self-reliant, and every step that helps you become more self-reliant as a business, as an individual, as a country. I think that's really what each of us has to do, and what each of us will have to do is look into our different industries and businesses and see what is it that we can do to ensure that we as a business and we as India become a lot more self-reliant. So I would say that's what we have to look at.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. Welcome back. You're watching India Market Close. It's time to look at individual stocks that are featuring in the list of chatter from the dealing rooms. And we've got Somit joining in to tell you about just that. Somit, quite a considerable amount of selling pressure across the board. What are you hearing about that first, and also then perhaps individual stocks in focus?
Not much of an action. In fact, it's quite a dull day, and traders are also keeping their positions quite light given the massive sell-off that we have seen in the last 4 trading sessions. In fact, even when the crisis was worst and markets were even lower, we never saw a 4-day consecutive fall coming in the market. So positions are quite light is what dealing rooms are indicating, and volumes are, even if you see at the volumes, they're largely flat or in fact on the lower side compared to what we had seen yesterday. Few stocks still that dealers have highlighted in trade. Firstly, it's Biocon. Now, despite the fall in market, that stock is higher, up around 2.5% in trade. Now, dealers are indicating that a large prominent HNI has been an active buyer in trade today when it comes to Biocon specifically. For Amber and Godfrey Phillip, again, both the counters are down, but small buy flows are coming in from the PMS desk ahead of the Q4 numbers for both the names. And lastly, when it comes to Chem India projects, here the buzz on the street is that multiple order win announcements are expected to come in very soon for this counter. So keep an eye out for Chem India projects as well.
Okay, thank you, Somit, for that. Interesting names coming in there. In fact, yesterday, pharma was the only sector which did see some bit of buying interest at lower levels come in. In fact, let's get it. Ajit Mishra from Religare Broking, and we have Mr. G. Chokalingam as well from Economics Research joining in. Welcome to the show, gentlemen. Always a pleasure. Ajit, at this point in time, I mean, we are breaking support levels as well in terms of Nifty 50. 2 questions I have. One, what should the strategy be when it comes to Nifty and Bank Nifty? And 2, your top picks at this hour.
Yeah, good afternoon, Neeral. Yes, we have breached the support. Means we were hovering in this band 23,800, 24,500 for almost 3 weeks now, and we have decisively breached that mark. We are currently trading around the day's low. So the gap area, which is around 23,150, and also as per the range that we were trading in, this 23,100 will be the next area to watch out for in the index, where Nifty might find support. Banking also indicating a similar tone. In fact, both the key sectors, banking and IT, they are completely on the back foot. So banking also roughly around 52,800 is where we are seeing the gap that we have on the daily chart get filled. So probably around that area we might see the breather. So both Nifty and banking index, they are sell one rise candidate with the respective targets at 23,100 and 52,800. On the individual stock specific front, we are seeing that select counters from the healthcare, pharma, and FMCG basket, which are still holding strong. The Tata Consumer, after almost like 1 year of consolidation, has finally witnessed a breakout in the recent session, and it's still holding strong irrespective of what we are seeing in the market. So we believe that there's a possibility that this overall positive tone will continue. So one can utilize this pause or consolidation to go for long position at current levels, with 1360 as a target area, with 1210 as a stop. At the same time, IT fresh breakdown, TCS, in fact, is underperforming within the large cap IT names. So here we anticipate a next leg can push this stock toward 2160 mark. So with stop at 2370, one can go short in TCS.
Okay, so that's with regards to key stocks that one should be watching out for. Mr. Chokalingam, in this kind of a market right now, are you seeing buying opportunities, or are you seeing that this is the best time to stay away?
I won't say best time to stay away at all, because our concern is only Iran war. We have seen already in the last 1 month, whenever there was some signs of hope of finding resolution for the war, the oil price crashed. It went down even below $90. So I am still hopeful that some resolution would be found out. One should stay away only if investor completely convinced that this war will go on for a few months or few quarters, then yes. Otherwise, one can accumulate on declines, particularly small and mid cap, because on one hand, FPIs are continuously selling, and whatever DI buying happened, that only supports the outflow of FPI. So net result is that, Sensex Nifty are not able to edge higher. However, retail investors are not affected by the rupee exchange rate and in their investing here directly. So therefore, the small and mid cap, have been outperforming last 1 month the Sensex Nifty, and I believe that would continue. And there are a lot of attractively valued stocks. There are many unique ideas. There are many growth ideas even in this condition. So in small and mid cap segment. So I would focus on small and mid cap segment. I would suggest 70% of the equity asset allocation to small and mid cap, but without compromising on the quality of the management, quality of the balance sheet, and valuation comfort.
We'll circle back to get a few of those names from Mr. Chokalingam. In the meanwhile, the big story we're talking about, PM Modi's clarion call for austerity measures on account of the West Asia crisis. There is, however, going to be an implication if, for example, there is a situation where work from home is instituted. Then the expectation is that meetings will get cancelled, conferences will get cancelled or will not take place. That has a bearing on the hotel industry, and it also has a bearing on the real estate industry. We've got both we've got Nimit and we've got Ridhima joining in to talk about those two implications. First to you, Nimit, because you've spoken to the Hotel Association as well as certain sources with that association, and you picked up certain key details. What have you heard?
Yeah, absolutely. So the first thing is that the PM's call is broadly being taken positively. There are no objections to it, but what they say is MICE, the revenue for MICE is going to be intact. Now, this is not a RAT problem. MICE stands for meetings, incentives, conferences and exhibitions, which means, as you said, the entire event space, which is one of the lifebloods of this hotel industry through the year. It's a strong source of income, this source says. Now, this has been about a $50 billion industry in 2024, and the government has said that it's to grow to about 100 billion by 2030. Now, a substantial chunk of this, like you said, will suffer due to the cancellations because of PM Modi's call, and that will affect the revenues in this space completely. Now, but they also say, and the president of the Hotel Association has officially and exclusively told NDTV Profit that they still welcome the call because a lot of this will be mitigated because of the boost to domestic tourism, which is also part of the PM's plea. Now, what they say is essentially that promoting domestic travel means hotels across luxury as well as non-luxury sectors will see a lot of benefit and a lot of footfall coming in. They say that tier 2 and tier 3 cities will actually see the most benefits here, and we'll see probably more properties being set up there. They also say that there's going to be sharper growth, more employment in this sector. They're anticipating if this domestic growth sort of comes through from this call. Lastly, they also say that there is a need to promote foreign inbound travel into India, and a lot of measures can be taken to improve that if we're supposed to capitalize on this new sort of push for domestic tourism.
On the real estate side, there is likely an implication if more companies do choose to have a work from home situation where required, and you had NASSCOM make a statement about this in the IT space. Ridhima, what are you picking up from real estate players?
So real estate sector does not see a very immediate impact due to PM's work from home policy. However, if the disruption lasts for more than 3 to 6 months, then there is a highly likely impact on the commercial real estate sector. This is as per the real estate dealers and the associations. So for context, PM Modi had urged people to revive the work from home culture amid the West Asia crisis and the energy concerns, and due to which the margins for the commercial real estate sector can significantly get impacted in next 3 to 6 months. And not just this, lease agreements and also rental yields could drop by 5 to 6 percentage points as per the industry experts. Now the association and the real estate industry is in touch with the Ministry of Commerce and the Ministry of Housing and Urban Affairs to get a clarity on how this work from home culture and this implications will happen and how will it affect the real estate sector. However, the experts also say that if the long-term trend for work from home continues, then it could have an impact on the commercial real estate sector in the long term, but the extent of which will depend on the disruption and also how the corporate actually adopts to this work from home culture. But something significant to know is that real estate sector has been suffering due to the West Asia crisis already, and regions like Mumbai and commercial real estate sector in that region has been affected. As per the industry sources, the commercial outright deals which used to happen have dropped by 40% month on month, and not just this, the commercial lease agreements have also dropped by low single-digit numbers. In cities like Bangalore and Hyderabad, this is not the case as they've been protected by the GCC boom. But the extent of the impact on the real estate sector, for that we need to keep an eye out on what the government gives guidelines on work from home policies and how long this disruption due to West Asia crisis lasts.
Oh, thank you for that. This is really informative because that's where the pressure is building up as well. You have Nifty real estate, which is the top losing sector right now. You have IT, which is the second top losing sector in today's session as well. In fact, the sell-off has continued across the market. You look at what's happening to Brent crude as well. Let's pull up that one on the screens. You are at already, $107 to $108 per barrel. So that climb has started yet again. I think no one knows as to what's happening in terms of crude prices with the kind of volatility that you're seeing right now. But categorically, the impact being felt in terms of markets so far. Ajit, right now, if you see, all Nifty constituents apart from metals and oil and gas are falling in trade as we speak. 20 constituents on Nifty have declined over 2% each. So we're talking of support levels, which we started off the conversation earlier as well. At this point in time, what are you looking at in terms of strategy if someone has to look at Nifty 50 also?
So, Hiral, for the existing position, of course, what we have recommended to our clients also, the moment Nifty surrendered this support zone at 23,500, we've recommended to at least hedge their existing longs, be it index majors or, the broader markets also, because in the recent past, we were seeing that there was noticeable outperformance from the broader markets. The mid-cap index made a new record high. So people were definitely carrying longs. So hedging your longs is definitely one thing which requires until we see the stability in the market. At the same time, reducing your overnight trades, especially if you are sitting on the long side of position, is something which is required even for the index heavyweight. Because as we've said that the gap area, we need to see whether around that area or not, around 23,100, 150 area. So once we reach to that level, then probably we might get the clarity how the index and the index constituents are going to perform. But as of now, broadly, all the sectors, in fact, metals and energy, which were holding strong earlier, there is a possibility that once we see the profit taking or decline extending in sectors which are reeling under pressure, participants might consider booking profits in the sectors which are still resilient. So there could be a cascading effect in the coming days. So probably the ideal approach is to book profits and reduce your exposure, especially for the overnight trades.
Let's talk about the real estate space as well, specifically commercial real estate, as Ridhima was pointing out. And you have Nimit, who was talking about the impact when it comes to hotels. How are you looking at these, both of these sectors?
Real
Mr. Chokalingam, sorry, this is Ajit, this is for Mr. Chokalingam.
Okay, sorry. Yeah, as I mentioned earlier, that I perceive this as a problem only for a couple of months. And but more concern for real estate is that the land values have gone up, asset prices have gone up. That is also partly explaining the possible slowdown and therefore impact on the stocks in the realty space in the markets. I would still consider, on every decline, some quality realty stocks to accumulate, something like, Oberoi Realty or Leader.
Sure. Okay, the CII Annual Business Summit is going on, gentlemen, and let's cut across because Piyush Goyal, Commerce Minister, is speaking right now. Let's listen into what he has to say.
They tire you out so much that it only needs a person like Rahul Bhai to have the gumption to take it on twice, I think. But look at the story of the Bajaj family. A story which has seen 3 eras. The colonial world under the British, when it started, the pre-liberalization, the socialist era in India, and the liberal world in which today the Bajaj Group is growing leaps and bounds.
Okay, all right. Well, it's time now to go to the Bulls versus Bears segment, and we've got an interesting contender for that. JSW Energy saw an inline quarter with aggressive capex in renewable segment, aiding the potential. But the question is, what are the headwinds that the company is faced with? And if it was a decent set of numbers, why is the stock down 7%? Let's go across to Varsha to present the bull versus bear case. Varsha?
Well, inline set of numbers are slightly above estimates numbers, I would say, for JSW Energy, but still the stock is tanking today. Now, why? Because the bear point over here is the numbers are one-off savior for the company, because there were a lot of one-offs in the company in the form of other income, which has led to the growth that you're seeing, and hence this growth will not be taken forward, and hence you're seeing the stock is tanking. Now, moving on, the renewable energy, the good thing about the Q4 was the renewable energy was up 68% year on year. The capacity addition over here was strong, but management is moderating when it comes to renewable energy pace. 3 gigawatt of guidance has been given by them for FY27. While, the clear long-term target of 30 gigawatt capacity by 2030 is on track. That's a positive thing, but aggressive capex and acquisition has led to elevated debt, and hence the interest cost for the company has also gone up. So so that's the negative point. But the generation was robust, which was up 48% year on year in Q4 and 58% in overall FY26. But the higher short-term sales indicates weak, PPA visibility. And lastly, if I were to talk about the strong EBITDA margins at 49 to 50%, though the estimates were about 51%, but an inline kind of EBITDA margin that the company has achieved. But the stock is trading at expensive valuation of 12.5 times EBITDA versus 11.3 times historical. And also one of the reasons why we are seeing the stock under pressure, because we have seen a huge run up in the JSW Energy stock, and hence the investors are taking a profit booking over here. So overall, the number on per se, if you see a decent set of numbers, but a lot of things are one-off, and hence that cannot be carried forward going for in Q1 and for FY27, and hence you are seeing that pressure in JSW Energy.
Got it. All right. Thanks so much, Varsha, for that. The bull versus bear case. The question is, which side is Mr. Chokalingam on? Mr. Chokalingam, JSW Energy, what would you pick?
I would avoid at the current juncture. It's trading around 40 PE. I won't give that kind of valuation for, power generator.
So that's a short answer. Is there anything in the energy or the power space that you would like at this point?
I haven't prepared in this sector now.
That's
I have
fine.
not
So,
come out
so
with
you
that.
had a point that you were making at the start of our conversation, Mr. Choklingam, where you were saying that even in this market, despite the run-up that you saw in April, and we've come off quite substantially from those high points, right? There are several opportunities. Can you name a few of them?
Yeah. So we have a buy recommendation on stock like Finolex Cable. I believe the consolidation happening in the industry can lead to re-rating of cable and wire company like Finolex. It has come out with very good results, Q4, and a lot of cash on the book. A lot of expansions are happening. This is one stock I like most. And second, yesterday the About India has come out with the results. Yeah, growth moderated, but last 3 year, 5 year, or 10 year, whatever time frame you take, the CAGR in profit and revenue are fantastic, and the stock has corrected a lot. And this another stock which gives me tremendous confidence. Third one from the banking space, it may be a surprise when all banking stocks are taking beating to recommend strongly, but I would recommend Bank of India. It is trading at a 22% discount to adjusted book value. It has come out with very good results for March quarter. Business is doing very well and it's outperforming the industry growth. And net NPA is very low. And I believe that this is a one most dependable banking stock.
Sharp cracks across the board here, and the broader market's capitulating at this point.
Absolutely. I mean, let's just pull up the mid cap and the small cap index and see what's happening. And if you can just have the NSE 500 post that, we're at the day's lows, 2.5% downtick coming in, the 3%, Alex, in terms of small cap 250. So absolute profit booking that's happening on the day of expiry. It's a complete meltdown that you're seeing. Sonata Software, Ratnamani Metals, Privy, Birla Soft, JSW Energy, Embassy, NLC, all of them, downticks coming in across the board right now. In fact, let's just pull up a Tata Power also on the screens, and with that a Dr. Reddy's after that, because both of these companies will be reporting numbers post-market. As Tata Power is also at the day's lowest levels, 3.5% downtick on that front, and you have a Dr. Reddy's, which is slightly more resilient. And as we've been saying, Pharma has been seeing a little bit of buying interest at lower levels. Ajit, any strategy when it comes to pharma majors?
So after almost 1.5 years of consolidation, which has recently ended, I feel that yes, due to market volatility and correction, we may see a pause or breather. And of course, the earning specific reaction would be there, like what we have seen in Lupin, means after the earning, the stock is reeling under pressure. But broadly, we are positive on the sector, and we believe that stock like Sun Pharma, Oro Pharma, Glenmark, Biocon, these are some of the names, and from the hospital sectors, Apollo, NH, all these counters can be considered for accumulation on dips amid this market correction.
There are a few pockets where there is a relative strength, and I'm reading off the list. Maybe Biocon is doing okay. Let's pull that up. Brainbees is okay. It's up about 3% odd at this point. From the metal pack, you have a few counters. Hind Zinc is okay. It's up about 2% or so. Godrej Consumer, I think, reacting positively. It's up as much as 2% in trade. But it's broadly a negative screen. It is a few and far between the gainers that you would see. And pull up the advanced decline ratio, because you're seeing 9 declines for every 1 gainer at by far the widest point of the day so far. And Hiral, take a look at that. It's at the widest point of the day.
Yeah, right. 2,300 declines and advances. So I think this is what is telling you that the investors really do not have confidence in the markets right now, and that is what the key is, as Mihir was also pointing out in terms of what's happening in terms of your FIDIs, where your FIs have gone down in terms of positioning versus your DIs, and this is the first time it's happening in 2 decades. So there is a problem of confidence in the markets right now. People don't know in which way to go and what sectors to bet on, because the rotation that you're seeing in terms of sectors is the key over here. Mr. Chokalingam, I know Alex just asked you in terms of where you're seeing opportunities, but anything that you would want to add when it comes to IT as well as a sector, because that's where there is a lot of pressure building up. And if you have to look at individual stocks as well, there was little confidence about mid-cap IT, but I think that's also being erased now.
Yeah. So on IT sector, I am negative. I have been saying consistently that wealth creation opportunity is over, but still, tactically in the large cap space, Infosys possibly can give anywhere 15-20% return. It's a beaten down a lot. It's taken a lot of initiatives in integrating AI. In the small and mid cap, I like most Cyient. It's down more than 55% in the last 2.5 years, and it has started a 100% subsidiary to run semiconductor business, and it has invested already hundreds of crores in it. And why I like is that in terms of relative valuation, it is the cheapest among most companies. It is trading at enterprise value to annual IT revenue at 1.1 time. A lot of acquisition in the last 10 years happened at around 3 times. Yes, even if you assume that it would be scaled down, the acquisition values, I believe any quality small mid-cap IT company deserves at least 2 times EV to annual IT revenue. So from that perspective also, I like Cyient most.
All right. It's had a rough time of it though. On that note, Mr. Choklingam as well as Ajit Mishra, thanks so much for taking the time and for speaking to us. Rough day for the equity markets as we're closing shop today. Remember, it's expiry. We're ending off the low point of the day, but still 400 points off. Yeah. Knocked off the Nifty 50. The Bank Nifty under pressure, down about 1.5%. IT as a pack is the worst performer. So pull up the heat map for the Nifty 50 and you'll see what I'm talking about, because you have several stocks at the bottom end of the spectrum. All of these stocks trading with cuts of over 3%. In fact, you start from here and all of these stocks beyond HDFC Life all the way to Tech Mahindra seeing cuts of over 3%. In fact, cuts of 4% for HCL Tech, Adani Ports, Shriram Finance, which has a significant beta and has proven to be very volatile. Just 3 stocks in the green. SBI, yes, okay, it's gaining about 0.25%, but this is on the back of the big slide that it has taken in the run-up to today.
Absolutely. And in fact, if you see broader markets, the cuts have deepened further, and that's the concerning area right now. If you have to look at the mid-cap and the small-cap index, let's just pull up the intraday charts. There you go, near the day's lowest levels, almost a 2.4% downtick there, and the small-cap 2.8%. There is a mild recovery from the day's lowest levels, but nothing that you can actually ignore over here. Let's just pull up NSE 500 components as well, and that will tell you in terms of what's happening there. BSE 500 is what you have, but Ratnamani Metals, Sonata Software, JSW Energy, Embassy, UPL, across sectors you're seeing that kind of pressure. A couple of pharma names that have held on. You have metal counters which have held on, and Oil India ONGC for obvious reasons when you talk about the royalty. But clearly, a sea of red is what I would want to describe today's moment. And the pressure that we are seeing in terms of closing as well. Let's just pull up Nifty 50 once again to see where we are ending at this point, because that will tell you tomorrow's opening cues as well. If we can just quickly have Nifty 50 on the screens right now as we speak. There you go, 23,420. Now we've ended above the 23,400 mark, which is a slight positive. But if any break below this is going to be interesting tomorrow.
Hiral, point well made. The only point that I'll make with regard to the broader markets is this. You've seen significant gains in the month of April, and in fact for a large part of the month of May as well. We're on the 12th of May. You've seen gains for the broader market. So building on that 17% gain in the month of April for the small cap index, about 13% for the mid cap index, and then a further 4 or 5% or thereabouts for the small cap index.
Look at the month so far. Here,
right? So it's come off quite substantially, but it's profit taking more than anything else. It's a recognition based on what Prime Minister Narendra Modi has described of a situation that needs to be resolved possibly by tightening the belt. Austerity measures are required.
With the austerity measures, if the measures come into place, then probably you'll see a COVID-like situation. That's anyone's guess. But, the concern over here is what happens next. Completely out of time. With that, it's a wrap on this edition of India Market Close from Alex, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned. You have Market Express next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open.
Hello and welcome. You're watching Market Express and I'm your host Gargi Shetty. Let's get straight into the show. To start up, bearish sentiment continued on D Street for the fourth session in a row as profit booking grappled benchmarks. Nifty saw its longest losing streak since January 9th today, ending below 23,500, while Sensex also crashed near 1,500 points. Broader markets too extended the decline in trade today. Sectorally also, it was a broad-based sell-off with the IT pack leading the losses, followed by the realty sector. There was a sharp sell-off in IT stocks on the AI sentiment, while real estate stocks dragged on the PM's work-from-home push sentiment. The rupee hit a record low of rupees 95.74 against the US dollar in trade today as market sentiments remained uncertain over US and Iran tensions after President Donald Trump said that the ceasefire was on life support. Rupee opened at the rupees 95.57 against the US dollar and then fell further to an all-time low of rupees 95.74. Now, the petroleum minister moves to calm fears around fuel supply and possible restrictions. Hardeep Singh Puri says there are no shortages anywhere, with refineries operating strongly and comfortable inventories of crude, gas and cooking fuel in place. He rules out any lockdown but echoes the Prime Minister's call for mindful consumption. At the same time, he flags mounting losses at oil marketing companies, saying they are absorbing the pain to protect consumers and that the situation remains a concern. Prime Minister Narendra Modi calls for temporary precautions. He appeals to government and private offices to encourage work from home and suggests that online classes be considered for some time. The Prime Minister stresses the need for caution and responsible behavior while the government continues to monitor energy supply closely. India's chief economic advisor V. Ananta Nageshwaran warns that the sharp rise in crude prices is not a short-term shock. He says the ongoing Middle East crisis is turning into a serious balance of payment stress test for India. While fiscal discipline provides a strong base, Nageshwaran flags the need to rethink strategies as global risks intensify. Energy stocks move into focus as the government announces a cut in crude oil royalty rates. The change applies to onshore fields and older production sharing contracts, lowering the cost burden for producers. The move is seen as supportive for upstream companies, with ONGC, Oil India and Vedanta Oil Gas expected to be among the key beneficiaries. Brokerage sentiment stays firmly positive on ONGC. CLSA reiterates a high conviction outperform view, saying the royalty cut is a major positive and eases concerns around any windfall tax. UBS also maintains a buy stance, calling recent policy reforms supportive for the sector. Both brokerages see improved profitability and stronger earnings visibility for ONGC going ahead. Nifty IT stays under pressure as OpenAI's big push into enterprise AI rattles the services space. OpenAI now moves beyond tools to hands-on AI deployment, embedding engineers directly inside companies. The shift raises fears that traditional outsourcing models could lose relevance, heating sentiment across IT stocks as investors weigh the risk of disruption from AI-led execution. NASSCOM says India's IT firms are staying operationally resilient amid Middle East tensions. Companies are enabling remote and hybrid work while cutting non-essential energy use across campuses. The industry body says it is closely monitoring the situation, engaging with the government, and will ensure a coordinated and responsible response as conditions evolve. Syrma SGS delivers a strong set of fourth quarter numbers with solid growth across business, revenue and profit rise, sharply helped by broad-based demand from consumer, auto and industrial segments. Margins improve and the balance sheet stays strong with healthy cash levels. The company also decides to call off its proposed K Solar acquisition, citing unmet conditions while maintaining focus on core growth and returns. Heritage Foods reports a mixed fourth quarter as tight milk supplies and high input costs weigh on profitability. Revenue grows steadily on strong consumer demand and better pricing, led by value-added products. However, one of the sharpest raw milk inflation cycles hit margins and profits. The company continues to see strong traction in e-commerce and declares a final dividend of $250 per share, signaling confidence in its business. Pradeep Phosphates reports a steady fourth quarter with healthy growth in volumes and revenues. Performance is driven by strong demand for value-added fertilizers, especially NPK grades. Now, operating profit improves within marginal rise in margins, even as net profits see some pressure. Overall, the company closes the year with solid volume momentum and improving product mix. GR Infra reports a weak fourth quarter as higher construction costs take a toll on profitability. Revenue grows modestly, but a sharp rise in expenses drags margins and profits lower. Despite near-time pressure, the company's order book remains strong, providing good visibility for future execution. And JSW Energy posts a weak quarter as core profits disappoint despite one-time income support. Earnings get a temporary boost from a court-led wind incentive, but higher interest costs and rising debt drag performance. The company sees stronger renewable generation even as short-term power sales rise. JSW Energy stays committed to its long-term capacity target while slowing fresh renewable additions next year. And one MobiKwik has reported a mixed fourth quarter with profit rising for a second straight quarter. Revenue has stayed flat, but operating performance improves sharply with better margins. The payments business sees strong momentum led by a surge in UPI transactions and steady growth in lending products. Looking ahead, MobiKwik targets sharp scale-up in merchant payments and UPI, backed by new growth engines and recent regulatory approvals. Hindustan Zinc ties up with Group Nirmal to set up a new zinc wire manufacturing unit in Rajasthan. The move strengthens its downstream portfolio and boosts value-added offerings. The company says the facility will support demand from infrastructure and industrial sectors. Sandur Manganese says the fourth quarter is among its stronger performances with early signs of recovery across the steel and manufacturing space. The company sees demand improving and prices rebounding towards the end of the quarter. It also crosses the 5,000 crore revenue mark for the first time. While speaking to NDTV Profit, the management reiterates its strategy of moving up in the value chain to finished products. Orient Pro Solutions posts a weak fourth quarter as cost pressures drag margins lower. Revenue slips sequentially, but profit gets support from a spike in other income. The company secures its largest ever data center deal, offering visibility ahead. For the full year, Orient Pro delivers strong growth across banking, fintech and technology innovation, entering FY27 with a healthy order book, even as it flags higher investments and execution risks. ABB India reports a weak first quarter as margins come under sharp pressure. Revenue grows modestly, but higher commodity costs, currency impact and weak project execution hurt operating profits. Earnings get a one-time boost from the sale of robotics business, masking the core pressures. Even so, order inflows remain strong, led by data centers and railways, keeping long-term demand visibility intact. Satin Credit Care reports a strong fourth quarter with broad improvements across growth margins and asset quality. Core income rises sharply, helped by healthy disbursements and better spreads. Profit jumps on the back of improving returns, while balance sheet quality strengthens further. Bharat Forge has signed a long-term contract with Embraer, marking a key step in its aerospace journey. The deal covers the manufacturing of landing forgings and strengthens Bharat Forge's global aerospace footprint. HG Infra wins a large round project order from Welspun Enterprises, nearly 4,000 crore rupees for a project in Maharashtra. The win boosts HG Infra's order book and strengthens visibility in the roads and infrastructure segment. Shares of Grow have fallen sharply in early trade amid reports of a large block deal. The transaction size is now pegged at close to 5,700 crore rupees, higher than earlier indicated. The potential supply overhang weighs on investor sentiment and puts pressure on the shares. India steps up an austerity push as pressure builds on foreign exchange reserves. Forex holdings have fallen sharply since February, tracking higher crude prices and a weaker rupee. The Middle East crisis emerged as a stress test for external accounts, forcing policymakers to focus on cutting imports and conserving dollars. With limited room for intervention, the focus shifts to managing the deficit and stabilizing the rupee. A lot of volume buzzers in focus today. TTK Prestige jumps over 9% with trading volume surging to nearly 150 times the average. Lloyd's Engineering hits a 9-month intraday high on volumes sharply above normal levels. On the flip side, Birlasoft slips over 5% as heavy volumes point to strong selling pressure. Next, on to some business news. South Korea floats a bold idea of sharing artificial intelligence gains directly with citizens. A top policymaker says profits and tax income from the AI boom should be returned to the people in a structured way. Now, the call comes even as pressure builds on Samsung's chip business, where unions threaten a strike over profit sharing. On to some national news now. The National Testing Agency cancels the NEE undergraduate exam after allegations of paper leaks and serious irregularities. The decision comes amid nationwide outrage and student protests, including demonstrations in the national capital. NTA has said that the exam cannot stand after inputs from central agencies and law enforcement findings will now be held again on fresh dates. Authorities say the move is aimed at restoring fairness and trust in the examination process. Himanta Biswa Sarma is now sworn in as the Chief Minister of Assam for his second consecutive term. The ceremony follows a record electoral mandate, giving the BJP a decisive win in the state. And Tamil Nadu Chief Minister Joseph Vijay announces the shutdown of hundreds of government-run liquor shops across the state. Over 700 TASMAC outlets located near schools, bus stands and religious places are ordered to close. Now, the move aims to curb easy access to alcohol and address public safety concerns, marking a significant policy shift under the new government. Now on to some international news. US President Donald Trump has sharply criticized the ceasefire proposal, calling it extremely weak. He says the deal is barely holding together and compares it to a patient on life support with almost no chance of survival. Trump adds that the proposal is not worth serious consideration and signals little confidence in the ceasefire holding. President Donald Trump has also said that stopping Iran from getting a nuclear weapon remains his core position. He insists that there is no pressure on the United States and signals confidence in achieving a decisive outcome. Trump dismisses suggestions of compromise, saying the plan is clear and victory is inevitable. Prime Minister Narendra Modi is set to embark on a 5-nation foreign tour starting mid-May. The visit spans the UAE, the Netherlands, Sweden, Norway, and Italy, with a focus on strengthening trade, energy ties, technology cooperation, and strategic partnerships. The trip comes amid a time of global uncertainty and aims to deepen India's engagement with Europe and the Gulf region. US President Donald Trump has said the plan to discuss American arms sales to Taiwan during his upcoming visit to China and meeting with Chinese President Xi Jinping. Speaking to reporters, Trump said the issue would be part of broader talks aimed at easing tensions between Washington and Beijing. The comments come at a sensitive time in US-China relations, with Taiwan continuing to remain one of the biggest geopolitical flashpoints between the two powers. Now, Beijing has repeatedly opposed US military support to Taiwan, viewing the island as part of its territory, while Washington maintains its long-standing policy of supplying defensive weapons to Taipei. And a sitting mayor in California has pleaded guilty to acting as a secret agent for China, sending shockwaves through US politics. Prosecutors say the official covertly worked to advance Beijing's interests while holding public office. The case raises serious national security concerns amid heightened security of Chinese influence operations in the United States. And the United States has imposed fresh sanctions on individuals and companies linked to Iran's oil trade with China. Washington says the network helped facilitate the sale and shipment of Iranian crude, funneling funds back to Tehran. The move is aimed at tightening pressure on Iran's energy revenues and curbing inflows that support its military activities. The action comes amid heightened geopolitical tensions and scrutiny of China's links with Iranian oil exports. Tensions escalate in Ukraine as the capital Kyiv comes under a fresh drone attack. Authorities are urging residents to stay inside shelter as air defense systems remain active over the city. Explosions are reported across parts of Kyiv, underscoring the intensifying security risks as the conflict continues with no sign of easing. And on to some entertainment news now. Ritesh Deshmukh's historical drama Raja Shivaji is inching closer to the ₹100 crore mark at the Indian box office, emerging as one of the biggest successes in Marathi cinema this year. The film has seen strong audience traction driven by positive word of mouth, large-scale visuals, and interest around the story of Chhatrapati Shivaji Maharaj. Now, the industry trackers say this film's sustained theatrical run has helped it maintain momentum even weeks after its release. And viewers, earlier today we spoke to Timothy, co-head Asia Macro Research and Chief Asia Pacific Equity Strategist at Goldman Sachs, about India market sentiment and domestic flows offset. Let's listen in.
Well, in May 2026, the headwinds for India abound. We're more or less midway through the earnings season. There's quite a bit that still has to pan out, but there are question marks about how India is dealing with the macro challenges, particularly the price of oil. the other question, of course, is how foreign institutions are looking at India and when they will change their perspective and start investing again, or at least stop selling India. I'm joined today by Timothy Moore, co-head of Asia Macro Research and Chief Asia Pacific Equity Strategist at Goldman Sachs. And quite a few questions that I have for you, Tim. First of all, though, thanks so much for taking the time and for speaking to us on NDTV Profit. Let me ask you whether your view has changed on India at all from when, as I understand it, you went, you were positive at the end of 2025. Has that changed at all?
Well, first of all, thanks very much for having me on. The quick answer to your question is yes. I say so, it's sort of a reluctant yes, because it's not as though we were wanting to become more conservative in our view on India. But as the famous expression goes, when the facts change, you have to change your mind. And the fact is that with the outbreak of the Iran war and the spike in energy supply costs, that is something which impacts India to a greater and more negative degree than some other parts of the region. So when we upgraded our view in India at the end of 2025, as you correctly said, it was really that India had gone through a period of earnings downgrades and economic slowdown, which we thought it was coming out of, and in anticipation of recovery and profit momentum and valuations that were high, but we felt justifiable, we thought that the risk reward in India again looked better. But now with this new information coming out in terms of the energy shock, we've taken our earnings numbers down for this year for the MSCI India index on a calendar basis from 16% to 8%, and consensus is still at 16%. So our concern is that as we look ahead in the next 1 to 2 quarters, we're likely to see the consensus come down to our numbers, and you have a market that's still trading at 20 times earnings with some earnings downgrades ahead of us over the next, call it maybe 3 to 6 months. That's typically not an environment where the market performs as well as some other ones, particularly North Asia, where, as I'm sure many of your viewers know, Korea, for example, and Taiwan are enjoying exceptionally strong profit environments because of the semiconductor cycle, and their stock markets are doing exceedingly well, with Korea so far year to date up nearly 100%. So against that backdrop, the relative performance of India looks less favorable, hence our view for a more conservative allocation recommendation.
I'll circle back to the earnings picture, but you mentioned the MSCI. I'm curious what you think about the weightage as things stand right now, because part of what you're saying, Tim, seemingly, despite the argument on multiples, is already priced in on a relative basis. Because if you look at India as a whole, and I don't know if that's the case today, but just a short while back, the weightage as a whole on the MSCI was lower than TSMC. That's one company. And so therefore, would you say that on balance, the bottom is kind of captured? And if we may not rise too much from this point, because incrementally it may not make too much sense, but in a way that bottom is protected?
I think that's a fair observation. So maybe I can just disaggregate that a little bit. So we see a lot of ebbing, sort of toing and fro in terms of the relative weighting of markets, whether it's in the broader emerging market index or even, in fact, in terms of global market cap rankings. In fact, one of the points we just made, which is a positive point for Asia as a whole, is that Asian markets are now 6 of the top 7 markets globally. Of course, the U.S. is by far the leader with a 77 trillion exchange level market cap, but markets number 2 to 7 are now all Asian. And that's because Korea and Taiwan have just recently surpassed, in market cap terms, both the UK and Canada, and now sit just behind India in terms of the overall exchange market cap. Now, more directly to your question, the North Asian markets have rallied very, very strongly, having delivered very strong profits. But we have to remember that, particularly in Korea's case, that's coming off a very, very suppressed valuation backdrop, where Korea started this year, 8 to 9 times forward earnings, whereas India is, as we know, is sort of 2021. So actually, because of the very strong profit delivery in Korea, the forward multiple is actually compressed and is currently about 7 times earnings, just because the earnings revisions have been so significant.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company. A
Sharp sell-off in market today as sentiment continues to be hampered by possible energy shortage. Nifty ends lower for the fourth straight day, with Nifty ending below 23,400 mark, making it the longest losing streak since January 9. Major tech stocks under sharp selling pressure. IT stocks remain biggest losers on the index, with Infosys and TCS hitting fresh 52-week lows amid rising geopolitical tensions and broader market weakness. Rupee remains under pressure. Rupee ends at a fresh record, closing lower after slipping over 100 paise in the last two sessions. Rupee ends at 95 rupees 63 paise against the dollar. Oil prices extend gains as Trump's remarks diminish the hopes for US-Iran peace deal. Brent crude hovers over $106 a barrel. Meanwhile, government cuts the royalty burden on crude oil, natural gas in a push for domestic production. Amid ongoing supply disruptions, Petroleum Minister Hardeep Singh Puri rules out lockdown and assures supply. He said that India has 60 days of petrol, LNG, and 45 days of LPG reserves. Real estate players say Prime Minister Narendra Modi's push to revive work from home is unlikely to have an immediate impact, but risks could emerge over the next 3 to 6 months if disruptions persist. NEET UG exam cancelled after paper leaks. NEET aspirants storm streets of Delhi, stage massive protest. Centre transfers case to CBI. Rajasthan police sources tell NDTV that leak happened from Nasik in Maharashtra. Vijay's first big move as Tamil Nadu Chief Minister. Vijay orders closure of liquor shops around places of worships, schools and bus stops. Over 700 Tasmac liquor shops are to be shut. US President Donald Trump to meet with Xi Jinping in China tomorrow. Taiwan tariffs and the Strait of Hormuz are on the meeting's agenda for Beijing. But will the US President be forced to ask for help in ending this war with Iran? Hello and welcome. You've tuned into Profit 360. I'm Nisha Poddar. Let's take you through all the top developments of the day that you must know about. Starting with the markets. Well, markets ended deep in the red with the Nifty slipping below 23,400 level and the Sensex falling nearly 2% amid a broad-based sell-off led by IT stocks. Now, the Nifty has declined for the fourth straight session, while the broader markets underperformed sharply as rising crude prices as well as the geopolitical tensions really dented the sentiment. Parth, my colleague, is right here to give you the complete market action for the day. Parth.
Nifty has fallen over 1.8% today with a closing below 23,400. This is the fourth consecutive red closing for Nifty, and today was a huge selling day recorded with 47 out of 50 stocks ending in red and 38 out of 50 stocks ending more than 1% lower. Shriram Finance and Tech Mahindra were the top losers in Nifty, both of which were down over